Yeah, just follow the conversation like normal.
Okay.
Well, let's talk about real quick, yeah, just a two-shot or a three-shot, no zooming in, no zooming out, just pan left and right.
Okay.
Um,
But I mean, if we want to go from this to a three-shot, I have to zoom in.
I would leave it zoomed, I wouldn't mess with the zoom on it.
Really?
Yeah, just because it's infrared, you gotta use your remote and hook
Right.
up with it,
Yeah. So, I mean, can I even get like a two-shot zoom?
Yeah, sure, I mean, you can zoom in tighter if you want.
Oh,
This is fast zoom, tight wide, slow zoom, tight wide, and you do have to do line of sight.
okay. So you're saying once I zoom into that, just leave it? Like, leave it?
Yeah, leave it at a two-shot, a three-shot, and just pan left and right.
Okay.
And then anyone that starts playing copyrighted music,
Yeah.
monitor is webcast feed. Kill the audio to the webcast.
Okay, and that's a post fader, so.
Hope so.
Yeah.
Or maybe just, need,
So maybe, I mean, with panels this size, they don't really have time to put their graphics and music and stuff up there anyway.
right, it's be like 2 minutes of talking from each person.
Yeah.
And then, if the room is completely full, at the end of the session, zoom out so you can see all the people.
Oh, just for the crowd?
Yeah, that's just one thing. Oh, and one thing, don't leave it wide, because Victor watches, and if you leave it wide, I get a text right away, saying, they're not doing anything, why did I get paid a guy to run a camera in there,
If I leave it wide during the thing?
Yeah, I mean, like, if you leave it wide on just the whole head table, that pisses them off.
So basically, I'm gonna go do a three-shot right now,
Mm-hmm.
and if they don't want zooming, then I'll just pan. Like this.
Yeah, that's perfect. Yeah, make sure you get the name tag in, and that's perfect. Get a little headroom.
All right.
Yep.
All right, and, okay, so let's do that. So, do they not even, like, when the panel first sits down, do they not even want an establishing shot with the whole thing?
No.
Okay, so I'll just throw in the moderator.
Yep, exactly, yeah.
All right, and,
And then go to logo in between sessions,
right.
because that needs audio too.
Got it. Okay, so I should go back to that now. Do we want to test to see if that's post data? Might be better.
No, it's gotta be post this fader, that's for sure.
But I mean, like, so if these
Yeah,
are.
I'm pretty sure this 2 is a pre-fade, because there's actually built-in reverb and delay and stuff.
Okay.
But I think it's,
Well, this gives you like a little bounce, right?
yeah, it's just,
Right, so now.
oh, there you go. And this one.
So when it's actually up, it is pretty faded up.
Yeah, these are all pre-faded, but it's post here. I'm just gonna keep coffee. Oh, there's coffee right there by my hands.
All right, so, maybe those 2 extra names for those statements, write that down as well. Yeah, I looked yesterday just to make sure,
Mhm.
and it's 6 plus monitor,
Hmm.
and that's psi and Brody extra.
Wow.
If somebody does have, visuals, do I need to move that light, I guess?
Oh, yeah, that's not gonna work for projection. Actually,
Yeah, so I had a conversation with Clayton this morning, so he's gonna put more stuff together, so. Well, yes. So there's things that we can add in, like, oh, by the way, how many PBS stations do you have in coverage? So like in Denver, he's got 2, in DC, I've got 3. So each one of those has its own 6 megahertz bandwidth. So that basically gives you that much capacity, but that means you could have multiple carriers. So I said, we should actually have a sit-down with PBS and a couple of the carriers to discuss this. Right. Mhm. Right, yeah. It was basically, but it's with Oliver. Oliver will be the one, and he's not back right now, so it'll be a couple of days probably. Hmm. Yeah, because I mean, you know, right, right, and it's not one that you want to talk at a lower level. This is a partnership, so. Right. What we need to think about is more about what is it that we want out of this partnership beyond selling some hardware and software. Do you, right. Yeah, I mean, you want to be the partner to the PBS channels and helping them convert to ATSC 3.0, right? And oh, by the way, it's funded through the carrier's funding of their participation, because you're going to get into what's nonprofit and what's profit, right? So there's some mechanics that have to be dealt with relative to how the partnership works without compromising the constraints that PBS channels have, right? Yeah, and it could be part of our own, you know, investments that we do, right, in public broadcasting and such like that. I mean, now the question, how does it work in Canada? Do they have PBS channels? And I suspect it's still in the 6 megahertz range. Okay. Yeah. And the reason Michael's saying that this is protected is because it's also the national security broadcast, right? So it can't be taken away, right? So it's a locked-in 6 megahertz that these guys have. So the FCC can't come through and say, no, we're going to take part of that away from you. That was right. That's what I meant. Yeah. Right. Although he's been talking about taking some of the low bandwidth megahertz away. And he's not the 2.5 that our friends at Sprint have. You're damn right, yes. Because that 2.5 gigahertz that our friends at Sprint have is worth a hell of a lot of money right now. Yeah. So if the Justice Department comes in and says, no, you've got just similar to what happened when they instituted the issues that they had earlier, right? Okay, could they take the 2.5 away? That would change the deal drastically, I would think. Well, I mean, Justice is still saying that they're not going to support the merger. also talk to her about, look, instead of trying to fight internally, how about dealing with the enterprise customers and the need that they're gonna have for private 5G? Because Verizon will never be able to deploy, they don't have the field force any longer to do that kind of deployment. So they're gonna have to depend upon someone like an IBM to deal with the field force and go out and actually, you know, deal with this. Yeah. Okay. Yep, yep. And like I said, with Michael, he's going to
see, it's almost like saying, would you be willing, I mean, if people are gonna donate, they will donate. If they're not gonna donate, they're not gonna donate. By offering them a dollar, by offering them a dollar kickback in crypto, I'm not sure if that changes anything. For example, if you say, I will give you, if you give me a $10 donation, I'll give you a kickback of £1 British pound.
Get back into the
And
ring.
if you want it, you get a British pound back.
It's time, so been having fun doing that. So I kind of look at everything.
I guess you could do that, but people who need pound would just buy $10 worth of pounds, which is a lot more than £1, right? And if they're gonna donate, they're gonna donate. Having that kickback doesn't, I don't quite get it. It's, I mean, if it's, got a logo tote bag, maybe you get an Avenger tote bag, yeah, I mean, people would rather have that than to have a cryptocurrency of some sort returned to them, right? I mean, you put it on an Avengers flash drive.
I love the concept. So it's like I kind of there's part of me that's like, you want to do it together? You want to just buy you and just do it together? And so, let's talk first and like have a conversation. But Randall, always talking about Randall. I don't know why. My grandpa does Randall. So. People change it. Well, I want to talk to
Thank
you
for joining us for the venture capital panel.
I don't think that works.
How many companies in the room are raising money?
I think.
Okay. Thank you. Hey, John, how are you? Good to see you. Mariana Danilovic, I'm a managing director of Transform Group, which is Mike Turpin's a company that has many different interesting assets. I also get to manage something called Bid Angels, which is a global network of events, angel events, and crypto events, investing in blockchain companies globally. We have about 6 chapters launched already, and we're looking to launch about 30 by the end of the year. And the most interesting thing about that network is that it was originally online, and few hundred of the top tier crypto investors and early entrants on the planet are in it. So it's quite a privilege to work with all of them, and certainly with Mike. So we have a panel of people who have all been venture capitalists, with the exception of Max. That's why he's late. He's going to pitch to them today. No, I'm just kidding. Hi, Max. Everyone on this panel is actually a member of a venture capital, or is part of it, is a general partner in a venture capital fund, and they have some additional assets to that they're working with. So Randall Crowder's been in the venture capital business for about a decade. He's invested in Funware, which is also has a token that's doing quite well, and has many other assets. And I would say, if I started going through their backgrounds on the panel, we won't have any time for them to speak. So I'll let Randall start.
Oh yeah, no. So yeah, I hate free time, and I collect jobs I'm probably not qualified for. So, but it's been about 10 years as a VC, mostly in health tech and blockchain, and then basically left the dark side to get back in the ring as an operator. So Funware is an Austin-based company, been around for about 10 years. We built the first NFL app, the first NASCAR app. We built all of Fox's media apps, so any large kind of enterprise-level mobile ecosystems. We're kind of pretty much one of the leaders in that. We also one of the leaders in indoor location-based tech. And so right now we've kind of pivoted into a software as a service business where we're licensing a lot of our software to other people that are launching their own kind of mobile experiences. And so with that, blockchain became an interesting asset to be able to enable brands to introduce crypto to their kind of consumers and to their ecosystems without having to go through the rigmarole of dealing with the SEC and doing a lot of other things. So kind of cracking the code on bringing consumer-facing mobile applications, marrying that with blockchain or digital assets, and then creating more customer stickiness. So today we generate about 5 terabytes of data every single day. We see about 1 billion active devices on our platform every month, and we're using that scale to give brands a different way to connect with consumers and give Facebook and Google a run for their money. So we'll see what happens.
We were rooting for you. Krish Lauderkar is kind of like me, a recovering investment banker and a VC, and still a VC, with a seed fund, but also in the digital media and entertainment space. Running 2 companies at the moment, one on the purely digital media entertainment side, and one of my favorite companies I've seen in the blockchain to date, you hear it here first, called Superworld, which is a way to tokenize Second Life. and
My
more.
favorite, too.
Yeah, I love that.
He's in Austin. I had to
He
come
is.
all the way out here to meet
This
him.
is, we're launching Austin, Texas chapter for Bid Angels. So a little Austin, Texas promotion here. Go ahead, Rish.
Yeah, thanks for having me, and it's a pleasure to be here, and looking forward to meeting everyone. My background, as was stated, is management consulting, investment banking on Wall Street in New York, doing mergers and acquisitions, and then venture capital in New York across biotech and tech. I launched a venture capital fund in Europe and Ukraine about 8 years ago, investing in early stage technology companies. I was early at TopTal. Top Talent. It's an Andreessen Horowitz company that we scaled. It's providing elite engineering resources to companies around the world, and now elite talent, engineering business people and designers, and soon to be other categories. And about 3 years ago, I started Rogue Initiative Studios. What we do is create new original content that goes across feature film, television, gaming, virtual reality, all the way to amusement park rides and toys. My co-founder produced Call of Duty, and my other partner is Michael Bay, the action director, along with Linda Obst, and my other co-founder, Kathy Twig, was at Sony and MMTV and DreamWorks as well. Currently, I'm working also on Superworld, and Superworld's an augmented reality platform. It's all around us right now. We're in it. You have your world, I have my world, I can see your world, you can see mine. Brands can have worlds, and then you can buy and sell the worlds. You can buy this place or downtown LA or downtown Moscow or New York, anywhere you want. And when you own the land, you get a share of the commerce. And then we've opened up the digital land so other apps can build on top of it. So it's all on top of us. So it's second life on top of the real world, or Ready Player One on top of the real world. Or another way to think about it, it's Foursquare meets Pokemon Go meets Monopoly.
And I feel like I want to live in that world. Michael, and I live somewhat in that world with Michael Turpin, who's, I think, founded every blockchain company on the planet that's still in existence and thriving and has a chance of being a Fortune 500.
Didn't found them, but worked with about a third of the coin market cap. So I, from the investment side, my first company was the Turpin Group in the 1990s. We worked with a lot of the dot-coms. We were agency of record of America Online, Greenhouse, launched The Motley Fool, Earthlink, a few other places, and that's when I got into angel investing. Had a cover story in Inc. on me about how entrepreneurs can make money investing in companies that they work with, and sort of got the venture capital model of having 9/10 of them being losers and still making money because you got one that did a 50x. And in my case, the 50x was Zoom.com, which went public and got up to a $7 billion market cap at one point. And we had a few other 5x's and 2x's, and the rest of them just died horrible deaths. But that's a model if you can really find that one big one that venture capital lives by, and that really is from angel investors all the way to Sequoia Capital. I sold that firm into a roll-up in late 1999. At the same time, I spun off something that I had incubated in the agency in Marina Del Rey called MarketWire. Actually, it was called InternetWire at the time. It was the first internet-based press release distribution company. I raised angel money from one of my clients, who the one who had the 50x, he had some spare cash sitting around. And then we ended up scaling with our A round from Sequoia Capital and Hummer Winblad. Did a deal with an investment from NASDAQ when the dot-coms crashed, and our competitors, Peer Newswire and BusinessWire, were calling us the Newswire of dead dot-coms. And meanwhile, our biggest clients were Cisco and Merck and not dot-coms. So when we became MarketWire and had NASDAQ as an investor, all that criticism went away. We sold that company in 2006 for $35 million. It got sold then again for $100 million a year later. NASDAQ then bought it because they gave us a lowball offer the first time around for $200 million, and they just sold it last year to Apollo for $335 million. So it keeps bouncing around and growing. Unfortunately, I only got the first check. So. But usually venture capital does not do creative deals where you get to keep part of the company and things like that. So as an entrepreneur, you have to sort of think about who and what type of capital you want to raise, and and how long you want to bootstrap, which is usually the longer the better. Currently, in addition to my work at Transform and through Bid Angels, which is not a fund, although we did have a Bid Angels fund that was the first digital currency fund in early 2014. Myself and David Johnston, who's now with a family office called YCG, and he's the chairman of Factum and a very active angel investor. We started the first digital currency fund. We raised $6 million, all of it in Bitcoin and Counterparty and Mastercoin, and we invested $1 million in Ethereum at 30 cents, so it did pretty well. And also in MadeSafe and Factum and Storage and some of the other really early, moonshot tokens. And I live in Puerto Rico, since there's no capital gains taxes there. I was the first person in the crypto community to move there. And in addition to my work at Transform, which is 99% of my time, I spend another more than 1% of my time as a general partner at Alphabet Fund, which is a digital currency hedge fund, $400 million under management, based out of London.
So we continue on. Thank you, Mike. To Max, who is the co-founder and CEO of Cent. And the most interesting thing about Max Brody is when I met him and he told me the pitch about this company, it was one of the fastest grasping things that I've ever heard. It's like, oh, I get that. That needs to be done. So it's really reimagining the influencer space and how the economy, shared economy experience in that space should look like. And it wasn't really obvious that this should be done this way, but when you explained it, now it's like the only way I think about it. So Max, you want to tell us about it?
Thanks. Yeah, so I run a company called Cent. We've largely, right now we're one of the most used crypto content networks in the world, and largely that's because we've essentially pioneered a fundamentally new way to monetize content, or really anything digital. Essentially what it is people can post things like they would elsewhere, but rather than paying for something or hitting a paywall or subscribing in some monthly fee, they can essentially bet on its popularity. So how that works is they seed it with money. That's what we call the process. So you see something like a cool song or a cool video, you can seed it with, say, $5. And what happens is that $5 gets distributed to the creator, but also to everyone who came before you that seeded the same content. So you're sort of betting on the fact that people are going to come after you and seed after you, and you'll make a financial profit by investing in creators and creations that you believe in. And we think this is sort of a new category. It seems to work really well. Users are already making hundreds of dollars per month just from, some users have made over $1,000 per month just on speculating on content. And they're making the money. The key thing is that they're making the money in a way that is in no way work. It's sort of just experiencing content and betting on your taste-making abilities, which we think kind of coincides quite well with where the world's at right now, and how people are leveraging their own perspective against the whole collective content generation of everyone. And so, we're right now we're built on Ethereum, which is a popular blockchain, but we're moving more and more into the mainstream world, and making a lot of moves over the next 12 months to really attempt to be one of the next major networks in the world, alongside Instagram, Twitter, and whatnot.
And we hope you get there, and we like your ways of getting there. So Ben Tsai, last but not the least, is a venture capitalist and also co-founder of the LA Blockchain Lab. LA Blockchain Lab now has entered into an agreement with the city, and they're launching an innovation center with the mayor's office, among many of the accomplishments of the lab. And Ben's going to tell us a little bit more about him and the fund in the lab.
Great, thank you. Yeah, hi, my name is Benjamin Tsai. I'm a co-founder and the CFO of the LA Blockchain Lab. It's a nonprofit organization that's trying to bring academia and government kind of properly into this space. We work with UCLA, USC, UC Irvine, Caltech, which are officially our partners, along with the City of LA, Mayor Garcetti's office. So we've been quite active working with all the different counterparties with conferences and meetings and so forth. Separate from that, I'm also the president and managing partner at Wave Financial. We're a VC firm that is relatively new, but it's a spin-off of an existing VC firm, Wavemaker Partners, who's been around since 2004, $500 million of under management, quite a luminous LP pool. So separate from all of that, just in terms of my background, I come from a finance background. I spent 15 years in finance in Asia, Tokyo, Hong Kong, Singapore. I ran the structured products business for Bank of America Merrill Lynch, and then also ran the commodities desk across Asia. That's it. So looking forward to answering some questions all of you may have.
So coming from such stellar backgrounds, all of you, blue chip, top tier banks, top tier VC funds. Why are you in blockchain space now? I want to just start with that.
I think it's the future. I think that everybody talks about the internet. I think blockchain will be the most transformational thing to touch the global economy since the Medici's commercialized double entry accounting. Internet governing the transfer of information. And I think we're moving away from just calling it blockchain to just digital assets, but the ability to efficiently manage information. For us, we have to do it. It's the right tech at the right time. So we're trying to do engaging brands and consumers at kind of just microtransaction level, and what we do with these loyalty programs for certain mobile ecosystems, we just can't do it with fiat. The transfer fees would kill you. And so this digital asset, this new technology allows us to deliver a certain experience to our consumers for our brands that we couldn't do before. And then just for us, and I also kind of say this a lot of times, the flip side, I think a lot of people thought of blockchain as being this, oh great, it's anonymous, we're going to overthrow the man. I totally disagree. The man's been the man for a long time, and the man will be the man long after blockchain's adopted. But what it allows us to do is so much better. For us and brands, it's actually the opposite. It's not the anonymity, it's the accountability, it's the transparency, it's the verifiability, it's the auditability of all this stuff. It's a game changer. And so you see as we move away from the negative connotation of crypto and even blockchain to just nobody talks about TCP/IP. Nobody calls that a cell phone anymore. It's just a phone. And so what these different technologies will allow us to do once these things kind of cross into mainstream adoption, they're going to change everything.
Yes, Ben?
Yeah, so I'll throw in a story. Hopefully it's not too long. I speak with a lot of finance people who don't care as much about, wealth for the masses and all that great stuff. So they're more caring about efficiency of systems and so forth. And you hear in the news the likes of JP Morgan and all the big financial firms are looking at using blockchain and so forth. And, the answer comes down to it being a lot more efficient. And this is kind of a two-part story I tell to people. I used to work for AllianceBernstein and ran alternative investments there. And they captured a huge market in Taiwan because they went from quarterly dividends to monthly dividends. And it was very painful for them internally because they basically had to do the same process 3 times as often, writing out checks, wiring, and making sure who the investors are in the whole 9 yards. Had to staff up in the back office, new systems develop. It was kind of a pain in the butt. But because they capture market, all their competitors had to come and do the exact same thing just to keep up and not even capturing the market and incur all the costs and all that. So that's one part of the story. And the second part of the story is I was with actually with Jamie Finn, who runs Securitize. They're a securitization platform. They create tokens that represent digital securities. So my question to him was, well, how much does it cost for you to push a dividend down your digital securities? And he gave me a blank look. He didn't know what I was talking about, so I kind of explained it again. And he said, well, let me give you an example. We have somebody on our platform that's a mining company. The ownership of tokens that people have represent, shares in this mining operation, the digital mining operation. So they would basically mine and they would distribute to their holders. I said, great, so how much does it cost for them to do that distribution? He says, well, they mine every day, and at the end of the day, they pay the dividend out. Is that often enough for you? And basically, the cost is near zero. And it's not exactly zero. I mean, I went and looked it up, I think, earlier this week, just kind of for this discussion. The cost of transfer is extremely, extremely low. I was looking at Ethereum, which Securitize is based on. I think it was a difference between maybe 2 to 8 cents. I think 2 cents would get you done really quickly. 8 cents would take a little longer. A little longer was 18 minutes. So, it's really short. And it's a significant impact for the finance world. Right now, you have, stocks paying dividends, maybe, once a quarter, if even that, maybe once every 6 months. And some stocks don't even pay dividend. They have a dividend, they have an X date, they have a record date. They do all of this because there's a long lag of recording who owns what and so forth, and making sure everybody gets the right thing. They would cut a check, print it, mail it out. Somebody would pick up that check and then cash it out. I mean, a lot of that is automated, but there's a pretty long cycle with that, where in the digital world, it's just done. And, if you want to be cheap, it's 18 minutes. So, yeah.
So I'll be a little contrarian and say that most disruptive technologies are initially about overthrowing the man, especially if the man deserves to be overthrown. That starts with Gutenberg. People were not allowed to read unless it was official scribes. The Gutenberg printing press was very controversial. You could be like, put in the stocks for like, reading books. And then you go to the fax machine, which was at its time a revolutionary technology, because that's how the Berlin Wall came down. People were not allowed, you could tap phones, you could go and block airwaves of radio. You could not stop everybody in a country from having access to a phone line without shutting down the entire system. And that's how the Berlin Wall came down. And then with social media, that's how Arab Spring happened. I mean, everybody had Facebook, and they would just start talking about it on Facebook about, we're going to all meet in the square. So the internet in its beginning was very disruptive, and it was very libertarian. The Electronic Freedom Foundation, one of the main mottos was, the internet sees censorship as damage and routes around it. Today you've got, Facebook and Google and Amazon and the stacks that are built on it as mainstream businesses as you can possibly have. Back in the 90s, there was a big effort to try to stop anybody from advertising on the internet. And I had a client in those days that literally got their fax machine like burned up with black paper and I had a reporter tell me, I think it's immoral to advertise on the internet. And they went and talked to my client. And now, obviously that's not mainstream, and the largest advertisers in the world are Google and Facebook. So it's accepted. So most disruptive technologies start out about what you can do to really disrupt systems for those who are out of power. And I think, the real initial purpose of Bitcoin, which is the mother of the blockchain, father and mother and Holy Spirit of the blockchain, was really to make sure that the 2008-09 crisis gave, when it happened again, you had a way of being able to go and move money around the globe in a decentralized fashion, person to person, that could not be stopped by banks. On top of that, if we're looking 20 years in the future, the banks will be using it, and everybody will be using it, and we'll never think of a day that we didn't have it. So I'm in it because it's hugely disruptive. I've been in it since early 2013 and wish I'd been in it 2 or 3 years earlier. The amount of innovation that you can have on digital assets, blockchain and aligned technologies is sort of, this exponential growth over the internet was really, about digital files, and then you had digital communities, and now you have digital assets. And the difference between a digital file and a digital asset is if I take a picture of this room and I put it on Facebook, 2 billion people can see it, I still have the original. You don't want to do that with money. You don't want to do that with a share of stock. And so with a digital asset, Bitcoin proved that it could go without any third party and take something of value and send it anywhere in the world and be provable that I no longer had it and you had it.
And that's a huge innovation in terms of just kind of like a next generation of digital progression, almost like multidimensional in essence, which is why the blockchain space will shift everything that we do, like internet did, but with more factors and dimensions, right? So in terms of the way that the space is being funded right now, what are some of the business models that you're seeing for funding, and what are your thoughts on, ICOs, STOs, equity raises, IEOs, all the different acronyms of fundraising in the blockchain space. You want to talk about it, Krish? Yeah.
Sure. You know, I think there's, on the funding side, a variety of ways that companies in the space are being funded. You know, I think in our case at Superworld, we're, you know, doing an equity raise, but we're also doing a sale of digital assets on our platform. So we're doing AR real estate, which is sold as an ERC721 token, so a digital collectible that you can buy and then reprice. If you're the owner, you get a share of the commerce that happens on the digital land that you buy. And so we're kind of using a you know, a hybrid way of raising capital for the company. Equity raise, traditional venture capital, but as well as you know, on the blockchain, selling these digital tokens, and you know, we can book that as revenue when we sell those. And you know, there's a variety of other ways out there, and I think as the industry evolves, there's going to be, you know, new things that are coming out, like IEOs and other things that are going to be great ways of raising capital from the general public. So.
And just so we have at Cent, we have a similar structure. Well, we're only doing an equity raise, but we thought about at the beginning doing a token. We had created this whole token model, and I'd seen with a lot of founders that I know that, you know, you like the idea of a token, and then you launch it, and then you don't fully realize that you're sort of having to create a whole monetary system, like a whole world, and there's a million ways it can be attacked, and from what I've heard, you sort of need to spend, you know, a huge chunk of company resources just making sure like your treasury is safe, and like all these other things that are completely unrelated to the product. And so we eventually decided to just do it equity, just because that's where the world's at right now. I don't think that's the end state. I think the end state will be some sort of tokenized equity something. But I think right now it's most important, if you're, at least from the position that I'm in of building an app, of focusing on the actual like experience of the app and getting the app into culture rather than trying to recreate money. But to touch on the previous question, I definitely think I'm with Michael in that it's very much about overthrowing the man, but it's about overthrowing the man in a way that doesn't like destroy the whole world. And I think that's what blockchains can enable, because it enables value distribution and creation to be not simply taken from the government and given to somebody else, but to, if programmed well, to be redistributed in a way that still rests on your personal ability to create value, which I think is a real innovation in the space. And yeah, I think there's just going to be a lot more people thinking about what is value. I think on a philosophical level, that's another reason I'm in it, because I think it sort of has forced culture to ask that question. And I think we're not fully decided on what that answer is, but at least we're thinking about it.
Yes.
I was going to say, I've spent most of my career in PR, so I recognize good PR, and I also recognize disingenuous propaganda. And so most of the negative things you hear about Bitcoin have been like, you know, sort of stoked by the JP Morgans and the Jamie Dimons, and, you know, with one side saying like, hey, I'd fire anybody who's trading Bitcoin, and then you find out they bought $90 million of the Bitcoin in another division when his comments made the price of Bitcoin go down. So I think we're very early in the space. Anybody who tells you ICOs are dead has not been looking at the numbers. We have a client who raised $50 million in an ICO just 2 months ago. Most of it's happening outside of the United States because the SEC has decided to just simply throw a lot of FUD out and not make any rules. They haven't made an overarching system of rules since 1934. It's kind of time to update the Howey test, which was about how you determine whether oranges versus wine are commodities or securities, from a 1946 Supreme Court hearing. That was not only before the blockchain, before internet, that was before television became mainstream. So I remember in late 2002, someone telling me the internet was dead, it's never coming back, and internet advertising was a stupid idea to start with. Google went public 2 years later. So this is all very cyclical. At the moment, we advise clients to really look at what they're really trying to do. Some token sales should never have been token sales. If you start with the token, it should be something that is, and this is where I think the laws in the US are going to evolve, like they have in Wyoming and in Colorado, which is, it shouldn't be just to benefit one company. It should be to benefit a lot of companies in a token economic infrastructure that you've got the monetary system figured out and it works. And it either doesn't need a company, like Ethereum doesn't need a company, it just has companies that support it, like Consensus. Or if it has one company, then you should probably have equity and have tokens, if that's part of your business model, and have a way that they're protecting each other. For example, having an equity board holder on the token company and vice versa. And this is just starting to develop, and Transform is in the process of finalizing Transform Studios Bermuda, because we're big fans of what they do there. And that's one of the best ways of being able to have a regulated token. I thought I'd turn this off. Okay.
He interrupted you.
I'm done.
Okay. Yeah, so I think the interesting thing about Transform Studios is that as you launch your digital assets or your traditional security type assets in this world, you also have to worry about the jurisdiction, and not just where you launch it, but how you're distributing this globally, who's investing, et cetera. And Mike has done that for several years with the Transform Group, kind of figuring out the most optimal business models as the environment shifts. And one can say it shifts every quarter, but it shifts more like every week sometimes. So have you, Randall, did you want to comment about?
No, let's keep it rocking.
So I want to see if what do you guys think about IEOs? That's called, kind of like an IPO, but on a decentralized type world of crypto exchanges.
I mean, I'll start. I mean, I think like everything else, or we touched on government a couple of times, the concept sounds good. It's the execution that matters. And so there is like what's actually happening in kind of the crypto space and then what the public perceives. So, you can do an IEO on Binance, but there's a lot of, you're going to give them 30% of everything you own. You're going to, they're going to, price it a certain way so they can cash out of everything. There's a lot of manipulation and insider stuff going on. So if you do it and it works for you, great. I mean, I think that's the beauty of all these systems. Whatever works for you as an entrepreneur, as a company, or whatever, then there is usually something that you can, whether it's an ICO, IEO, STO, or I'm going back to the last question. Wildly supportive of just straight equity. If you need a digital asset, great. It should be a product that complements a real business model. The token economics is a nightmare, and it's something that you'd have to spend a lot of money, like you would spend a lawyer on, whether it's Prism Group or something like that, to really understand what you're doing with a token, and it better have a real use case. But funding, I think, is going to take the way of what traditionally venture's been doing for a very long time. It's going to be a flight to credibility. I think what you saw over 2017 was a bunch of entrepreneurs that were taking easy money, and a lot of people got screwed. A lot of people made a lot of money, so hopefully they'll invest in the next kind of wave of what comes next. But I think Michael is right. The projects that actually have a real use case and have real value and have real people actually working on something that is real, can absolutely find funding. There's funding out there, but the days of the easy money are becoming increasingly hard.
But let's look at that equity model world, because I spent my whole career in it, and it started like when we launched the KPMG Accelerator, where Mike's company was, Brock's company, all the crypto greats were early in the internet space. We were in a space that had top-tier VCs looking at the quality deals that you're discussing, giving entrepreneur a shot, right? Giving them the first deal that Mike signed with Sequoia and Hummer Wimblett, those were good quality venture capital deals, but they were win-win deals. It wasn't like the VC owned the board and the entrepreneur was the employee after starting something from nothing. But then as the whole unicorn space developed, the whole equity market shifted into this completely non-win for the entrepreneur, win for the investor space, where, all the really top-tier money went into unicorns. If you were trying to fund a startup, it was very hard to find any money. You had to have a proof of concept, you had to have users, you had to have revenue. And basically, they were commercializing something, not investing early on. And then the deals became just so crazy. You had, basically you could take that company over with 5 or 6 different deal points in every contract. So don't you think that kind of created this, opportunity that we're living in?
Well, I would say that, it's a pendulum, right?
Yeah.
And just like fashion or politics, I think the VCs got too tough on their terms, and some people who are used to dealing with the VC models decided to go tokens. I think this was the start of the shift to saying, we don't need the VCs, was when Vinnie Lingham, who had sold his last company, Gift, that was a client of ours, to First Data for like $70 million. They promptly shut it down and just took the customers and got them away as competitors. But they just kept the non-crypto part of it. He went out and started Civic. He got, with his credibility, serial entrepreneurs, everything he's done has been a win. He easily got his pre-seed round of $3 million. He built a prototype. He was going to use Bitcoin as the mechanism. He then, did what he said he was going to do. He got a full seed round of like $7 million. He then got to the point where he's ready to do a full launch of the product. Nobody in Silicon Valley would give him an A round because they said, well, A rounds are supposed to, they went back to the book, A rounds are supposed to be about Excel spreadsheets, not PowerPoints. Where's your revenue? Where's your profits? Where's your growth to 10 million users? And he's like, we haven't launched yet, but this is going to be gigantic. Same time, literally about the same month, the founder of Mosaic, Brendan, I forget his last name now, he started this thing called the Brave browser, which was a browser, wonderful product, by the way. It'll do everything that Mozilla and Chrome do, but it'll block ads, and you can actually earn cryptocurrency. Originally, he wanted to have it that you could earn Bitcoin to block ads. He, again, got like almost a clone, like got a pre-seed round, I think it was 3 or 4 million, built it, then launched it, and had maybe 10 or 20,000 people using it, but no revenue. Went for his A round, they're like, where's your revenue? Where's your profits? Where's your whatever? And so both of them said, screw it, we'll do a token. Brave Browser's token now, BAT, is worth about $400 million. They both ended up raising about $30 million to give up no equity whatsoever. They still have an equity component. I mean, I'm not against equity. I mean, the first company out of Transform Studios is something developed by our CTO, Jim Blasco, who we've done work for hire for other tokens, and he had an idea about how to go and develop something that would be a better counterparty on proof of work, and we have we've got the patent pending for 51% attack prevention on proof of work, and we have that integrated into this coin. And it also, because it's based on counterparty, will give you a almost zero fee Ethereum alternative that can run any ERC-20 contract. We did equity first. Did equity because we didn't have a product. We went to accredited investors, and we were able on a couple $100,000 to build a product. Now we're going to do an ICO in Bermuda because it's ready. I think that, and they end up with their equity getting an airdrop of the token. And I think that that's an area that is not as well defined as it should be. If you're an equity investor and you haven't sold the token to anybody else, it's worth nothing, just like your stock's worth nothing. An airdrop should not have a tax consequence, and you're giving it to equity investors. That's what Silicon Valley should be recommending, instead of like, boogeyman, just take more equity. Or the worst advice is do equity as a token. Oh my God, Reg A token, never been approved. Do equity as a company, whether it's angels or VCs, and then do an airdrop or go offshore as a token until the U.S., fires Jay Clayton or something. The rest
Are you going to allow U.S. investors in that ICO? The one in Bermuda?
No, of course we have to block them.
Yeah.
No, you have to block all the investors in the U.S.
unfortunate.
But as soon as they're on an exchange, then they can buy it there.
Yeah.
And I just want to throw in, I don't think it's actually bad that the sort of investor environment has shifted so that you have to be farther along. I think the technologies have moved forward so that just building things is easier and quicker. And really, it's not just a technology world thing. I think in the music world, for instance, you'll never get a record deal unless you already have 10,000 monthly listeners on Spotify or something. You already have to have gotten it going. And I think that's actually making people better. And I remember in 2017 when we launched Cent, there were a lot of things people were doing that we didn't think were a good use of time, like white papers. We always thought that was everyone was spending so much time on white papers. And our pitch to investors was, well, we have a thing out and it's growing at all this percent per month. Like, do you care about a white paper? And they're like, no. And so I think if you just kind of focus on like, just make a thing, people want to use the thing, people will respond. And yeah.
But a meeting with Tim Draper, you had to have a PowerPoint at least.
No, we didn't.
You did not.
No.
That's the first.
They had a product, it's better.
Yeah, no, I think that you just kind of have they can use it, and if they get it, then I found that that's better than most things.
Wow, that's odd. I don't like white papers myself. I thought they were more like PhD thesis.
Well, Jason Calacanis says don't show up unless you have a working prototype.
That's awesome. Okay, so this is, it's a very interesting thing. So you don't think entrepreneurs should even try to raise money unless they have something going already that has users? Is that what you're saying, Ben?
What?
Ben's going yes.
Yeah, I think so. I mean, I'm just
Yeah.
just kind of echoing your sentiments here. I think for people who are investing, from an investor's perspective, I mean, we're looking at deals that will at some point make us money, right? The higher the probability, the better it is. It's great to have a good concept, but at the end of the day, it's about execution. It's about being able to bring it to fruition. If the idea is so good and the execution is so good and the team's so good, they should have probably figured out how to get closer to a working prototype before they have to go ask for money. And if they can't even get there, is that team really good from an execution or an idea perspective? I mean, that kind of starts the question. Nobody's going to have this really, really awesome idea that they can write a white paper on, but can't find anybody to support them or work with them on, and can't find any of their own money to try to at least build some steps towards showing that it works. So, yeah.
With Aspire, I mean, we didn't go to VCs. We didn't even go to, professional investors. I just, I put money in, and I told a few friends who said, hey, what can I invest in that's like really early stage? I was like, well, I'm working on something with my CTO, and they're like, can I put money in? I mean, so, and it was, because it wasn't built yet, I mean, it was $1 million valuation, right? I mean, I just looked and said, what does Y Combinator, value ideas at, right? And, and then they end up getting airdropped something that's, probably going to go out at, I mean, I think they'll do well for their equity investment, but they risk that it goes completely belly up. I had one other non-tokenized company that's purely an equity play out of that same incubator, and it's still chugging along, working, trying to find a business model, right? But if 1 out of 2 out of the incubator, B-Commerce Labs, which one of them graduated to Transform Studios, it's a 10x. That's way ahead of the curve if the other one goes to 0.
So it's almost like what I'm hearing is that you need to be just as hardworking and entrepreneurial as ever, but also be creative in the way that you think about fundraising. So, and so far we talked about the tokens on the utility side. What about the STO? I know it's more of an academic discussion, but what are your thoughts about the whole STO fundraising opportunities, and what companies should have security tokens?
I'll kick off here. I've actually done an STO, so I think that's probably a good basis. We look at what we're doing in the fund space in terms of fundraising, in terms of creating fund, and what we like to see is we're trying to for our fundraising side, in terms of our VC fund and our product creation process, we're trying to create investment products, and we think that using the tokenization technology makes sense for us. We're using the STO kind of technology/framework more for asset-backed things. We're basically creating containers and funds and investment vehicles, and we're tokenizing that and offering that to clients. And that gives clients the flexibility of using the blockchain and tokenization technology for their investments. It is different to a certain extent, to a large extent, from kind of a lot of what we talk about in terms of the ICO world, in terms of utility tokens. Is actually almost a completely separate discussion. It's driving back more towards the financial, kind of the traditional, financial business models, and it's boring to a certain extent, but it's legal, it's a way to raise money, and it creates, efficiencies for what we want to do specifically. So I think for certain applications, it makes a lot of sense. It doesn't make a lot of sense to create utility tokens in the STO framework just because SEC thinks that's the best thing to do. So I don't think that makes sense. So it's really down to, what do you want to do and how do you want to do it? And for asset-backed, kind of investment vehicles and so forth and tokenizing that, the STO framework actually works.
Yeah, it's not just about what's legal, it's also about what someone's actually going to invest in, right? So for a while, their lawyers were in Silicon Valley were telling people do a Reg A plus on your token. One has never been approved. And so, great, you spent $500,000 on legal fees, but at least you didn't go to jail. Well, you wouldn't have gone to jail if you just shut down the company and didn't spend the $500,000 in legal fees. So I think for them, at this point in time, because the SEC has basically not granted, to my knowledge, any of the ATSs yet to do tokens, and it's this very, and they also haven't let any Reg A, which can be non-accredited investors, be approved. I think there's only 2 types of STOs, 3, I guess, including certain types of real estate and tokenization. But right now, I'm finding that they're not competing that well against REITs because you're going after real estate investors, not crypto investors, and they don't understand it yet. They're like, why don't I just buy Starwood? So I think the 2 that make sense right now and that have had some traction are, number 1, tokenized limited partnership of a fund. So if Sequoia Capital said, hey, we're doing another $500 million fund, we're going to go to the usual suspects, most people never get asked, but we're going to take $50 million and we're going to go and tokenize, first come, first serve. We can do up to 100 U.S. investors, the rest foreign. Minimum investment is $250,000. You have no vote. It's part of just an LP that we're having within the fund. That would sell out really quickly because most people never get the chance to invest in a top-tier fund. So I think those are going to do well. The first STO was actually Brock Pierce with Blockchain Capital, and it sold out in minutes. I mean, he did obviously a roadshow beforehand. And it still not listed officially on U.S. exchanges, but there are places you can buy it. And it went at $1, represented $1 in a long-term investment in the fund. When crypto winter was kind of shaky, it went under $1, but you still had that asset to just keep and hold it. And at one point it hit $4. So you could, if it was in a jurisdiction you could sell in, you could go and triple your money and still have your original investment there. That's not bad. So that's sort of the exchanging the vote, which if you're not putting, kind of Stanford University endowment size money into a fund, you care more about liquidity than the vote. I think that's going to be very popular. And for the sake of this crowd, I think another thing that's going to grow in popularity is going to be revenue royalties, not dividends, royalties, where you actually have a predetermined cash flow, say completion bond funding. You've got, you only have this much left to finish the movie, last money in, first money out. You tokenize it, you have a stable coin behind it, you've got not just contracts you have to go to court or suit, but literally the money before it comes from the theaters into here has to go into your wallet. I think that's going to be a big thing for Hollywood.
I think that's a great segue to my next question. Thank you, Mike. So venture capital kind of funds big companies, ventures, et cetera, opportunities that are hockey stick growth and all that, as do ICOs, IEOs, STOs. But here in Hollywood, we have project-based financing. So what are you guys' thoughts, other than what Mike just pointed out, which is a terrific opportunity? What are some ways to fund digital media, next generation, film, television, music companies, things that are near and dear to our heart, AR, VR, et cetera? So you guys want to take that?
Yeah, sure. I think the points that Michael just brought up earlier regarding royalties and being able to have access to those future cash flows is an important part of how this could be applied to production financing and assets or new original content that's being created. I think another part of that could be pre-selling parts of whether it's digital assets in a franchise or in a story, so owners of those assets can kind of participate in the growth of the price of those assets as the movie comes out and is distributed, and there might be a game property attached to it. So I think there's a variety of ways as we look at blockchain and we think of financing productions that the ecosystem of buyers and stakeholders in the properties itself can create liquidity in that property or in that production specifically. So I think that is evolving, and it's very interesting. And we're looking at it, at Rogue Initiative Studios, where we're creating franchises that go across all those mediums. So that as you create a new property and you're looking at making it into a game and a film, that's where the transferability of that asset could be very interesting.
Yeah, I just want to throw in. I think I'm still a big believer that what we're moving toward is people being able to look at a preview of some project. So like, someone would make a trailer of a movie before they actually make the movie, for instance, and the crowd could sort of bet on whether they think the movie will be successful, where they want the movie to be made at all. So things like Kickstarter, Indiegogo, I think that they're definitely a part of culture now, but I think they're just going to be more and more a part of, the default way we do things. There'll still be the centralized, funding sources for all these projects, but I think I still don't think we know how early on we are in the scope of project-based funding. And if a project in the future, again, I don't think all these token things, all these STOs and IEOs, I still think they're still too early. If you want to build like a long-term enduring thing, just from my own experience, we raised our first round with this. At the time, everyone said you should use a document called a SAFT, and it's like a simple agreement for future tokens. And 9 months later, we were raising another round, and now everyone hated SAFs, and everyone was using this new thing. And so it just changes so quickly that it's hard to, in my mind, to say, okay, let's do this now, because in a year, the whole place might have moved, and if you use the old version, everyone's gonna frown at you. So my advice to people still is to do like what the structures at B have determined is definitely doable, but then to maybe have like an experimental, unless your thing is totally experimental, if you just want to if the purpose of it is just to see what happens, then do that. But projects too, I think if projects maybe are the best way to have the experiment because they're bounded. It's not like a company that you want to exist for a very long time. So yeah, I think I could see a lot of innovation occurring there.
But you're doing innovation with Cent because you're funding people, influencers.
Yeah.
Most of them create projects. So you're funding the projects.
Yeah, well, we're funding after the. We're actually about to launch something where you can sort of invest in the creator themselves. Like if you saw, if you were at a coffee shop and in 2004 and you saw Taylor Swift and you could put $10 down and like bet on that in the same way you could bet on Bitcoin. We're definitely in that path, but I think that's we're definitely taking some calculated risk because the world doesn't have any structure for knowing how that falls legally, and so we're sort of, I think, just like Uber like a few years ago sort of had to take the brunt force of a lot of new structures in the world and had to fight a lot of battles. We've sort of accepted that as part of our whole company journey, but yeah, I think in general though, leaning toward what most people will, to Michael's point, will actually buy and actually invest in is probably the quickest way to get moving.
What you propose in terms of a Indiegogo style Kickstarter, but having a revenue component and a royalty component available to the everyday Joe, would be a huge success if it was a Reg A plus with big stars attached. The SEC is afraid to go and green like that. And because I think they're afraid of the floodgates. Now you could do that right now as, Reg D only, but it limits it to like 11 million, U.S. households who are going to go and say, well, I'm looking at this versus many other investments and blah, 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 and let me go and meet the Chris. Whereas if it's crowdfunding to the other 300 million people in the United States, and it was just like, I always find it shocking that, I lived for many years in Las Vegas. I still have a home there. They will not let you, the SEC, if you do not make $200,000 a year or have $1 million in assets above your home and all this stuff. So the vast majority of people in the United States, they will not let you go meet someone like Max and say, I'd like to put $20,000 into your next startup because I really believe in you. But they'll let you go and take more than that and go to Vegas and put it on red on a roulette machine. And there's no warning saying you may lose your money. You may not play this while you're drunk, So, I mean, I think it's just, an interesting, just kind of like moral question why the U.S. allows Vegas to exist and doesn't allow, Angelina Jolie and Brad Pitt, well, I guess they wouldn't do a movie together anymore, but Angelina Jolie and George Clooney and Steven Spielberg to say, we need $100 million for this next blockbuster, and you're going to get the first money out of it until the token is paid out for the first $10 million, and then you also get like free tickets in the front row and blah, blah, blah in your city. I mean, that would be amazing. That would do well. I think also when Reg A Pluses actually are approved, one of the big future opportunities, and I've said this for a long time, is for restaurant expansion. Being a restaurant owner of a hot restaurant, take something like, I give in LA the example of like Tender Greens, right? It's always got lines out the door at a couple locations. I'm sure to get their funding, they had to go and have dinners with angels, like month after month after month. They finally got their checks to write their first restaurant. Then they want to expand. The angels referred them to restaurant VCs. Then all of a sudden, if they want to get to the point of being a public company like Chipotle, they have to go through like other rounds and then private equity and then mezzanine round. By the time they go public, the entire management team is lucky to have 10%. Now, on the other hand, if you were able to issue to your rabid customers at the security token and say, hey, it's a hybrid security and loyalty token. If you hold on to the stock, you get a 30% discount on all your meals. At this level, you get free meals if you have this much, or whatever the ranks, 10, 20, 30, predicate free. But, and then you have that in your wallet. It's a security with other components. You can go and dictate your own terms on your A, B, C rounds, and that's really democratization. And if you're a good product that people love, the bad ones will fail because people don't like their food and they don't have lines out the door. You could probably end up, by the time you get to Goldman Sachs and do a traditional IPO, having the management team having more than half of the equity.
Yeah, and you can also simulate what a digital asset would do without actually having one, which is kind of what we're doing, which I think gives you some nice buffer from the legal requirements. Like for instance, again with our model, where you give money to something and then you get money from everyone who comes after you, we easily could have made that like you get a token and then the token like issues a dividend or something. But the thing is, when you have a token released, you can't really change the code. So the way we did it was that it's just sort of a series of interconnected contracts, and the contracts can be updated if needed. You can read the code of the contract if you want, but I think it's important for people to look at like, okay, what's the end state experience we want for this asset to give to people, and is there some way to do it without actually having the asset exist? Because you can still do it in a decentralized way, but it seems like the line often legally is, oh, it's an actual asset, now it's actually something you own, now we have to make a regulation, or now you're in trouble, now, and if instead it's just dealing with contracts, which I think in general is way more legally permissible because people are engaging essentially with code that they can look at. And so it's pretty, at least right now, it doesn't seem like that's something that they're really bringing the hammer down yet on. And you can always update it, you can always change it, you can always evolve it, so just like any other software. And so not that that would work for everything, but I think for a lot of things, just routing money in interesting ways can do a lot that an asset could do.
So it's like a digital assets 2.0 without the token.
Yeah, just a
we
digital
heard it here first in this panel. Okay, so let's think about for just a
It's
moment.
actually Back to the Future. There were smart contracts before there were tokens.
So, quick question we have 3 minutes left, but maybe like if each one of you can just give us a 1 minute quick summary of like the greatest thing you're looking forward to in the next year of blockchain or crypto. Like what is the biggest innovation? What's going to happen in your mind that's really exciting? Ben, you want to start?
Kind of back to my looking at tokenization of hard assets, and it's similar to what Michael was saying with regards to kind of VC funds. I think that applies generically. Anything that's an appreciating asset could potentially be tokenized. We're actually looking at tokenizing whiskey, so that's pretty interesting. I'll leave it there.
Is that your STO?
We've done one. We're in the process of doing many more. That will be one of them on the roadmap if we figure out everything, all the details.
That's awesome.
Yeah.
Thank you.
I think what I'm most excited about is it feels like there's a lot of true conceptual progress that has been made within the crypto world that the mainstream world is just unaware of. And so there's this huge delta right now. And what I'm most looking forward to is packaging that into an emotionally resonant way for the mainstream world and hoping to start to blur the line so that there's not just the crypto world and then everyone else, because the crypto world is just so small. And doing things maybe on a PR level, maybe on a stunt level, maybe on a, just something to get into mainstream consciousness. And I think we're not the only ones trying to do that, but I think someone will begin to pierce that veil this year, which will be exciting.
Yeah, think how early we are. We have not had the Uncle Milty moment. We haven't had the, I need a television so I can watch Milton Berle. We haven't had the, I need an iPhone so I can play Angry Birds. I mean, nobody's like saying, oh, you're not a cool kid because you don't have this crypto, right? This will happen at some point, and it may be a game, it may be sent. Right now, it's not like, oh, well, you're not cool because you can't go and, take a decentralized token and send it to somebody in Germany in 18 seconds. I mean, what? After the 60 Minutes piece on Bitcoin, Google hit a record number of searches on Bitcoin. It was interesting. Didn't know that many people watch mainstream television anymore. What I'm excited about is a clarity of understanding globally among regulators and an increase in power of the people who are doing things in blockchain and digital assets, so that it's not a one-sided conversation of banks saying shut everyone down, and an evolution of sort of permissiveness for things that are not bad actors and bad behavior, instead of this digital McCarthyism that we have right now, finding a unregistered security under every couch. I think that it's not just the U.S. Obviously, Korea, which was very pro-digital asset and then kind of became anti-digital assets, evolving back again. I think that, a lot of them are just afraid of opening Pandora's box, or as I like to call it, Pandora's blocks. And name of my next book, by the way, I have an agent, I just have to write the damn thing. I think that is going to just really explode the nascent demand, and, watch out when that happens.
The thing I'm excited most about is when we don't have to make users go through a cumbersome process to be able to get the advantages of blockchain. So, the thing I get most from users and people in general that I talk to is, oh, I don't understand how to create a wallet. I don't understand how to do this and this and this, so I'm not going to do it. And when we can, make that technology seamless or more seamless, and that's happening, and it's, happening on Superworld, and we just integrated with Portis, that's allowing us, people to go right away and do this process more seamlessly. And I think as that happens, and we don't have to explain things, and people can get all the benefits and just, are able to interact on platforms without kind of worrying about the technology, back to what was said earlier, that is what I'm excited about, so the most.
That's like even. I mean, everybody here old enough to remember dial-up modems? Pretty much. You don't have to dial this thing up. You don't have to have a second phone line. Because when it was 14.4 dial-up modems, I had a lot of people in Hollywood say, we're never going to be on the internet. My mom is not going to go get a second phone line and get woken up in the middle of the night by this thing going bing, 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 bing. It's like, here, Mom, here's an iPhone, watch Netflix.
I'm excited about the credibility. I mean, I think that, for anybody that's been in venture invested, angel investing or whatever, been an entrepreneur, starting companies is hard. I love, we're trying to decentralize data to kind of remove the power base that people like Facebook and Google have over data, because it's probably one of the most valuable assets on the planet. But it's very hard to decentralize leadership. Companies, I have some remote employees, and we have about 200 employees. Some of them are remote, but having an executive team that is kind of, one team, one fight, the life cycle of a startup is going to punch you in the face multiple times. There's going to be multiple things that go wrong, whether it's from financing to product development to hiring to everything else, and that's just tough. And I saw a lot of people in 2017, pretending to be an entrepreneur. A lot of teams that kind of came and went, probably never even met, and some of them were just outright scams. And so it's exciting. There's always been, people like folks like Vinny and some other folks that have, successful entrepreneurs that were in the space, before the space was cool. But now that the space has gotten attention, I'm excited to see, kind of the professionalization of it and some of the really strong entrepreneurial teams or existing companies with existing products figuring out how to leverage this to bring it to the mainstream in a meaningful way that people can actually use. And I think you'll start to see more and more, at least for us specifically, dual token economies, because the SEC has kind of made all of this problematic, and so people are going to get more thoughtful in how do you create this ecosystem that actually can work when it does reach the mainstream and there's millions of transactions. I mean, nothing really can handle true consumer scale. I mean, there's not really blockchains that are built to do that yet. So the credibility of teams launching real world, digital asset ecosystems that solve real world challenges, and their actual companies kind of leading that effort and not just, pretending when it's cool. I'm excited about that.
I'm excited about so many things. It's hard to summarize in one sentence or two. But one of the things that I've seen is that Fortune 500 companies are sort of doing a round robin on that list. And in the next 10 years, over 50% of them will be off the list. And I'm excited to see companies on this panel and all the companies we work with and in Mike's networks and BitAngels networks, et cetera, coming to become, those next generation Fortune 500 companies with all the things you described, and but yet overturning the man, as they say, and making it a more, I would say, humanly focused world versus, this sort of ownership of your data and very centric, Google and Apple and Amazon centric world. So I'm with you.
That's why we went public. I mean, it's more about credibility and transparency for us and telling people, hey, here we are, here's what we're doing. You can have all the information that everybody else has, and it levels the playing field.
So I want to thank our panelists. We ran out of time. I want to keep them another hour, but Victor won't let us. He does have another panel in here. But maybe we can reconvene in the fall and discuss what happened and how good we were at predicting everything. Thank you for joining us today. We have another panel. We have an event tomorrow morning, 8 to 10, at Phase 2 in Culver City. If you want to come as our guest, TG, Transform Group VIP is the pass. So look it up on Eventbrite. And see you at 12:30.
Did they have to unlock things in order to...
After he retired under Bush the Elder, he was still working for the National Defense University, so he would train.
Good morning, everyone.
He would train all the upcoming brigadiers, so I could imagine National Defense University.
Sound check okay with you? All right. Hi, everybody. Wow, pretty good turnout. Good morning. Thank you for coming. My name is Cynthia Lieberman. I am the COO and partner of a site called theinfluencer.com, and I'm also a content marketing and media strategist and do a lot of different projects for entertainment, social good, everything, Fortune 500 companies. And I'm really honored to have such a great panel here, and I'm really grateful that you're all here. Thank you so much for coming. Today, we are, as you can see, talking about VR, AR, and mixed reality as a branding and advertising strategy. You know, it used to be, I saw the headline, but I didn't read the story. But now it's, I saw the video or I saw the image, but I didn't read the headline. And that is continuing to disrupt and change the media landscape with immersive technology. So today's panel of experts are here to lead us kind of down the pathway of what's now and what's next in this arena. How many people here are content creators? Almost the whole room, wow. So you're looking for discoverability, how to make money, what's out there, where can you insert your ideas, solve problems, right? How many here are distributors? Okay, so mostly content creators. That's good for the panel to know when they're addressing. So each one's going to actually, rather than going down and having them each tell you who they are, we kind of have sort of a sequence here of events. And we're going to start with a, let me just make sure that there we go. We're going to start with a little video from Hourglass Technologies. Well, first, as you can see, we have evolved. And it's continuing to grow into artificial intelligence, and what is that about? So these are our panelists, and I'm going to start with, actually with Demetrio. There, oh,
down at the
she
end.
did it the other way at
I'm
the
here.
end. Oh, she went that way. Okay.
Yeah, they went the
Great.
other way.
So I'm just going to show the video, and then I'll let you talk about your business.
Sure.
Hopefully.
Yes. Sound.
It had sound. Sound? So as you can see, initially, Hourglass was really focusing on 360 in the Latin market,
Right.
and you've got some new developments of what's coming now. So I thought we'd start with kind of what's happening in the moment, and then we're going to take a little journey through history and keep going. So go ahead.
Right, so
Demetrio.
just a little backstory just to sort of help illuminate where we come from as a company. My partners are really just, you know, the most amazing gaming world professionals. They range from Jim Vivert, who was the former GM of Zynga. He worked at IGT, Jerry Bruckheimer Gaming. Nicholas Langano was the head of marketing for Vivendi Universal Interactive, launched games like Gears of War. Another partner and advisor is Chris Mate, who was on the creative team behind Grand Theft Auto back in the day, that far back. You know, helped launch the first March Madness games, did most recently, I'm not sure if you're familiar with this kids offering called Animal Jam that Nat Geo puts out, has 150 million subscribers. It's kind of like a Sims for kids. And they pay something like $7-8 a month, and I have twins, and they wanted their own accounts. So we we come from a place that's maybe a little unique in that the way we believe we've always been working on immersive experiential entertainment through games. So when we approach things that we do, we come from that angle, and we've been thinking about, this being circumspect in experience for a very, very long time. I love that little reel just because it sort of it's flashy and it's got some great music and stuff. But the most interesting things we're working on right now really have more to do with AR. We're finding that the market is not really gravitating towards VR, with the exception of sort of installations on sites for promotional type experiences. Where we've been drawing ourselves and where we've been working lately is we've procured an exclusive license to an AR patent that allows you to put content media into geospace in a fixed location. So I could go, and the example that I use is that you could go, say you're walking down Sunset Boulevard and you pass by the Roxy, and I have my app available. I could pull up who's playing that night, see their content, see what some of their videos or something like that, read reviews, buy a ticket right there. So monetization and promotion, but in fixed locations, leveraging AR and VR. We're working on potential real estate development projects in Maryland around apartment complexes and waterfront properties. We have a lot in common because we've been looking at leveraging archived content that different locations have where they're for example, a great example is, say, Mann's Chinese Theater. They have a wonderful archive of celebrity content, putting their hands in the cement. Well, we can do things like get you next to Marilyn Monroe, and you could scratch through part of it, put yourself in the picture with her putting her hands in the cement. So little things like that. We've already built all the prototypes out. Now so the last year, I was explaining, I was talking to Marcy, who I had the pleasure of doing the panel with last year as well. We've been working on financing these opportunities, creating funding around proprietary IP that we can then exploit what we're doing. So that's the latest of what we're up to.
Yeah, I think you brought up something when you're talking about like the Mann's Chinese Theater, and all of you as content creators are looking for discoverability. How do you break through and get people to pay attention? And the great thing about the types of augmented reality applications that you're talking about is that people can not only stand next to Marilyn Monroe, but then they could share it with, their
Right.
thousands of best friends, which, the most, Jonah Berger from the author of Contagious, one of the most things that makes things the most viral is remarkable facts. So when you can be remarkable or cool, people are going to share it. So anything that you're doing where you can then, it's like when you go to a movie theater and you can, share something. So thank you. And it's
Yep.
actually a nice segue into Michael McGarr, who has a very interesting business. And do you want to show the reel first, or do you want to explain it first?
Yeah, the reel is about Gettysburg. We're in development, so we launch in late June, so I'm pretty scattered. But anyway, this is a recreation of the Battle of Gettysburg, standing on the locations where the battle took place. And so it's AR, MR, it's several different things together, and we'll let the video play.
Okay, so as he was talking about using geolocation to use AR, this is an application that's in play right now. Hopefully. Here they come!
So the usual battlefield experience or museum experience is, in a museum it's guns behind glass. People walk by and they just see gun, 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 gun. And on a battlefield it's grass, and you stand and look at the grass. And working with the Park Service at Gettysburg, they say, we see all these kids coming through with cell phones, but they're just texting each other that they're bored. And so wouldn't it be nice if we could have the kids use their cell phone and find out something about what the thing that they're doing and actually become engaged in it. And part of what we want to do too is to be able to have people understand from a human perspective what happened in this battle. So we put people into the position where somebody was when the battle happened, and you see what happened to that person in the battle. And so we have also gamified it so that kids will want to play with it. And we have an artifact hunt out on the battlefield, and you go out and you find these artifacts. So those artifacts are related directly to what happened in that part of the battle. But then that artifact is also in the museum. And so then the kid gets points for finding it on the battlefield, and then when they go in the museum, they get points again for finding the museum, and then they can cash in those points for different purchases and those types of things. One of the issues that the battlefield and the museum have is that they get something like 7.5 million people a year on the battlefield, and only about 1.2 million a year inside the museum. And they don't make money on the battlefield, they make money inside the museum. And so by creating this artifact hunt out on the battlefield, then the kids are more incented to go inside and see those artifacts inside the museum. And so we're hoping that that draws more of them in there. All this has yet to be proved out because we don't launch until the end of June, but we've had great support from the National Park Service, and we're working with the foundation to get even better support in that. Parts of this that make it challenging is that when you do history, it has to be accurate. It has to be incredibly accurate. One of the scenes that we were working on, there was a scene where they're charging out across the battlefield and there's no trees in the distance. And I look at the animations, and the animators put in trees, and I go, well, there was no trees there. And he said, well, it looks so much better with trees. And I said, it would look better if a helicopter came in, but they didn't have that either. So we have to take the trees out. And they're all depressed. They're going, God, it looked great with trees. I can't. So, well, you know, that's the trouble with history. And so anyway, we started out, the first thing we did was the Battle of the Alamo. And that started when I was working with a woman who later became a business partner. And she asked me, I had done an Alamo back in 94, 95 on CD-ROM for a 486-66 computer with 4 entire megs of RAM. And we had Dan Rather, Sissy Spacek, and all these famous Texans did narrations for this story. And so she asked me if I was to do that again, how would I do it? And I said, well, Pokemon just came out. Everybody kind of understood Pokemon at the moment. Wouldn't it be neat to stand next to Davy Crockett and watch him defend the fort in the battle? And she said, well, you've got to do it. And I said, no, it's too hard. It costs too much money. And it nearly killed me 20 years ago when I did the original Alamo. So I don't want to do it. And she said, oh, you're going to do it. And so she helped raise the money, and then we actually did the Alamo. And so now the next one was Gettysburg. The Alamo is 6.5 acres. Roughly about 600 people got killed in that whole battle. Gettysburg is 7,000 acres, and on the first hour, the first day, 2,000 people got killed. So the scale is immensely different. But it's been really exciting doing it, and we're hoping to do all the rest of the Civil War battlefields and then other things like D-Day and stuff like that as we move forward.
You know, you brought up a couple of interesting things, and one is brand trust. I mean, any of it, no matter what you're doing, whether it's from back in the day or, trust me, you know, all the marvels and they look, you know, and if you've seen the Game of Thrones Starbucks cup that was in the scene, I mean, they will pick it apart and it will kill you and kill the value in the brand equity and the brand trust. So especially if you're doing something like with the Groms that people are such fans, or when you deal with fandom, especially anything you do, brand trust is very important. And by the way, what is a CD? What's a CD? So, and then you talked about scale and scalability, and you've also are scaling this into a book form.
Yes, and so what we've done too is we're creating these books that are ancillary to the story of the battle, so that you can get other perspectives. And so we have these books that if you can read through the book, and it's a beautiful illustrated children's book like children like 12 years old type children's book. But if you look at it with your iPhone, then a book comes to life. And so there's a story of these people that were called contrabands, which were free blacks who lived in Pennsylvania, and they were captured by the Confederates and taken to the battlefield. And we have a story of this one kid who was captured, and he hid in a basement. And so how the book works is you see a picture of the storm cellar door in print, but when you look at it with your phone, then a Confederate cavalry soldier comes over, opens the door, and reaches down inside the book and pulls that poor kid out of the thing. And then we follow the story. And so the story of that is that 2,300 free blacks in Pennsylvania were captured by the Confederates, taken to the battlefield, used to transport ammunition to the front, and then taken back into the South and sold into slavery. And
Tragic.
It was just like 12 years a slave, and no one knows that story. And those are the types of things we try to uncover in creating these applications.
But it's one of the values of the immersive, besides experiencing it physically, is that we're preserving something that could get lost in translation with all the noise that's out there, to have something that people need to know our history so we can not make those same mistakes and maybe teach empathy from it. So that's a great project. But then, you know, the hero's journey today, Jason knows how to tell stories in all kinds of ways. He's the CEO and executive director, creative director of Trigger. And you just tell me when to change slides as we go, so.
So yeah, I just wanted to, we've been doing AR for a long time. Our first AR project was 10 years ago for Sony. And I wanted to show a couple of projects that kind of push the edge of what can be done. I know when people think about AR now, maybe the first thing you think about is, you know, kind of social lenses, snap kind of stuff, or on the entertainment side, we do a lot of things with, you could place a character, take photos with them, see animation, that kind of thing. But I wanted to show other business cases for AR, because I think when we think about AR as a business to get into, these are kind of the edges, you know, where else you can explore besides just pure storytelling. So,
by the way, how many here are AR producers, content creators, and how many are VR? So it's about a 50-50 crowd. So
cool. So yeah, we have 150,000 plus hours of dev experience in XR so far. I think one of the key learnings from this is that a lot of our success comes from having deep technical relationships along the way. As this industry is changing so fast, that's critically important, because if you are playing with tech after it comes out publicly, you are probably 6 months or a year behind everyone else that's been playing with it early. So next. So this is Web AR for Spider-Man. Actually, it's Into the Spider-Verse. Just want to bring this up because this is a big change in AR. Before, everything was app-based, and then it moved to kind of app-based but through social networks, so working off of Snap, Instagram, Facebook, and now we're moving on to Web AR. So Web AR allows you to do AR off the browser itself. So you're just distributing a URL. So that can be off of a social feed, or you could be putting out QR codes. But this is the broadest way and easiest way, least amount of friction for a user to get into AR. They can just go straight to their browser, go to a URL, and then see, activate the camera through the URL and see AR from there. Next. This is for Warner Bros. This is a PVH brand. So this is through Facebook. Had 400,000 AR activations over 2 or 3 weekends, distributed at Kohl's. This is just a showcase of, normally, if we did this as a movie, you know, Facebook campaign, and we had a famous character, we may not get as high numbers of that. Sometimes we get way higher numbers, but this shows AR can be really functional and utilitarian. This was just added display, point of sale. All it was doing was communicating extra information in AR about a product. It was a bra with some special gel technology in it, and it had quite a lot of success. And I think it's important because users aren't activating it for a gimmick. They're not trying to do something fun. They're trying to do something useful and informational. So next. This is Royal Caribbean. It's an AR tour of their flagship. So this is a good example of bringing in multiple technology to make something work. There's beacons throughout the ship that as you walk through the ship, it would tell the app what to play at the right time. So there was 360 audio as you walk through as a tour, but then more impressively, there was also this volumetric capture. So we shot the CEO and some crew members at Microsoft Studios. So now when you're walking through the ship, they actually appear in AR at the right place. So the CEO can come, in the lobby and explain how the light fixtures were made and the chandelier and all that sort of stuff. So there's a lot of complexity in making this work in the middle of the ocean and on a moving boat. But all these technologies have to come together in order to make that experience work for the consumer. And the consumer has no idea that it's tying into, sensors and GPS and blah, 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 blah. But it shows how many layers, how many things you have to connect to make something work in this day and age. So
It's pretty amazing.
this is for NHL. This was the first time we did, or there has ever been real-time data from a NHL game. So this was at CES, 2 nights, Las Vegas Knights games. This is to show, I feel like AR, if you do kind of like single-use AR, like a character comes out and animates or something like that, it's really compelling maybe one time, and then second time, it's already, no one's gonna go to the third time. So I think AR has to be dynamic, and for this, what's happening is, on the ice, the puck had a chip, and all the players had positional chips on their uniforms, and they were playing the game. There's 16 sensors around the rink, and it was tracking all the telemetry in real time. And then, as a user, you could see that rink on your tabletop and see all the players move around and get real data from all the players. But the amazing thing about that is it's tying into sports betting is becoming legal in NHL, so that's important for that. And then also the idea of, if you have this live data, you're not trying to compete with the broadcast feed, you're trying to add something like additional and supplementary on top. So again, thinking of AR as something not just pre-made, but a little bit more dynamic and real time. This is Mattel Ogmoto. It's a XR toy from Hot Wheels last Christmas. You're scanning the track. It's 3D object recognizing the track, and then there's an AR environment, and you're playing an AR game while there are physical cars going around on the track, and then your AR game actually affects the track. So if you shoot a car on the track in AR, then it actually stops, goes into the pit stop. If you actually fix the car fast in AR, then it actually leaves the pit stop faster and stuff. So that we feel is like a real mixed reality, because it's not, AR is not just a layer, it actually affects the physical, and then the physical affects the AR. But one note of warning for stuff like this is that a lot of the friction from this whole experience comes from setup, like getting Wi-Fi to work, getting multiplayer, multiple devices to get connected in a family, battery levels between people, like these things that you don't think about when you're actually creating the AR experience can really affect the success of it. So this is for the Black Eyed Peas. It's a live concert in AR. This was for their a short European tour they did last year. Basically, in concert, you can hold up your phone, see AR above the stage, and the AR is actually synced to a bass track that's running under the live performance. So it's using audio recognition to sync all the animation, but that means like everyone in the crowd is seeing the same type of animation at the same time, and it's all synced to the music. So this kind of social experience for AR.
Is that shareable? Can you then show it live or something, like if you were?
Yeah, you can take photos, you can video, and then you can share
while you're in the experience, you can say, look how cool I am, I'm at this concert or something.
And the thinking was everyone, when you go to a concert, has their phone out anyways, so let's take advantage of it and add to
It
that.
used to be a lighter, now it's the phone.
Yeah.
Back in the day, for those who might know.
And then last one, this is, I think it's the last one, for Lego at their Lego museum. It's a mixed reality fish designer. So you actually build the fish in brick, and then you scan it, and then it goes into these giant digital tanks, and it comes alive. But average play time is 30 to 40 minutes. It's the highest performing digital experience in the museum itself. But one thing we're trying to show here is that we did a bunch of prototypes where you could do many things with the fish after you built it. And what we found was what tested the best with the kids was just keeping it simple. Focusing them on what they want to do, which is build in bricks. And then once they release it, it's just like a real fish. You just watch it in the tank. You don't go and play with it on devices and stuff.
And you want to give them some imagination. I mean, you're at a museum. You want them to use their brain too, and not just do it for them. So, is that the last slide?
Yeah, I think so.
You know, it's really a couple of points. If you notice, there was film, sports, retail, travel, gaming, museums. These are different ways. But the interesting thing is that really to make it a long tail activation, it's a journey, not a sprint. And also really understanding what the end user's experience is, and being able to understand that kids don't, you know, you need them they just need to know how to make it so they don't get distracted by the tech, and it makes it very simple, ease of use for anyone. And like with Mattel, the problem was the consumer, you know, we're starting to get more used to, we're getting better at what we're doing as households become smarter and businesses become smarter, and that's where Nicole fits in, because Nicole is from Magid Research, and she is an analyst, and she's going to talk to you about the consumer point of view and the qualitative data when it comes to AR, VR, and mixed reality. Oh wait, did we miss one? What about the evaluation tool?
Sorry. So this is just an example of something. It's actually co-developed with Honda, but it's a AR design tool that replaces the clay model, which takes 8 weeks and tens of thousands of dollars. Now we can do this in one day for Honda. But it just shows, again, AR instead of an entertainment piece of media, to do it as something functional as a tool.
As an industrial business-to-business type tool. Mm-hmm. Okay, Miss Nicole, because I don't know how to say your last name.
No worries, Mian. Thank you, Cynthia. So as Jason was saying, the consumer experience when it comes to all of this immersive technology is so important. And so what I do with my job is I bring consumers into facilities, and we actually show them experiences and get their opinions on them. So with this research study that I'm going to take you through, I'm going to explain where is current consumer perception in regards to AR and VR? And for all of you content creators, how do you decide the kind of experience that you should be creating for the brand that you're partnering with or the brand that you're working for? There's a lot of different options out there when it comes to how to market a show, how to market a movie, how to market a game. You know, you can partner with influencers, you can create just a standard trailer, or you can go the immersive tech route. And so that's why we did this research study, was to understand how can brands determine the kind of experiences that they should be creating for consumers. These are just a few bullets explaining the research that we did. So like I said, we did focus groups for this research in LA and New York. We spoke to a mixture of men and women 18 to 45. All must have had VR and AR experience in the past. And so we gave them a homework assignment. We asked the participants to download a couple of different AR apps. You'll see the AR apps listed on the right-hand side. So some of them were, you know, the Rampage movie, they had an AR app. Forensic Detective, for Oxygen, they had an AR app. And then some of the VR content that we exposed them to was the CNN VR app. The singing competition show had an app, a VR experience. So those are just some of the examples of content that we exposed consumers to. And then we had them come into a facility and we talked to them about what they thought of these experiences. So you can go to the next slide. So one of the most interesting things that came out of this research was this decision tree that we made explaining how do these brands determine whether AR is best, VR is best, or just regular ancillary content like those movie trailers and partnering with influencers, whether those are the best route to marketing their brands. And so we came up with this decision tree. The first question that these brands or content creators should be asking is, what's the goal of the business? is the goal to expand reach, so reach a lot of people and cast a wide net, then maybe they should go with regular content. Because what we found with VR and AR experiences as they currently exist, in the marketplace and in consumers' perspectives, there's a little bit of barrier when it comes to accessing these experiences. So the shareability aspect of not being able to tell someone who doesn't have VR equipment to go check out this new Coco movie VR experience. If they don't have the equipment, they can't necessarily share it. But if they see a movie trailer that's online and they really like it, they can just send that over to their friend. So that shareability aspect is sometimes a barrier. And also the discoverability aspect. So we realized that consumers weren't necessarily very aware of these experiences that we were showing to them in the research facility. Even though they would be fans of a TV show, they may not have necessarily heard of a VR or an AR experience that related to that show. So that's why if the goal is to cast a wide net and reach a lot of consumers, the immersive tech might not be the best option. Whereas if the goal is to establish an emotional connection with the consumer that can't be done via regular, non-immersive content, create that strong bond with the consumer, then maybe they should consider immersive technology, and maybe they're okay with not casting that wide of a net. So the next question to ask, if they do decide to go the immersive tech route, is there a budget to market the marketing materials? So if they're creating a marketing AR app or a marketing VR app, they might have to use some of their budget to get the word out to consumers that these apps actually exist. And so the next question to ask after, if there is a budget to market the marketing materials, how do they want to connect with the consumer? So do they want to go into the consumer's world and bring that new reality into the consumer's world? They should go with AR. If they want to bring the consumer into their new world, they should go with VR. So what we did was we explored with consumers what were the best kind of experiences that worked with AR and what were the best kinds of experiences that worked with VR. And over again, consumers' perceptions were so much more positive of an experience if it made sense. So if it felt authentic to the brand. So if a brand is doing an AR experience and it feels like it's just forced, like they're just doing AR to be buzzworthy, then consumers weren't as impressed. But if the AR app felt like it had a purpose and was using the new technology to its strengths, then consumers really gave the brand credit for that. So I can give you an example of an AR app that really just used the positive strengths of the technology to reach the consumer. So the Oxygen came out with an app. So with their brand positioning, they wanted to move more into a true crime realm. So they came out with an AR app that allowed the consumer to be an investigator. So they're using their phones to solve a crime. They have their phones in front of them, they turn it around, they see a dead body in their living room, and they're working and moving around to solve this crime. And think about it, what are you doing when you're watching a true crime TV show or a true crime movie? You're trying to solve the crime with the storyteller. So this was a very clear and very well done extension of the source material. The technology fit the material and the purpose. Whereas there were some AR experiences that just kind of felt like a knockoff of, Pokemon Go or things that they have already seen in the past. And so it felt kind of like a cash grab to consumers. Now for VR, and another thing about AR is, Jason, you mentioned this, how a lot of your AR experiences are moving more towards the functional and the practical. We found that as AR currently exists, the AR experiences often tend to move towards the functional and the practical. As for entertainment, VR made more sense for the consumer because what they want from entertainment experiences to be taken away from their reality and to feel emotion. And so that's what the consumers really got with these VR experiences. So An example of a VR experience that did a really great job was the Coco, the movie Coco had a VR experience. And this worked really well with consumers because they said, when I'm watching the movie Coco, it's showing me an interesting world that I want to go into. And that's what the VR experience does. It takes the consumer into a new world that's interesting to explore. And so the Coco experience, you get into the room and it's very emotional. So they show family members and you get on a train and you're going on this train around this very cool world. And so consumers were saying, I felt so much emotion as I was going through this experience. And so after that experience, people who had already seen Coco, they were saying, I'm gonna go watch the movie again. Or people who didn't see Coco were saying, I have to check this out now. So it was an emotional connection that we didn't see established via, regular ancillary content. And even through the AR apps, they have value with the consumer, but it wasn't as deep of a connection as the VR. So there's a lot of different options when it comes to how to market your brand or your entertainment property. And it really just depends on the objective. And also it really depends on the execution.
Yeah, I mean, content is king and context is queen, and they must be married together. So whether you put it on Instagram or Facebook or you put it in VR or AR, depends on what your goals are. If you're trying to show off in real estate a property, AR is mobile at least, whereas virtual you have to be more immersed in the experience. So that was really helpful, and it's interesting because today, James Giglio, did I say that right? Giglio?
Half my family says that. It's Giglio.
Giglio. Today there's an article in the AR Post about which should you use, AR or VR. So, and he takes this to a different level, to the experiential level, where you actually are on site using activations, and it's very interesting. So, let me see if I get this video to play. Hopefully. Which I'm ready to play.
All right.
I want to do all of that.
We'll do some fun stuff.
There we go.
Play it again. Well, Cynthia, thank you for that introduction. Thanks for having me. I'm honored to be here on this panel with such an esteemed body of content producers and professionals. And so MVP Interactive, we are a consumer engagement technology company. So we really look to enhance brand experiences through experiential technology. As you saw by that video, we do heavily focus in and around professional sports venues and properties, as well as tentpole events like All-Star Games, the NFL Draft, so on and so forth. And one of the things that we've seen recently in a shift of, why this technology is so important is, it's really brands are evaluating this as a new form of media, right? And it's less about getting messaging across on a radio spot or a TV commercial and really connecting consumers with the brand in an impactful way, very similar to what Nicole was saying about, really being engaged with VR experiences, where research is now showing that millennials, Gen Y, will pay for experience versus products, right? And so marketers are really focusing on how we can really engage with that consumer alternatively, right, from traditional methods. And so professional sports really allows for a perfect opportunity for these engagements to not only help enhance that game day experience and justify a very expensive ticket to attend. And so properties are now focusing on a real holistic experience, almost the way Disney would evaluate what your walk through the park would be, and making sure that there's touch points throughout the entire time that you're inside the park. And so the timing has shifted in professional sports in that owners and facilities are focusing on that holistic approach, and being able to bring technology, a cutting edge technology that isn't quite critical mass of a consumer level, VR. I don't think there's a lot of companies that integrated hardware, and I think raised a ton of money from Silicon Valley and what have you, where it hasn't really hit a scalable consumer market base. So being able to use and leverage brand marketing dollars and events to bring this technology to the consumer is really important. And so there's a lot of value and gratefulness in working with these brands to kind of evangelize and give us the opportunity to work with these type of technologies. And so one of the comments that we were talking about earlier was really hearing the messaging come from the other side of the phone now. In business development efforts, we're evangelizing our capabilities and talking about AR and VR and how these technologies can engage consumers, but now we're starting to hear that messaging from the brands or the property owners or the agencies, clients. Yeah, exactly. And so it's a really rewarding experience to kind of see this stuff hit Main Street, so to speak. And so I think, as most of the room here being content developers, it's an extremely positive outlook for the future and being able to do all these cutting edge engagements because it is valuable. It's the new form of media, and so I think that's really exciting, and really allows us to kind of stay on that cutting edge and trend to innovate and develop, and that could even transcend AR and VR. And it's funny because 6 years ago when we started the company, VR wasn't really quite a capability, but putting our talent to work and really keeping pace had allowed us to really become leaders in the space in some degree. So yeah, I think it's a very positive outlook for all of our futures in terms of technologists leveraging the brands, agencies, clients to bring this to the overall consumer.
Yeah, I can't wait for you to hear about Marcy, because she brings the next really to the world of, it's so easy with AR, not easy, but 6 years ago it seems, 8 years ago you didn't say you left your house without your phone. You know what I mean? Like now you're like, what do you mean you don't have Wi-Fi when you go anywhere? But you were talking about the fact that it's easier to understand, more immediate AR makes sense. In that VR has not so much taken hold yet in the mainstream market, and it takes 6 months minimum now. It took years 6 years ago, but now it takes like 6 months minimum. But when it comes to VR in retail, that is a growth business that is not going away. It's not dead. In fact, it's quite vibrant, and Hotbit VR. Miss Marcy Boyle here is here to tell you about the VR retail experience. How many people have retail type products that you're trying to develop, not just mobile? And how about VR? Okay, good. Thank you.
Hi. My company is a new platform. We have not yet launched for experiential retail, a new way to shop that's very native to virtual reality. And what we're doing is sort of taking the best of what's working in brick and mortar and experiential marketing and putting it in digital space. Brick and mortar shopping is in big trouble. Probably many of you have heard about the retail apocalypse. Over 9,000 million square feet of brick and mortar retail has shuttered in the last 10 years. Another 6,200 stores have announced closures. Pretty soon, it just won't make financial sense to use brick and mortar real estate as a showroom for products. There's one growth sector in retail, and that's experiential marketing, what James and Nicole have been talking about, which is those kind of branded shopping experiences or product launches in big cities usually. You know, if you're in New York, LA, London, Philadelphia, San Francisco, you can go to a Kanye West, Adidas, Yeezy launch, or you can buy, you can go to Rihanna's opening of her makeup line, and it will be a fabulously decorated atmosphere, and there'll be wonderful drinks and a party-like atmosphere. What virtual reality will allow us to do, how many of you play Fortnite? Any of you at the Marshmello concert? Okay, imagine Nike doing that in a couple of years and around the world with influencers and a branded experience in 3D digital space where everyone can go at the same time. You don't have to be in New York, you don't have to be in Philadelphia. What's better than buying Rihanna's lipstick? Buying it in the room with Rihanna during a performance or right after. You know, with VR, we can create those kind of branded shopping experiences as a complete brand safe environment with digital activations. We can move, this is all a long-term incremental process that's happening in the real world, and we're bringing it online gradually. It just won't make sense soon for brands to
but imagine,
be so asset heavy.
I'm just trying to picture 19.3 million Game of Thrones fans throwing parties.
Exactly.
And instead you have like a virtual watch party where you can then buy the pin that they're wearing, their Signia pin or something like that, when you have, you know, that huge fandom following that they actually get to be physically with their families or friends and purchase at the same time.
It's coming. And if you think about companies like Amazon and eBay were launched in 1995 when there were 18 million Americans online. Well, as of 2018, there were 22.4 million Americans using virtual reality regularly. It's time.
And it's a global reach too, because America's got its own
yeah.
challenges, consumer-wise and FCC. I mean, every country's got its own challenges, and then we have, you know, China and other, you know, things that are getting in the way. But their boundaries are erasing, and the future is now.
The future is now.
And you are here living the development of that, which is, I would imagine, probably about a year from now, you'll have some video to show how it's actually occurring.
Yeah, I'll be able to talk
some
about
proof
what
of
I'm doing.
performance. Well, it's time consuming because just like I said, you know, even doing this 3 years ago, it took forever to do these sorts of things, and now it's forever is shorter. And audiences are beginning to demand instantaneous interactivity so that when you go to a movie and you have your picture taken, then you can share it on email and say, I was in that movie, with the kinds of things that James is doing and some of these guys are doing with the museums and everything else, and using it for social good, empathy, for, you know, PTSD and the health. There's just so many great ways that the Hollywood audience is able to tap their creativity and tell stories in different ways than we've ever had before. So I'm going to just first say thank you, panelists, and thank you, everybody, for coming. And because we got a little bit of a late start because the other one ran over, I'll take maybe 2 questions, and then the panel can stand to the side and we can do more. So I'm going to just start with him just because he's right there. So, yes, sir. Thank you for coming.
I've been in the event live streaming space, so we are an early adopter of the AR, VR experience, work with Google. 2 issues one is the bandwidth, the other was the parallax effects. It's good for merchandising, but for a live event, which it's consuming, it takes time. I'd like to know more about the parallax and how some of the equipment becomes.
You mean like if you're in the museum and you have the Gettysburg, can you purchase within the app? Is that?
When you actually watch the event.
Oh, while you're watching it.
For a long time, it still affects you. So there's some of these technologies that are evolving in parallax to make it much more.
Do you guys know what he's?
I think
don't
he's
know
talking
who's-
about the hardware not
Oh,
being
okay.
advanced to
Oh,
the
okay.
point of, you know, complete comfort for
ROI,
everyone.
yeah.
Yeah. I don't know if anyone's a hardware person up here. I'm not, but, you know, there's always developments making it more and more comfortable. Things like foveated rendering, these very, excuse me, like 8K headsets are beautiful and gorgeous and make you a lot less nauseous, but they're also super expensive, right? So, you know,
so
I think,
let's,
you know, people get their sea legs differently in VR. It's never made me sick, but I watched the Murnau Nosferatu, and when it's an old black and white movie, and when they're on a boat, you know, getting a little queasy, and that's flat, you know, 35 millimeter film. So it's.
Well, hold on. Is that related to this, or because I have one more question and she had her hand? Oh.
So I just recently went to a virtual conference for small businesses, and I was stoked because, you know, you go to the main room and then you go to these different, you know, seminars or whatever. But I'm a producer and I'm looking to expand in VR and AR. And I see like going inside a beauty supply store or a beauty salon and learning about hair or, you know, just an educational basis. So coming from like a shoestring budget, is this feasible, like to get involved in this, or is it like big bucks to work with, you know, do what you guys are doing? Just curious.
Well, that sounds more of a development question, just in terms of the practicality. I mean, we've followed a nearshore path in terms of working with developers that we have very close relationships offshore. It gets the cost down a little bit, and you can, you know, development is development, and as long as there's an AR kit or some kind of capability to do something, you can get your production costs down so that it's practical and not that different from other types of software development.
Well, you know what, we're just going to stop here and then you can ask the panel. But I wanted to say, you know, afterwards that you mentioned that, like, for example, Philadelphia, was it you? Who was it that was saying Drexel is doing the gaming?
Yeah.
So people are getting better trained, so the workforce is becoming more available, and the more people who know how to do it, the more the cost comes down, supply, demand, like graphic designers, you know, 15 years ago compared to today or whatever. So as people continue to get more immersed in learning how to do it, we're growing this new culture. I think that'll help with some of the costs for the development people. So sometimes looking at universities and seeing what's happening is a way to find some talent that you can grow with. So that's just another option.
Well, VR, for example, the skill that a lot of people are using for VR is Unity. Unity is the same product that we use for gaming and for animation. Like you go see, you know, full animated features done in Unity now.
And you can learn Unity free online,
Yep.
and Unity's free.
Okay, so I know.
Unless you make a certain amount, and then you're not worried about
You
it.
can come up and ask. Thank you very much, everyone. Have a great day. Try to stay warm in what's supposed to be sunny California.
Yeah. It's over faster than I thought.
No grilling.
Yeah.
nonetheless.
Yeah, the pricing pass is more fun for like events and large places. But I think if they manage to make a cheaper version of it that people could buy, that could help them escalate the whole business.
You guys? Right. So we're kind of working on
Sure.
that. I think so. Yep. Oh, what's up, Kirk? I didn't even see you. You missed our pre-chat.
Oh, okay.
Do you remember meeting?
I always mess up with microphones.
Hello, everybody. If you guys can get your seats, you're going to get started. Just want to double check that everybody is in the right session. Our talk is going to be about VR, AR, MR from a think tank perspective. You know, we're going to do it like a deep dive. Specifically focus on the creative, the visionary side of content and technology. So we have 1 hour and we have 7 people, you know, in our panel. So we're gonna deep dive into, you know, giving almost like, you know, 7-8 minutes to each one to be able to explain what they have been doing and how they got here. VR, AR, MR is actually a pretty big topic. Everybody here, I would like to know if you guys have some experience in VR. Anyone has done VR? More on the distribution side or the creative side? Creative? Okay, good. Anyone has done any AR development? Involved in AR as well? Okay, good. Mixed reality goes with both, so we're pretty much covered. So as a quick overview of what we are talking in terms of like new technologies and how VR and AR gets, you know, involved. There are many aspects of how you can use VR. And I think we should always ask ourselves what each one of those technologies' strengths are. And when you guys were building up your projects and, you know, even from like a writing or creative perspective, an understanding of what exactly each platform is and what are their strengths. So when we're talking about virtual reality, it's a pretty big umbrella. There are many ways that you can do it. You can talk about, you know, like playing games. It could be Beat Saber. It could be a simulator, you know, surgeon simulator. It could be so many things that you could actually do with VR in addition to watching and playing movies. When you're talking about AR, it's usually when you're using your phones. You know, it could be like the Instagram. It could be you actually overlaying and building up your own app where you put, you know, other objects on top of it and augmenting the reality. And that can also be using glasses. So when you're talking virtual reality is when you put a headset and completely, you know, takes you to another place. It could be, you know, Mars, moons, or anything related like that. When you're talking about AR, is actually the application itself when you're using phones and glasses that augment your reality. So I'm Danilo Moura Silva. I have been involved in a lot of projects, both on the VR and the AR side. Right now I'm working with a company that recreates location-based entertainment, very, very deep into VR, where you could have like real walls, you could touch different things. You know, it really feels like you are in a different place at the top level of VR. The previous project I worked on actually has a lot of different verticals, goes all the way up to AR as well. And I would like to let everybody do an introduction of yourselves, and then briefly, and then we can go over slides if you guys have slides to cover it. Okay? So let's start with David.
Sure. Hey, I'm Dave Birnbaum. I work in a field called haptics. So some of you have seen me before. I'm here all the time, and I'm always the guy that's talking about something completely different than everyone else because I'm concerned with the sense of touch and the amount of immersion that we can achieve with immersive entertainment and going beyond the eyes and ears and involving the body and the entire brain. I've been doing this pretty much my whole career, and I have a music and design background. Immersion Corporation, my company, we only work in haptics, but we work across a variety of different industries. So automotive, medical, gaming, wearables, mobile, many different fields. And personally, what my goal is to kind of bring the sense of touch to creatives and create the tools, the workflows, the design patterns, guidelines, all the types of things that creatives need in order to create new content for the sense of touch and to consider that in their process. So just leave it there.
Hi, I'm David Gull with Outer Realm, and we create content for real estate storytelling, and that's for new developments, and that's to showcase properties, get tenants, get purchasers before a property is ever even built. And what's interesting about this is just that words, 2D images, animations, all the tools that we've had up until the last few years are really subpar ways of telling people what a space or a property or a new development is going to look like. And so now we're able to truly immerse people in that, give them a sense for exactly what you're looking to build, and get them excited about it, get them enrolled in it, and show them scale, which is something you can't do with images, show them the complete picture at full 360, and then also place that into the context of the existing world.
Hello, so my name is Marta, and I am the founder of a company called Garage Stories. That we are a lab for innovation in the film industry, and basically our methodology is co-creation. So the way we work is by gathering creatives from all sorts of backgrounds, filmmakers, hackers, artists, musicians, designers, all those profiles that have a say in these new emerging mediums. And basically we organize labs that range from 3 hours, which is just about generating ideas on how to envision industries evolving to with the impact of these technologies, to longer labs, which are up to 2 weeks, where we actually work on challenges, either from traditional media companies that want to incorporate these technologies into their productions, or from technology companies that want to understand how to actually design immersive content. And basically what we look is for always highly talented professionals, and we bring them together and we have designer methodologies to be able to make the most of everyone's skills and inputs.
Lots of people will want to talk to her after this is over.
Hopefully.
My name is Mark Ricard. I'm a film producer turned VR producer, full-time now. And I started a company, content creation company called Virtuality in 2017. And our early works, we've been very fortunate to run a broad spectrum of experiential and narrative content. We've worked in volumetric space. We were the first credited with doing a volumetric Shakespeare piece in 2017. And our flagship venture is the America's Got Talent finalists Light Balance, and that's coming out next week. We have output deals with Amaze VR and 360 projector company called Brumex Technologies. And right now, our focus is on cinematic narrative as a driver in the immersive space, particularly the tenets of Hollywood movies in VR. And we've done some very exciting projects that are in the works. Right on cue, I see the director of one such project walk in. So I'll finish now before he gets up here and starts telling you about it.
Excellent. Thanks. Hi, my name is Yvette Vargas. I am a content creator, storyteller, writer, director, producer, both on the traditional side and then obviously on the immersive. I work in television, films, and VR, AR, and MR. My focus from the very beginning of working in this space has been how do you tell, or answering the question, how do you tell a narrative scripted story and immersive? And I pretty much set out to fill in some of those blanks for the last 6 years. And so much so that Final Draft actually commissioned me to create the immersive play, which is the professional script writing template for VR, AR, and MR perspectives. And so with that, speaking of tenets, every one of those script writing templates, there's a methodology that really speaks to the tenets of VR, the tenets of AR, and MR obviously is a combination of the two, depending on what you're trying to achieve there. So very much my particular goal and just my passion in the space is telling scripted narrative stories in VR, AR, and MR.
I'm Eric Navarrete. I'm one of the co-founders and the chief marketing officer at ARWall.
We're an augmented reality startup company, and we create larger-than-life illusions. One of the things that makes us unique from other augmented reality developers, though, is that our illusions do not need a device with them in order to be seen. They can be seen with the naked eye. So we think that this is an exciting development because fans and users of this sort of content, this is a more frictionless way for them to engage with it, and to also have the people standing over their shoulder in the crowd see exactly what they're interacting with and become more excited to try out those sorts of experiences as well.
Awesome. Eric, we actually want to go back to you at the end, if you can speak a little bit more of how you guys actually are achieving that. As someone on the space, I got very curious on how you guys are actually achieving that. We thought it would be nice to put a few videos to explain some of the things that we're going to talk about, specifically about the new technologies and what's the part of the experiential content going on in the space. Before working on this, Pharaohs, an Egyptian project shot in Cairo, I actually was fortunate enough to work on a movie called Seven Miracles, which I will play a video right now. It is a mix of, it's about 80 minutes content, it's a mix about 70 minutes of 360 video and volumetric video. And what we mean by that is 360 video, whereas most of the content started, like 2-3 years ago was made, is you have multiple cameras shooting in all directions outwards, and you stitch that image into one spherical volume, and you have to be very careful on how one camera blends to the other. So here's an explanation of how you should be very careful to avoid that to be seen. That can break the illusion. It's pretty interesting because you can actually look all the way around. You can look into any direction, but a few challenges with that technology are you're actually stuck into a position and a height. So we made it as a seated experience, so you can really feel like most people, as you can see here in our panel, everybody sitting down has pretty much the same height, but when you're standing up, a lot of people have a lot of different heights, and kids can feel like if they put a camera in a human's, adult height, it can feel like they're flying or they're too low, so there's a little bit of those challenges. And here's the same scene shot in volumetric. When you shoot in volumetric, 6 degrees of freedom, you usually scan the environment separate from the actors, and you have to really do a lot on the post-production side to be able to combine those two scenes. You can see here that we have a relight to make those two scenes to, blend together. It starts to get pretty much visual effects everywhere. Let me skip a little bit just to give more time for everybody. So here's the background of how, the making of. So you have the actors being shot in surrounded by a dome of cameras. And what you get out of this is you have about 30 to 60 3D models that are real geometry. When we talk about 3D, and don't get confused with stereoscopic, I'm really talking about a real 3D model that you can actually rotate, you can walk around, and then we go to a software like Maya, Houdini, or a game engine like Unity and Unreal, and assemble all of those pieces together. So you can see here the environment was actually scanned using technology called photogrammetry, but you can also use laser scanning. Photogrammetry has become very popular just because it's very accessible, it's fast, and it's very affordable compared to laser scanners. And here's how the environment was captured. So when we are talking about true VR room scale, the production is actually very challenging, and as you guys are probably familiar, 360 is also very challenging. The advantages of 360 video is that it's streamable. You can just click and you can start watching the content right away. In volumetric video, you have to download all of those assets, and really, becomes like a file that you have to download first, to go and watch. So, but you can also use those assets to create, the game environments later. You can also have the volumetric artists and actors being used for an AR experience later. So it's kind of like segmented in a way that you have the, your talent, your live action, you can also use that for an AR experience. And that's where Eric, I got, interested to see how can we combine those two. And now I'm going to pass to David, who's going to go a little bit over the touch part.
Thank you. Okay, this is a subset of slides that were given to a group of people who are designing devices and user experiences for AR, VR, XR. And so just really briefly about immersion. So as I mentioned, we're in a lot of different verticals, and we build the kind of infrastructure to enable tactile feedback, haptic feedback to be integrated with touch screens, all kinds of different devices. We're seeing more of this kind of migrate onto the body with wearables, and we're also seeing higher and higher fidelity gaming interfaces being created. More and more haptic actuators of higher quality are being integrated into game controllers. If you go to an LBE, sometimes you're putting on a vest and you're feeling haptics in the vest or in the rifle that you're holding, etc. And this is kind of a very funny short little video. This is CyberGlove Systems, but this was actually an immersion product we developed. So this is what haptics looked like in the 90s. And if there was audio, you could hear really funny 90s electronic music, early 90s electronic music. Anyway, so we've come a long way, and we're seeing the devices shrink and shrink. Now, it's different between haptics in VR 1.0, which is what that device was for. It was a couple $100,000 or whatever it cost, and we sold a few per year to large research labs. Now we have VR 2.0, where stuff is really becoming democratized, right? But the difference is now we have new models for engagement. So we have LBEs, we have a renewed interest in pop culture, and this little movie, Ready Player One, really set the expectation of a lot of consumers. Now I get the question all the time as a haptic designer, when am I getting my suit so that I can be like perfectly transported? And of course in the movie it set this almost unrealistically high bar that VR means perfect transportation. You will completely feel like you're immersed. And in a way that's a little bit distracting, because you can do a lot with today's technology. You don't need to create the Ready Player One experience to make haptics enhance the content that you're making. For example, if you have an AR app on mobile, or sorry, a VR app on mobile, AR app on mobile, you can use the motor in the phone to make the app more engaging for people. These are just some high-level design guidelines for VR and kind of how you integrate haptics with a VR experience effectively. You have to think about things like story points, performance actions, environmental effects. So these are the types of things that our designers are familiar with, and we promote to the industry. I won't get too deep there, but just to know that there's a systematic way of going about this. Now AR is completely different from haptic perspective, because VR is almost an easier problem to solve. You have an expectation that the user is going to be either holding a device or having something on their head or their body, and they have this expectation that they're going somewhere and they're changing modes from their normal course of life. They're like leaving the real world behind and entering a fantasy world, and so they're willing to do things like take their shoes off and put on a vest and put on a thing and blah, blah, blah. It goes on and on, because they're like, I want more stuff on my body. I want to be totally immersed. In AR, it's the opposite. AR sets the expectation that reality is mixed with virtuality, right? And so the less, the better. So from a haptic perspective, we're like, well, then how do we engage your sense of touch there? So we're looking at things like wearables that don't interfere with your ability to use your hands. Let's say you can touch an AR object that's not really there, and then you can reach out and open a doorknob, and that's totally seamless. And AR, of course, as you may know, not to get too semantic, but it isn't really a specific term. It's actually interesting. At Digital Hollywood, AR typically means, what I found is magic window, you're holding a phone, you're looking around. In other industries, that's not really the case. That's really seen as kind of a stepping stone that's maybe even a little bit disappointing from an immersive experience perspective. So we're looking at things like MR, like what does it really mean to have a mix of virtual objects and real objects in the environment that are so consistently mixed that they're even mixed for your tactile sense, so that you can't even, eventually there's just no difference between them. Like you can reach out and touch something that is not there or that is there. The designer intended that. So we have these kind of guidelines for what haptics can do for immersive technology. I won't get too deeply into them, but there are certain things that they're very good at and certain things that are not. And so as creatives, you can learn this as a craft. You can build a kind of this, we could talk about film language and film, and people are so familiar with film tropes that you can do things as a director and just expect the audience to get it. And we're not there yet with haptics, but we're sort of getting there. There are kind of the beginnings of a haptic language akin to film language being developed. Okay, so what? So your content is already haptic. I like this line. A lack of haptics has a haptic quality all its own. So at this point, if you have an experience that you're showing on a device, whether it be a game controller, a phone, whatever it may be, and you choose not to design the sense of touch alongside the other modalities, then that's a creative choice that you have to own. I mean, at this point, I think it's fair to say that. And so I would encourage you to think about that. Like, a lack of haptics has certain qualities. It makes you feel like you're ungrounded. Maybe there's like the objects you're interacting with are ghostly, unstable. If you want that to be the case, go for it. If you don't, if you're trying to ground somebody in the experience and make them convinced of place and self, and that they've been transformed, then I would suggest that haptics are a key part of that. More sensory bandwidth is more engagement with content. This is actually kind of a neurophysiological reality, right? If you want your viewers to engage with the content because you want whatever it may be, it's an advertisement, you want them to recall the marketing messages, you want them to spend more time interacting. If you engage more of their nervous system, more of their brain, more of their bodies, you're going to get higher levels of engagement, and you can measure that dozens of ways. We've done some of those studies, and it really is true. For the marketers, like you're more likely to recall a marketing message when you have experienced that message concurrently with a haptic stimulus. So that's huge, right? And then, what does that say? Oh, so then haptics are good for different types of messages, and as creatives, we have to understand that and know what it's good for. Like, you're not gonna probably create a haptic sensation that correlates to the spelling of a word, right? That, like with Morse code or something, so like that's not what it's for. If you want to raise people's sense of urgency or anxiety, you want to make people feel like they're intimately or closely connected with other people, you want people to feel a sense of stability and concreteness, all those types of design values haptics can do. So knowing that palette is a critical part of the process. So we did some AR projects this year that are new that I can talk to. One of them is called Metalhead. It's an AR game, and what's interesting about this is it's meant to be played with the phone being held like this, and you scan the floor. It uses AR Core. You scan the floor, and these robots start to fall all around you and hunt you, and you can feel them walking towards you even if you can't see them. So what's cool is we're using haptics as like a game mechanic. So now, even if you don't see anything in front of you, you feel footsteps coming closer and closer, you're looking for it, you finally find the robot, you can kill it, and of course you feel haptics with the different weapons that you're using. But what was unique about this was we actually found like kind of a new creative possibility for haptics in mobile AR, which was cool. Next one is Materializer. This was an interesting project. The effort was to see whether we could create the illusion of material properties at a distance. Using just the phone. So again, this is not a great actuator in here. It's typically medium to low quality actuator. So the idea of creating, the difference between wood, boilerplate, grass, carpet, that was a real challenge. And if you set the expectation that you're going to feel grass, and then you put your finger on the screen and rub the screen and you feel vibrations, then you're disappointing people. You've set the wrong expectation. But what we found is with this little robotic arm in the corner, it's like just like if you use like a tool to reach out and touch an object, and the sensation you get is mediated through the tool, your expectations are different, and you don't expect that that's actually going to feel like cloth, but you are going to feel, as you poke it with the tool, you're going to feel that it's there, and you're going to see it react. So we're doing all these kinds of tricks to kind of make the actuator in the phone good enough to get people to be convinced that they're actually touching grass, carpet, et cetera, and it worked pretty well. So a couple of examples of how haptics can be used in unexpected ways. This is a haptic synthesizer we developed alongside that project to kind of show the creative possibilities for game designers who are working in AR. how haptics in AR can be uniquely synthesized, and so there's certain design parameters that we've curated here. So these are my 3 takeaways for you. Your content is already haptic. Haptics creates more engagement, so if your goal is engagement, think about that. And haptics have certain uses that are better than others.
Awesome.
With that.
Now we're going to pass actually to David Gold as I switch to your presentation, Martha.
Okay.
David, as an architect and a founder of Outerrealm, like what exactly motivated you, and how do you see VR and AR opportunities?
Yeah, absolutely. I mean, for me, as a design expert and having 15 years of thinking and designing in 3D, I realized that I still had this fundamental limitation in the human imagination, which is to visualize something that's not simply right in front of you. And so we finally have these tools available. The first time I put on a VR headset and stood inside of a project that I had designed and realized that it wasn't what I expected it to be was kind of that watershed moment. And I think now, the goal, the mission of Outerrealm is to bring that power of, the ability essentially to see the future to other people. And so that's really what we're setting out to do. In our case, it's not as entertainment oriented. It's really, really practical for people who are looking to design a building or looking to make a very, very serious investment, which real estate is. The definition of high ceilings is obviously widely varied. Everyone has their definition of it. We've also done something like a supersonic jet as an enterprise project, and again, the definition of large, comfortable seats is subjective. And so we're looking at this tool as a way to concretely communicate about something that doesn't exist. And it's been really, really powerful for people. We've had folks purchase homes before the first shovel's ever even in the ground. We've had folks raise money up to $100 million for projects that are just in there initially were just figments of their own imagination that they then had to communicate to other stakeholders and investors. So yeah, storytelling tool, but the main difference for us is that it's spatial and that it's immersive and that it can communicate about something in a way that 2D images or drawings never could.
Yeah, that's actually one of the things that VR does really well is the sense of scale, right? I've seen pictures of Italy many times. When I went there for the first time, I was like, whoa, some of those statues are actually gigantic. So can you give us a few more examples of what you feel like would be like the key advantages of Outerrealm?
Yeah, so I mean, the other main one is that whenever you're communicating about a project in 2 dimensions, you're always leaving the rest of the project to someone's imagination. And when you're doing that, when people are making large decisions, they are making them based on confidence level and trust. And when you can understand something fully, you have a higher level of confidence and trust. And when you don't, when things are left to your imagination and you're wondering if the person that you're talking to, the words that they're saying, if they match your words, then you have less levels of trust. So elevating that, getting people to the level of confidence that you have alignment on your vision is really what moves the needle. And yeah, that's it.
And who would you say that would be like your main customer at this point?
The main, it's an interesting dynamic because the customer, the one that pays us, is a developer or a broker or someone looking to tell the story, but the other customer is the end user, the person looking to make the purchase or move into the building. So we really have different stakeholders. And one really interesting thing that I think is a little different than entertainment content in VR that we've had to design around has been, how do you give someone a really highly curated experience? So we actually think of our scenes more as 3-dimensional PowerPoints. And so we've had to design it, instead of someone in the scene controlling their experience, we have someone outside of the scene, a host, controlling their experience. So we have a whole toolkit that's a clickable or a touchscreen interface on a PC or HD TV that lets someone outside the headset control the experience of someone inside the headset. So that's been a sort of different interaction paradigm than what everyone else I think is probably working around, which is how does someone inside the headset control their experience?
Yeah, and I'm always going to be trying to understand a little bit of the business behind. Actually, I came here as a research and development engineer for Sony Pictures and left after 8 years to be working on innovative and new platforms and a lot of cool projects. And I think as I see a lot of also content creators here that are looking for creative and new technologies and work of innovation, you always have to figure it out. What is the right timing for some of those experiences, right? Yeah. So right now we keep hearing a lot of people shifting from VR to AR, but there are so many cases of successful VR experiences that I also would like to make sure people don't come out of the talk with like a label of what works or doesn't, but just like a good examples of what is the state of the industry at this moment. And I feel like Marta has some really good things coming up with the Garage Stories and how to help, also the community and how to showcase a lot of different projects. So I want to change to your slides, and you have the clicker, right? You start for you.
Sure. Yeah. So Garage Stories, as I mentioned before, is this meeting point, this playground, where it's not educational or we don't try to tell people how or what to do. It's about rather creating this space where people from very different backgrounds can come together and kind of make the most of everyone's insights. And also, we branded Garage Stories, first of all, because it was founded in a garage in Palo Alto, but also because we really liked what the garage evokes, which is a place where you are allowed to play, which means that you're allowed to take risks, because you're allowing yourself to fail. So out of this concept was born Garage Stories, and this was the first one we ever did. It was 2 years ago in the garage that gave name to the project. And for us, it was a complete test because my background is in film, and I had been running co-creation festivals with traditional media for several years in Europe. And when I moved to Silicon Valley looking for inspiration, I got in touch with all of these technologies, and it blew my mind the possibilities that it had. But what I found, also because I was in Silicon Valley, is that everyone was worried about the technology, fulfilling the expectations, but they were not working so much on the content. And that's how we decided, okay, let's do this test where we bring everyone together, not to focus on technology and hacking new possibilities for this, but just by what we have and what can already imagine that can be done. Because technology, we assume that no matter what is going to get there. It might take 5 years or 10. But it was about more the stories and why we use them for. And it was a complete test. So we just opened the application form. Garage Stories was nothing that anyone knew. It was the first time we were ever doing anything. But we were mind blown because we started receiving applications from people working at Google, at Facebook, at Magic Leap. So that was when we realized that what we're doing kind of makes sense. And basically the first time it was just a weekend where we bring 20 people. It was never about organizing large events. It's more about selecting the right people to come to the events. And it was 20 people a weekend. And it was engaging on a conversation about where are we going to, what had everyone experienced with, and getting all these brains together to see what comes out of it. And since then, well, we've been lucky enough to be organizing labs and workshops all over the world. We've been running workshops at the MIT, at Sonar, in South America. We've been working a lot, and also in Europe. And I'm going to show you some examples of the kind of projects that have come out of Garage Stories, which, as I said, it can range from 3 hours to 2 weeks. Normally, the average we do is 1 week though. So at the very beginning, when we opened Garage Stories, especially me, that I was coming from a film background, the most obvious kind of step was into VR. Just the content and just focusing on how do we create immersive VR short films. And I'm going to show you a couple of examples. This one is the one we created at Sitges Film Festival. It's a fantastic film festival in near Barcelona. And here, what we experienced was with creating dual experiences, which means that the piece was thought to be experienced by 2 people at the same time, which were sitting next to each other. And if I was sitting in one chair, which was the chair of the doctor, and the other chair was for the mental patient, I will see distorted realities from each side. But if I was in the chair of the doctor, I will actually see the mental patient next to me. And I will actually also have a real person next to me. And what we're trying to do with this piece is to create organic haptics. So to encourage the real people through the virtual character to interact with the person sitting next to them. Also, we figure out that having this dual perspective also created more empathy for the story we're trying to tell, which was about the mental patients and how in a lot of psychiatric places they are just given medication with no further input. That was the message of the short film. And then also in Barcelona, in this edition, which was 2 weeks, we experimented with mixing VR with live actors. So the story will begin before you ever put the headset on. And this is an example of, oops. No. The piece that we did in Barcelona, we did 4. Normally out of each garage it comes 4 to 10 projects. In that case we're 4. And we showcased the story in the same music club that it was filmed. And basically it will be the room, a huge room that was the music club. And the story that they were telling was that music club was an analogic Facebook, which means that every time you go into the club, your memories are stored on a cloud that keeps whatever you did in that club. And once a month, the club opens its doors so people can go there to rewatch their memories and decide whether to keep them or delete them. So on the area where people was waiting, we already had actors that were teasing people's imagination into that reality that we had created. So there was a couple fighting about why had they to do that. There was another guy who was very nervous because he was never selected. But it was just side conversations you were hearing that were teasing your imagination. And when you actually get into the room where the headsets were, there was 10 high stools with a headset on each of them and a big laser on the middle. So whenever the door is closed and the session is about to begin, the laser got activated to select one person. Of course, the main actress was always hidden in the group and she was always selected. But what everyone will see is her memories, like popping up in shades of light, until they appear linearly. It was a story about how she met her ex-girlfriend, but at some point they start becoming blurry as she cannot focus anymore because her emotions are taking over. And at some point you will feel someone trying to grab your headset off. And it was actually the ex-girlfriend. She was remembering that she was super angry because she was trying to delete her. So the fight, the final story will finish live. And it had some good points about it, which is the story was live. It had never the same ending because the girls were also improvising. So it all had always different endings. And also we figured out that people had like really strange reactions to that. There was a guy that actually put the headset on again, thinking that the show was not over. Or there was people who were trying to be nice, like, no, it's okay, like, you girls should try it. And other people that were like, yes, she was trying to delete you. But it was interesting how breaking what you think that's happening, because with the headset, you're kind of isolated and relaxed. If that's broken and then you actually have the people that's real in front of you, the reactions were really interesting. And it's
awesome. That's a great story. It looks like the computer died. Some of the connection here died. But,
And just very briefly, then what we did with that is that we realized that we were like getting a lot of like nice insights, but also we realized that we were just focusing on the content, because the way we frame it is how to tell immersive stories with VR. But then we realized that maybe we had to take one step further and not only think about the content, but also the container. Because who said that that format was the good one? Maybe we had to take a step further and broaden it to AR, MR, VR, all sorts of technologies, and kind of think, okay, why should it be in a headset? Why should it, like, completely rethink it from scratch? So not only designing the content, but also the container, and imagining how do we want these technologies to actually shape industries. We mainly work with entertainment, but since we work with the storytelling, it can be applied to many industries. Like you were speaking, for example, in the real estate. And I had prepared 2 more examples, but maybe if we can fix them, I can.
Maybe like I can give him the turn and later I can show.
Yeah, I think we have just 20 more minutes left, so we're going to go back to it when we have time. So Mark, as an award-winning, like film producer and VR creator as well, when you see both like VR and AR technologies, what's really what excites you the most, and what would you say there are like some of the best things that you created that you are proud of?
Well, our next piece is called Blue Screen of Death. It's coming soon. But that question can probably be answered singularly in the sense that one piece I alluded to earlier but didn't provide detail on is a thing we shot last summer that was a VR series and a 2D feature film at the same time. And it was acknowledged as the first attempt to do that, and possibly the last, because it was a huge undertaking.
But I think it's good to talk about this, because actually one of the things that we did on that movie was actually to shoot it in 8K and then cut the 1080p version out of it from the 8K, so you have close-ups. You can also cut in 4K, but a little bit further. So I think it's important for us to talk about how do you achieve multiple platforms, right? And I think that's what exactly we're trying to do when you shot. But you shot 2 times, like with a 360 camera and also a flat?
Yes. Well, in this case, what we did is we shot 360 in the mornings, and then we would come in and do 2D coverage in the afternoons. And the process was assisted largely by the fact that it was a single location, and that was by design because it would have been too difficult to do company moves. So we built it in a theatrical conceit and exploited the tenets of the story to benefit the efficiency of workflow. And you and I talked about that briefly, the notion that you can utilize a 360 master asset as the predecessor to what the 2D content actually is. And that's where I do get very excited on 2 different fronts. First of all, a happy accident that was born from our workflow was that despite the fact we were looking at doing a 2D feature film and a VR series as separate sort of standalone pieces, what happened as a result of having the 2D assets, essentially, if you think about a 360 piece that you may be shooting and the limitations of that with the distance for actors and all of the inherent issues that come with the 360 workflow, we found that getting the 2D assets and being able to utilize them concurrently with the 360 affords a new level of immersive narrative. And by that, without getting too detailed, what I mean is utilizing the 2D assets along with the 360 assets in immersive space to tell a more robust and engaging emotional story, right? And this is a very forward-looking consideration, but we really do feel that this piece, albeit it was a kind of a test piece at a lower budget, sets the table for what's possible going forward, because I think largely, and when I look around this room, I see a lot of faces that I know. This is almost like a immersive family reunion in here, but so I'm not telling people things they don't know necessarily, but I think largely part of the problem with the fits and starts of the initial foray into the immersive landscape for brands and where the money was for content was that what came back was not engaging. It wasn't narrative driven, and it left sort of a kind of a scar on the landscape to where people thought that what they had seen was the max that was available in terms of the engagement there, and it's quite the opposite. In fact, the driver of this way of thinking is really to coach people up that your 360 asset can be the master asset, and whereas right now it's usually used for sidecar marketing and a secondary afterthought or an ancillary feature. If you dedicate your shoot to be, and I should not say 360, by the way, I should say VR, because it's irrespective of whether you choose to ideate in 360 or not. It's easier if you don't. But your VR asset can be the master asset from which you capture a more immersive story, and then you can, if the resolution affords, you can clip out what you need for the 2D assets and then maximize across platforms that way. And 2019, you heard it here first, or maybe you didn't, but that's where things are headed. And as soon as that catches on as a workflow and a viable, way of thinking among the people who are clinging to the kind of 2D landscape as the only way it's ever been and will be, you're going to see a complete reversion. And it's not that sides are at odds. It's just more efficient, and it allows you to port into every way of displaying your content, which is what all of us as creators are actually chasing to begin with, and brands for that matter.
Yeah, and actually, the volumetric scenes, which are already inside of like Maya, Houdini, or something, you can also make the 2D version flat to add to the story that you're trying to tell. So speaking about stories, we have Yvette here, which is an award-winning writer and creator. You have worked with also a lot of big brands and IPs like Fast and Furious and Lord of the Rings. When a client comes to you or a partner to say, hey, let's talk about this story, and they're going to create that in VR. What do you see, just because I feel like a lot of the people here is also content creators, so I want to kind of pick your brain a little bit of, if you could talk a little bit of VR and AR, how you separate the two and how you focus on the strengths of each.
Sure. In terms of when a client or a partner comes to me, or I go to them to pitch an idea, it's always starting with the narrative. What story do we want to tell? Regardless if it's VR, AR, or MR, what is the story that we want to tell? And from that, also, and obviously, what is the experience that we want to tell? So it's really answering both those questions. What is the story we want to tell, and what is the experience that we want people to feel? From there, and I'll actually share an example of this was a feature film called The Current War, which has actually just received a release date. I wrote and directed the virtual reality experience for that, and produced it as well. But this was a case where the film had already been shot. It was in the process of post. It was still being edited, and a lot of post work. It was very visual effects heavy film. And I was able to, of course, read the screenplay and see some footage, and I ended up pitching a narrative for the virtual reality experience, which basically took place as soon as the actual theatrical film finished. So from the ending of the film, the VR experience began, and I just pitched that particular narrative the way that I would pitch any narrative, but including what is that experience, what is the potential agency of that, how can we deliver it for maximum impact, and what is the messaging also. If this was a standalone piece, if the film did not exist, what is this virtual reality experience? And that's something that I'm always engaging clients and partners to answer with me, because in terms of where we're at, I think that we have to really be thinking of these experiences that we are creating, where they really can be standalone, because content is everywhere, right? The audience is everywhere, and there are various entry points to every piece of IP. So whatever it is that we're working on, especially in our industry here, is that it has to be the absolute best that it can be, because that may be the entry point into an IP or potential franchise. So on the entertainment side, these are very important conversations to be having. So that's usually where I start there. What is the story? What is your experience? And what is the end game and the end result that we want? In terms of the actual work, the storytelling itself, going back to the immersive play that I created for Final Draft, and yes, there's definitely a version for virtual reality storytelling, augmented and mixed, because there are differences as we know up here, clearly. But one of the things that, for myself, especially with mixed reality, that really struck me as both a writer and a creator, and then also having a similar experience as David, where he designed something and then put on a headset. It's like, okay, you know what? It didn't quite work the way that I had planned it. One of the things that I find, especially in AR and MR, is that the design, the actual, the opportunities to engage, the design of that is just as important as the narrative. That's definitely something, a conclusion that I've come to, and also, my teams and the people that we work with, because there is a process to actually engage with the narrative and the whole experience of it all, where there is a human design element that is necessary. And then there's also the onboarding process of that. And all of that becomes part of the story and the experience. So these are also additional elements to be thinking about with your client, with your partner, or just even when you're pitching this, because these are answers that have to, these are problems that have to be solved.
Yeah, this is what I really like about this panel here, is because we have a mix, the technology, also the content creation. Eric, can you tell us a little bit more of how can we use your amazing AR wall technology?
Certainly. So we initially started the company off as a filmmaking tool, and it was initially conceived to get rid of green screen for productions. So we created a large-scale displays, typically with LED walls, and we would have the virtual set extension, so to speak. Basically, the thing that you would composite using that green screen plate months down the line, displaying that live on set, so the performers can see what's happening behind them, they can react to the things happening around them, and you get a final shot composited in there, and you get rid of the months of post-production, which we thought was a pretty exciting idea, and a lot of people were excited by it. But what we found out almost immediately after creating this and showing it off to people was we had a lot of people say, like, but could I use it for this? And that is why we started to pivot away from being exclusively focused on filmmaking and more into experientials and marketing and those sorts of things. So we can do things like take an asset from a feature film. It's funny that Ready Player One gets brought up so often in this sort of space, but we, for instance, designed something for them where we took that egg from the film, the actual CG asset from ILM, and created a life-size exhibit where users could walk up to it and pretend to touch it, and when they take that video selfie with their phone, it looks like they're back, like literally standing inside the movie. So we could do things along those lines. Where you can experience it, I mean, we're talking to agencies and brands and studios about adapting the different works they have and creating basically immersive experiences. I think that I'm really fortunate in that I work at an office where everyone inside of it has like a playful mindset, and they're very curious. And we're approaching it from, I think, the same vantage point that a lot of users, the end users, have, is what would be fun about this? What would make it fun about going into the world of Ready Player One or any sort of thing that's going out there? And trying to figure out like what would be unique about that experience, and then also having the tools to build that thing is really exciting. And I think that's the most exciting thing about what we're doing, is that it's not just about creating the content, we're creating the content that we would like to use as well.
And do you see AR wall also being used for virtual production specifically? Like for, I will give an example, The Lion King, the new creation, totally CG, has been heavily used in virtual production, which is one of the things that as creators and technologists, you can also really use, virtual reality and 3D assets to be able to tell your stories. Have you also experimented a little bit on that side?
Yeah, I think that the uses for it for virtual production, I think, are already pretty existent. Like, there are equivalent tools that are out there that are doing it. We could certainly move into that space a little bit as well. But I think the thing that excites us most is being part of that final shot. And that's something unique that we bring that other AR, VR tools that filmmakers have access to can't really do at the moment, is we can give you that shot and you walk away and you have it locked in already.
Okay. So we have actually 5 minutes for questions. Yes?
So, quality of filmmaking in VR has been always a problematic issue. What are the tools coming out in 2019 that will help bring the quality up to what we are used to as consumers of 2D, right?
So the question is related to, like how to actually improve the quality of, the content that is being created. We also have a challenge because usually the high budget blockbusters, they usually spend $1 million a minute. And how much can we do with the budgets that we have, right? So anyone want to specifically address that?
Yeah, I'm not to cut across anyone, but my knee-jerk reaction to that would be, I think the space is going to benefit greatly from higher mobile tracking headsets like the Quest, because they sustain a better resolution for the output, and then the move from CPU rendering to GPU rendering is actually gonna allow for more fluid processing times and higher resolutions, but quality isn't necessarily just what you see before you in terms of the crispness of an image. It's a lot to do with the storytelling as well. So I know I've got some people up here that have my back on that. But I think I mean, as a content creator, I stay in this middle lane of like, I'm creating content. The hardware wars and the platform wars and all that are happening on either side of me, and may the best company win, because I'll use them at the end.
I would argue that I think the technology is improving, and that's obviously going to be a big help. But what is going to make the ultimate difference is that we're beholden to, I think, 2D filmmaking techniques and styles, and I think that there does need to be a VR filmic language that needs to be created, and conventions and types of storytelling that the audience can use as kind of a starting point. A lot of people, when they put on a VR headset or attempt an experience, often that's the first time they've ever been inside of one of those things. So if there were some conventions that I think held, that would help not only shape the sort of stories, but also help usher that user through the experience and understand where they should be looking, how they should be engaging, and all those things.
Just wanted to add to that a bit, because I completely agree with everything that's being said. I'm definitely have been trying to, as well as many others, but create a language. Definitely create a language, because we can't help it. We can't help but compare VR or immersive to 2D, because 2D is what we know. 2D is absolutely what we know, and the immersive storytelling is just completely different. It really is its own medium. And even though I say that a million times, and many people say that a million times, until you literally experience it and experience the difference, truly what the difference is, and I'm really referring to just the premium of the content in the space that so few people actually get to see in the way that it was intended to experience. And when you do get to engage on that level, then I think most people get it like, oh wow, you know what? This is not film, this is not television, this is actually not like anything else, and these are the possibilities. So I completely agree with Mark. Let's just continue to tell great stories, and the technology and the storytelling will merge eventually, where you won't even be asking that question anymore.
Yeah, hopefully we're going to have much more, devices. It's kind of like a catch-22 at this point, the amount of people that can actually watch the content the way it was intended. Yes?
I had a question, I think, for the gentleman in the middle. You had mentioned shooting 2D in the afternoon after you shot in the 360 or whatever in the morning. This might go to kind of a cinematic language conversation, but are you being able to use that in the 360 environment to draw attention to?
Yes. And I'm glad you asked, because when Eric said that, I wanted to. By the way, that's like next year's panel, I guess, or talking about that specifically. But But that was a breakthrough for us in both the engagement and the rules of what the immersive landscape can be. It was a highly complex mathematical process that took weeks and weeks and algorithms and whiteboards, and I mean it was messy. But what we ended up with was the ability to inlay 2D assets, and an example being you see a group having a conversation and you know they're 10 feet away, but we can use what we're now dubbing emotional lenses as an opportunity to use the same footage. It's not the same take necessarily, but you can't really tell. But you use the same footage from the same scene of the same actor, and you can key in on the coverage of what the primary dialogue is, as well as the reaction shots, and blend it in a way that makes it so much more interesting. I mean, the biggest feedback for us has just been that people watched something that was 10 minutes and they were like, oh my God, that felt like 3, and it kept my interest the entire time, which to us checked a huge box, because prior to this, the big knock has been like people are getting bored. If you're heat map, tracking the heat maps, you see that people are like apathetic about what's going on in there, and they're just riding it out. This was the complete antithesis of that, and so I doubled down on saying that everybody's workflow, for better or worse, should include the capture of 2D assets, even if it's from a curated standpoint to where you know exactly what the moment you're going to use is in that space. I personally now, I guess until I've done it 50 times and everybody's accusing me of being a one-trick pony or whatever, but I personally ideate that way. It informs everything that I'm even considering doing is a blending of assets, and I think that's going to help birth what we call this immersive language of content creation.
Awesome. We actually have another panel 15 minutes after our talk, so anyone that has questions, if you can please walk with us outside, just because we want to be respectful for the next panel.
It's cold out there.
Yeah. Or to the back. Let's take so much applause for the panel.
Sound is working. So the workshop is divided today into two sections. And the first hour-ish is going to be a discussion about how brands and producers can work better together. And I want this to be as interactive and as helpful as possible. We're actually going to do a breakout session towards the end as well, so that you guys can dive in deep with some of the subject matter that I'm going to be talking about. Along the way, if you guys have questions, just speak up, because this workshop is for you guys. It's not for me to hear myself talking. So I want you to make sure that you actually get everything you possibly can out of this. We're going to go over, we'll do the workshop, then we'll take a short break, and then we have some fantastic panelists who are all from different production backgrounds coming up to talk about their brand experience and how they've created successful partnerships over the years. Okay. So there are opportunities in every single solitary type of content to have brand partners become part of it. So whether it's a feature film, whether it's a TV show, music video, streaming video on demand, YouTube channel, influencer content, there are ways to make your content extremely brand friendly. And the first thing to really understand is why brands actually want to do product placement. So from here, is anyone here from the brand side today? One person? Okay. Everyone else production? Anyone something else? What are you?
Brand integrations.
Your brand integrations, perfect. And anyone else? What are you with?
I use blockchain to deliver brand funded promotions.
I'm sorry?
I use blockchain to deliver brand funded promotions.
Oh, awesome. Very cool. And anyone else I'm missing? Just so I know kind of who I'm talking with? Okay. So as a production background for all of those who are here, the majority of you guys, you don't get what brands are looking for. There's a massive disconnect between producers and brand advertisers. They don't speak the same language. The thought process is different. Brands are not about creativity. Brands are about control, black and white, delivery. And so it's very hard at the end of the day when you're bringing brands and productions together sometimes to get everyone truly aligned. And I've really made it my goal in my agency. I mean, this is all we do. I've been doing this for over 23 years now. Long time, right? I look younger, right? Maybe. So I've been doing this for a long time. My agency, I ran an agency for over a decade, started Hollywood Branded 13 years ago. We work with brands of all sizes. We work with Fortune 500, biggest names out there, down to companies that are just starting up. And there's opportunities for all of them to work within the content space. Okay. So why do brands want to do product placement? A number of reasons. The first, they want to get more exposure, potentially to an international audience, right? So some brands are only concerned about regional. They're looking at local talk shows, they're looking at local programming, they're looking at a very niche audience. Others are looking for wanting to conquer the entire United States. Still others want to make sure that they're global. And when they're looking at different partnerships and they're looking at your productions, they're trying to decide if what their wants are aligning with what you can deliver. Secondly, so this actually plays a bigger role than you guys might think. They want to be cool and they want their employees to think they're cool. So product placement, when you have a big partnership and content that ends up being viral and popular and cutting edge and neat, and everyone's talking about it, that's neat to have within a company, and it's not easy to have. They also want to make sure that their brand comes across as more legit. Now, this works the same way for productions, right? You guys want to partner with brands to bring more legitimacy to your own production, to show that, you know, you have the power, you have a prestige, you have something that is desired by established brands who can lend their own credibility to you. So it works back both ways. Brands also want to utilize productions because it is a heck of a lot cheaper to work with a producer and their content than to do a television advertising campaign or an out-of-home or digital, right? So the CPM, cost per thousand basis of how many eyeballs are seeing your production content, way more affordable. And it's super important to know that. You also want, as a brand, to be seen very positively by viewers. So that means brands, when they're looking at different types of content, they're evaluating it as whether or not it's going to make them look better. So there might be a scene where there's a phenomenal opportunity for a brand to be front and center, but there's negativity in the scene. Maybe it's a brand who's conservative in their sex. Maybe there's drugs. Maybe it's just something that's a little negative and kind of a greasy ick character. They're not going to want to be part of that because of that, even though the content might be reaching an unbelievable audience and it might have an A-list actor behind it. So how that story is being told is super important. You also have brands who want to be able to build an off-screen partnership. So this is when you're thinking, Heineken and Bond, right? They have in-movie product placement integration, but now they've also paid $50 million to build a partnership utilizing all of their media, their television, their film, their digital, their radio, and they're driving that partnership. And so it allows their creative teams, their PR teams, their inbound marketing, their digital, their social, all of their different agencies to actually come up around one central cool story, topic, your product, production, and build legs around it. Then 7, they want to increase their sales. I could actually say that's number 1. I mean, every brand, that's all they're trying to do. There's no company out there who's not trying to increase their sales. But as content producers, that's kind of what you're trying to do too. 8, they want to be able to market to a niche group. So you have brands like Coca-Cola, Toyota, Dell. Typically, they're marketing towards a B2C, so to a consumer demographic. But then you have companies like FLIR. You probably don't know who that is. That's one of our clients. They're a thermal imaging camera. They're one of the largest thermal imaging cameras in the entire world, and they primarily do government and military work. Okay? Then you have brands like Westlaw. What's Westlaw? It's a legal online resource. They don't care about, the average Joe out there. They're specifically trying to target lawyers, paralegals, people in the legal profession who could actually purchase their software. 9, you want to make sure that your brand is going to be on a new platform to be seen. So instead of doing the tried and true, you're doing a TV ad and you're getting skipped over. You're a billboard and no one's paying attention to you. They're looking for ways to get into content and onto platforms where people can actually see you, that you're embedded. And this became really big a couple decades ago, as soon as the DVR started, right? So everyone started fast forwarding through. So really big trigger why brands want to get involved. And what's very interesting, actually, is a lot of brands are not even realizing how involved they want to be in content until now with Netflix. Every brand out there wants to be in Netflix because they don't know how to reach millennials. Now, we have a lot of our team here today, including a lot of interns, and I've been asking them questions all morning long about what type of content they watch, what platforms they watch, right? They don't say ABC, NBC, Fox. They say Netflix, Hulu, maybe a little YouTube, but it's on their demand viewing, and they're not watching commercials. And that's what brands are encountering right now. So they're looking for more ways that they can actually get involved in your content and others and actually directly interact. And then number 10, it is sexy as hell to be in a movie held by an A-list or maybe even a B-list celebrity. Front and center, your water bottle is being drunk, your watch is being worn, your car is being driven. That is something that you can't get across in any other type of medium than content. Thanks. Okay, so our agency, we're super big on education. I've kind of taken education over the top. We do massive amounts of content. We do massive amounts of surveys, research. We've really tried to bring in metrics and numbers to what's going on so that when we're talking to brands, we can actually give them educated information on why they should be working with more content producers. 51% of consumers, when surveyed, say that they're impacted by what they see to purchase. And that's on a conscious level. So what about all the subconscious out there and all the purchase decisions that you make? And if you doubt it, just start Googling around after you see a new movie come out and see people talking about the eyewear, the car, the this, the that. People chatter about it, right? And I just want you to know that there's a lot of people who probably went to Starbucks over the last few weeks thanks to Game of Thrones, right? Tons of people, yeah. So let's flip the whole conversation and talk about 5 reasons productions want to work with brands. Okay? You're going to see me do this today quite a bit where I'm flip-flopping between the two. 1, to save money. So when you're thinking about working with brands, when we get calls from producers, it's not because usually they want to save money. They're not thinking that way. They're thinking, I want to make money. Brands are here to pay me money. They're going to show up in my content. They're going to pay me hundreds of thousands of dollars to be in my film, my TV show, my content that I'm creating. Well, that's a really backwards way of looking at how you can work with brands. Over 90% of brands who participate in content are doing so on a trade basis. And they're doing it because they're allowing the production to have free access to their product. Now you're not buying water for your craft services. Now you're not buying phones for your cast to use. Now you're not renting cars. Now you're not necessarily paying for hotel rooms because you have it on a trade basis. So there's ways that you can work with brands to save money. BlackBerry, who has been a client of ours through all of their up and downs over the last 12 years or so, they're one of those brands that started in this world of Hollywood. We started them in this world of Hollywood by doing a lot of trade out. And they became super popular in Hollywood. Everyone was using them. I mean, we were up against Apple all the time. And the reason why is we made product available. I had a warehouse full of phones. Still have a warehouse full of phones. A lot of old phones. Anyone needs old phones. I got a lot, right? But they made it so it was easy. And that's a big thing with brands and how they can be successful with productions, is because they make it easy for you guys to work with you, okay? So let's take a look at how much success BlackBerry actually had working in Hollywood. Just not paying money, but loaning phones. A lot of examples that video keeps going and going and going. You know, they've had massive success in Hollywood. And it did positively impact their brand for many years. They made some other decisions that made it not quite continue on. So there's a second reason why productions want to work with brands, and it's because it saves them time. So think about your production, and you write a script, and you've written a scene that takes place in a kitchen, or it takes place at a convenience store, or it takes place pretty much anywhere. Just pick a place besides a boring room. You need real brands in there. And you're going to have to go out and purchase those brands or get those brands somehow. And so brands who are willing and who are actually ready to help you with that, it's going to let your prop masters, your set decorators, your transportation, your stylists, all those people put together production much faster. And again, they're not going to have to pay for it. It's pretty good. So this is something to show you that this relationship, which you might, if you know Don Draper's name, what I'm going to show you in a minute, at least what content, this started because 1960s television series, Mad Men, right? They needed the ability to have branded items that were period specific. I'm going to tell you, it's not that easy to go out and find things that are historical. You got to do some hunting or you got to create them, right? So we represented Canadian Club, Jim Beam Global. And we got a call, said, hey, we have these sets, you have alcohol, can you get us some period bottles? Called the client, hey, can we get some period bottles? Nope, they don't have period bottles sitting around. So our team, as their agency, went out, we created labels. Thank God the glass hadn't changed, right? But we recreated the labels and we made it period specific because it looked right that way. And this is something that started as a time saver, a need by the production. And as you'll see, it actually turned into something with quite a bit of legs. Set out to go do, thank you. We didn't set out. It's a really good case study, right? It's like awesome. It has numbers, metrics. It's really hard to get those things from clients sometimes, but this one, a reporter actually dug them all up for us, which was great. So it's really not something that a lot of times brands will go into a show and say, oh, I want to build a campaign. I want to do in-bar promotions. I want to run a digital campaign. I want to help get more eyeballs to your production. I want to help you grow. So what happens a lot of times is those partnerships actually come to life through starting with product placement, starting with no-fee deals, starting where it's just a relationship and you're helping each other out. And then you're able to grow it and actually bring something to life that's really magical. It's lightning in a bottle. It doesn't happen all the time. But it happens enough that it's worthwhile for producers and it's worthwhile for brands to work together to find that. So This is the reason why everyone calls us every day and we get so many scripts in all the time. Producers want to make money, right? So everyone's like, oh, dial for dollars, just bring us brands, we got content, no problem. Well, it's not going to happen that much. And we're going to go in a little bit later into this presentation about how to make that happen. But when it does happen, it's very strategic. It's because the brand has identified a production that is going to actually lend themselves to meeting brand goals, meeting their objectives, providing a platform that is going to serve well. And it usually does not happen for a TV series in their first season. It doesn't happen with content that's not helmed by a famous face. Brands are very reluctant many times to work with something that has the complete unknown. So that's why you see your franchise films who have so many brand partners on board. They're doing strategic partners left and right. They're paying $1 million to be in Transformers. They're paying $50 million to be in James Bond by Heineken, right? So it's not every production that's going to get there. And I really like when I'm talking to producers to let them know that you need to look at brands as the icing on the cake. They are not going to be the ones who are going to bring you your financial fundraising. You need to have your financials in place. But they are going to make it a lot sweeter if you have that, and they're going to be able to let you make your content even better, because when they do bring dollars, you can plus up other areas. Okay? So this is an example. Bumble's one of our clients. Has anyone here used Bumble? Come on. Go. 2, 3, 4. Okay. Maybe 5, I don't know. Maybe, I don't know. There's someone now. Okay. So Bumble is a relationship app. It started off as a dating app, right? It came on the helms of Tinder. It was founded by one of the same people who started Tinder. And it ended up becoming something that is a very unique app. It is something that allows women to make the first move. It puts the power of women back in their hands as far as dating. You don't get scuzzy, male genitalia pictures sent over to you necessarily that you're not planning on receiving. Yay! Right. Okay. So you're swiping right and you're choosing who you want to. You've obviously gotten there before. You know this. Yes. You all did not know the conversation would go this way, did you? So Bumble does dating. They also do friendship because they found out that after, you date, you marry, what do you do with all this data that you have? Because Bumble's really a data company, right? That's what all these apps are. They're taking our data and they're reselling it, they're repurposing it, they're finding ways that they can use it for market research. That's what every app out there is doing. That's where they're making a lot of their money. So, but now they're like, oh, we have all this information, we have something that's fantastic, they're dating, they're married, oh, goodbye, nice knowing you. So they came up with, once you're married, it's hard to meet women to be friends with. So now we have a relationship friend finder app, BFF, okay? That helps, right? That's how they went, that's the direction. Then they went in the direction of, oh, well, LinkedIn's out there, but for the millennials, there's a better way for them to be connecting. Let's do kind of a LinkedIn business connector. We already have the people who are dating, we have the people who are married, we have people who are BFFs. Let's take it into the business level. So that's what they've done. And we've worked with the brand in different ways to showcase different levels of those apps. But in this one, we looked at one of the top performing series that initially airs on the CW, but it actually does incredibly well on Netflix. Take a look at this partnership. And they paid money. is paid for. You're not going to get that. You're not going to want to do that in your content, right? Unless you're getting money for that. But it's something that makes sense. And then you're also going to want to add on different legs to that, like we did with the in-app, where you could, swipe right, join, in order to actually win a trip to your favorite place that your characters are already at. So there we go. Another reason why, 4 reasons. Productions want to have lots of people see their content, right? You slave away. You create this content. It's glorious. You love it. You put your heart, your soul in it. But now you need eyeballs. So brands offer an excellent way of getting eyeballs over to your content because they can push you out through their email, through digital channels. They can add you into a media campaign that they're doing, an out of home. They can do a TV commercial around you. And so that's what you're seeing, and that's how studios, your feature films, have traditionally saved millions of dollars marketing themselves. Mimi Slavin, who's going to be coming on a little bit later, used to run home entertainment and then into domestic theatrical for Warner Brothers. And she and I have worked together for 23 years. That's a long time. Doing these types of partnerships. And that's where the studio saves millions of dollars that they don't have to spend because they're having the brand spend it instead. But it doesn't mean the brand's giving you the cash. The brand is using their own platforms to get their own consumers who you're targeting to watch and to you. So to get them to spend money to go to the film. So your box office goes up, right? To get more people tuned in to your TV show so that you can sell more advertising. You can meet your numbers. So that's why that all happens. This is an example of a partnership with Pilot Pen. So we had the integration. We actually did do a fee-based deal in order to do it. You don't always have to with feature films when you're doing this, but with a pen that has a tiny little logo on the side, you have to do a lot in post-production, a lot, even if you do enlarged pens. So there's dollars and cost to that. And brands understand that, and so they know they're going to have to offset some of those costs as well. This is a commercial that we cut. We did the voiceover, we did the music, we did the editing, so that Pilot could run this on their cable networks around the time of the film's release.
My name is Rafe Kachadorian. When one creative kid, creativity has
good partnership going after the same demographic. And then 5, okay, sometimes working with a brand just makes your content better. It gives you access to things that you might never have otherwise. Or if you did have access to them, it might cost you a lot of money. Let's take a look at this. science cameras that are valued at, $150,000, $200,000 to a production. You don't have to rent that. They provide the cinematographer to go along with that many times as well. We worked with Rampage, supplied a $3 million Pilatus plane loaded with thermal camera technology to be able to shoot the scenes over the quarry. So there's a lot of things that come up that really help productions. We have something going on right now in Africa that's all about animals, and it's a lot of animals. But they're using the camera technology. They've cut content for us for Facebook. They've cut content for us to use for FLIR's website, and we keep them equipped with the gear that they need. Let's listen to a director and why he chose to use FLIR.
Hi, this is Ryan Stack, the director of Route 94 My Love, featuring Jess Glynn. Just wanted to speak a bit about the production of this video, which we shot entirely on FLIR SC8300 thermal cameras. If you're not aware, a thermal camera basically allows heat to be rendered as light. That's the core of it. You can. Here, bye.
So if you look at all of this, it comes down to one thing. It's money, right? So brands are going to help your production save money, or as a brand, they're going to help you make money. So it's a very symbiotic relationship. So there's 3 important steps, though, to planning a product placement strategy. And this is from the brand's perspective, because you need to have this insight. Okay, so before they even say yes to you guys, they need to understand how the brand is going to be seen on screen. They're going to be looking at the brand image, how the screen usage is, how to safeguard from negativity, right? Secondly, they want to know the target audience. You need to be able to tell a brand who your content is going to be watched by. Super important. You don't have that, you can't pitch it. You also want to be able to tell them what types of content genres work, okay? So we get so many opportunities for horror films. Now, there's actually research that shows that horror films engage more highly because there's an affinity. It's called the teddy bear effect. You're scared, you want to grab that Frito-Lay's, the Coca-Cola, the whatever product that's around you. And so if you see that product that's something that is part of your everyday life, you really take notice. There's a heightened sense. Brands are not sold in on this research study. They hear the word horror film, scary, they think, that's too scary for me, I'm out of here. It's very rare to see brands actually embrace the scary. Although I will say we do a lot, if you noticed, with FLIR and ghosts and Bigfoot or Yeti or pretty much any mystical thing, and they're good with it. So some clients are good. Okay. So there's also something really important here, and Courtney is going to be able to speak a lot to this. Alma's going to be able to speak a lot to this. They're sitting in our audience. They're going to be on our panel just shortly. I can speak a lot to this. Whether it's on the brand side or whether it's on the production side, you need to not go it alone. You need to actually find someone who knows their stuff. You need to be able to find someone who can talk the language of brand and who can also talk the language of production. So, the reason why you want to have someone who actually is knowledgeable working with you. You want to be able to have them help you offset bottom line costs. You want them to help offset, to actually coordinate, and it would be helpful if I read, coordinate actual access across your production. So someone who's working with your props, your sets, your transpo, all those different people, so they're not siloed, so that you can look at building bigger partnerships and relationships. Because it all goes pretty much out the door. If your props goes out and they decide to work with Coke, and your sets goes out and they decide to work with Pepsi, and now you have both brands, and neither brand is going to support you promotionally. They're not going to want to share your content. They're competitors in that content, okay? And then there's also a lot of ways that just happen that brand sponsorship partnerships just accidentally get messed up. This is a real case study of something that happened to me. We got approached by a production. Great script, great cast, fantastic. They cut a teaser. They were ahead of the game. They're like, here's my film. Take it out, pitch it, find us a car. Our car has a starring role. There is such an opportunity. We are going to make millions of dollars in savings and costs and promotions. They're so excited. I'm like, script looks good. Okay. Looked at the little teaser that they created. Opening scene. Someone's drinking. They're driving. That's not going to happen, right? So when you're even creating content, when you're writing content, or you're looking at content someone else has written that you're thinking about producing, got to be aware of these things. Because if you're an automotive manufacturer, you are not going to allow someone in a car not wearing a seatbelt. You're not going to allow them to have a mobile phone in their hand. And if you have a script that talks about that, when you send the script pages over and you're like, oh, don't worry, we can change them. No, they read them black and white and it's out the door. So you cannot have dead bodies in trunks usually. I will tell you. I mean, you laugh, right? I actually did a deal with Lexus and Sopranos. I got them to do dead bodies in trunks. So you have to have a really strong property to make that type of thing happen, okay? Mercedes then ended up giving all of the executive producers cars, and our Lexus were out the next season. So there's that reality too. But you do need to know and be aware of what content you have that might actually offend a brand. Okay? Then the script breakdown. You know, you guys have eyeballs for it, but if someone who's in this space, when they're reading your script, they're going to be looking at, oh, you're in a convenience store. They're going to initially just think of all the thousands of things you can do in that, with the point of sale, the danglies, the fridge signage, the whatever it might be. And they're going to think outside of the box, potentially, for that. So you want someone who knows how to read a script and who can really envision in their head where all those branded moments can be. The kitchen, right? The bedroom, a teenage girl's closet. I mean, all of these things offer something. A locker. So you want someone who's able to read a script, because you're not going to write in, oh, she opens her locker and there's the Coke and there's the bubblegum brand here, but someone else is, if they're recognizing and they're knowledgeable in this space. Okay. You also need to make sure that what you show brands is as polished as can be. Because if you send something over that looks shoddy, they're going to think of you as being shoddy. You need someone who can pitch, and they can have an actual conversation. You know, we get opportunities all the time with people who are like, hey, here's my film, what do you think? And they let it go to die. They don't follow up. They don't actually dig in. You need someone who's good at sales. You also need someone who's going to be on top of tracking everything, because when you have your $600,000 of cost savings from all these different products, and you have, you know, your barn scene with this toolkit that cost actually $2,500, the production, you're responsible for sending that stuff back. And if you don't, you get a bill for it. And you don't want to deal with that. You also, I got ahead. There's also reshoots, right? So it's not only hanging on to things and getting it back to productions, it's also, oh, it didn't test well. Oh, we needed a different ending. Oh, just falling flat. Let's reshoot. So if you need to do reshoots, you need to build that whole world again and reach out to all those same brands to get the stuff back. They're not going to let you just sit on it for 9 months while you figure out how to edit your film. Then there's also product tracking, making sure it actually happens and you're able to talk to the brand or the product placement agency or the media agency about it. Logo clearance sign-off. Every time there's a brand in a movie or TV show, you need to have clearance. You can't just go out and buy it and put it in there, right? You actually need clearance. Contracting big deals. You need someone who can help you with this. When there's dollars involved, it is incredibly important to have people know where things fall flat. And there's a lot of ways for things to go sideways. And then, of course, conversations, right? Negotiating the money, negotiating the promotion, and then strategizing to build out the campaign. And being the bad guy and good guy. You want to be the good guy as the production. Let someone who is on your production be the bad guy. Let them be the ones who are following up, chasing down. It's always nice to have a bad guy and you not have to be that. Making payments. Has the brand going to actually pay you? When are they going to pay you? Why haven't they paid you? Are they ever going to pay you? right? So it also it's just about activating it, keeping it all together. It's a lot of things to juggle and keep happening. And your job, if you're a producer, it's not to do your brand deals. Your job is to make sure that everyone on your team is doing their jobs and that everyone's working together and rowing in the same direction. So quickly, 4 key ways producers can get creative on making brand partnerships work. Okay. So first, before filming. This is something that when we jump into a workshop in just a few minutes of sitting down and talking a little bit more internally with you all, before filming, you need to look at your content and figure out how you can bring the brand to the casting table. There is a lot of content. Netflix alone has 800 to 900 pieces of TV content and film content coming out in the next year that they're shooting, right? It is a content landscape, plethora of so much content that you're drowning in content now. And if you're a brand, you don't know which way to look, so you're just going to look at the best of the best. And it's really hard to stand out. So what can you do from day one to actually say to a brand, I'm going to bring you on board. I am going to make sure that it's not about the final edit and having you on screen. You need social content. I'm going to make you some turnkey social content. We're going to have you're a beverage, you're going to be at the writer's table. We're going to post some pictures, and you're going to be part of those pictures. You want to start thinking about how can you start working with a brand from day one, because they can work with you to start building your audience too. Okay, during filming, during post-production, you'll want to do the social media content I mentioned. You want them to be able to repurpose. You want them to start marketing for you. You want them to start helping you build that buzz, right? There's something, everyone wants to go viral. You want that to start happening. You could do filmed backstage experiences for the brand. You could do an alcohol brand and they're partnering with you at their wrap party and you shoot some content and you give it to them for that, right? You could do, hey, it's brand day on set and we're going to set up some different activation areas and you can do some free sampling, but we're going to create content. It's all about content. You're content creators. Just keep on creating content because that's what brands need. Have the unit publicist help, right? This is missed so often. There's so many partnerships that happen when you could get a leverage of PR built in and people don't think about it. And after filming, make sure that they continue pushing it out. Make sure that, when you submit the film to a festival, how could they come in and sponsor that red carpet? How could they become part of that experience? How could they do a dinner series? And capture content. Pictures, video, content. Look for ways that you can find to bring that brand as part of your production as a partner, not as a one and done. Okay. Time of release. You could cut while you're editing a piece of content for them to use. Maybe they'll put money behind it for in theater. You have it. Maybe there's certain neighborhoods that they're looking for regionally that they're going to boost it for you, or maybe it's national. How can you make it easier for them? So you need to just keep this in mind of what can you do to make brands' lives easier. Because quite frankly, their priority is not sitting there trying to market your film and help your film. So how can you give them tools to help them market you where it's just literally turnkey? Here is something that we did last season and we have the relationship ongoing this season. Last season was on Lifetime. This season it is on Bravo. Very different production companies. Last season it was Bunim/Muri. This season Magical Elves. Last season it was Lifetime. This season Bravo. Treats things very, very differently. So know that when you're creating content, if you are the production studio, how you work with the network or this distribution outlet may actually be very different. And people are going to be willing to do different things. But the pen that I talked about, have to have a logo. Let's take a look at, see all of the things that we did with just a partnership with getting the pen involved in the show. closely to make sure that they developed content pieces that the brand could then extend through their socials, their website, and across the board. Okay, so here's the important part. How do you actually get to make money, right? So if a production can find a brand who can help them save or give them money, you're going to have, a good time of it, right? Working with your brand partnerships, it's going to work. So each partnership's very unique and dependent upon making sure that the content's right, the creative team's right, the distributor's right, the cast is right, and that the other brands are right, that you don't have conflicting brands. And it can be more than just, it's a competitor. It could just be a brand that's doing a partnership, and then they're just totally not the same fit as another brand, and they're not going to want to be part of that either. So you need to look for things that are complementary and can be building upon, on each other. And it's really great when you can find brands who can actually collaborate around your production and work together and do more social, more digital, more sweepstakes pricing, whatever it might be, and just make it very complementary. And you're looking at what is the exposure. So if you want money, right, or you want savings, what is the actual opportunity? Is it a hands-on? Is it an insert? Is it a verbal mention? Is it storyline messaging? What is it going to be that the brand is going to get? Okay. And then a really big part of all of this. Does everyone else want it? So dollars start being driven, not by your content. Dollars start getting driven by if other people want your content. So you have to find a way to actually make it competitive so that you can become something that's wanted and desired versus just going out and naming your price. Okay, so we have a little bit of time left, I think. How long do we have? Okay, perfect. Yes?
I used to work in product placement. I loved it before I started directing. And what we got was free product.
Yep.
We never got any money.
Yep.
But again, it was wardrobe, it was food, it was shoes for the crew. And I was very good about always making sure it was on camera and getting the pictures. But now that I'm moving into bigger projects and hopefully online stuff, what kind of money, like for instance, that's a hit show, a big fat hit show.
Big fat hit show.
What kind of money do you think the Penn people got for?
What did Pilot pay?
What did Project One Way get for putting those pictures?
Yeah, so I'm not going to disclose exactly what they paid, but I will tell you. Yep. So when you're looking at network television, you're looking at integration, you're looking at $150,000 to $500,000 typically.
Per episode?
For a partnership, and it could be per episode. Depends on the platform. Depends on, is the show something that has advertising built around it? Is it on ABC, NBC, CBS, Fox, and there's media? So now it's not just about, hey, you have to pay $1 million to be in Modern Family. That's what you have to pay. It's also about how much are you going to bring to the table to support media-wise. So $5 million, $10 million. Each network has a different requirement. Independent films, realistically, I think that's probably a lot of what y'all are in independent content. You are looking at tens of thousands to maybe like very low six figures. And it depends on the partnership. And it's going to have to be smack dab, totally perfect for the brand. Right.
So, one more quick question.
Mm-hmm.
I love how we've integrated with the backstage stuff and the contestants talking about it and stuff. Will the Penn company, say for example, will they specify we want 4 of your people to talk about pens on camera? Will they be that specific, do you think?
Our agency will when we contract it, a lot of times looking for that. We're very specific about the type of content we're looking for. In this case, the production actually over-delivered. So they did a really nice job of it. Yeah.
Thank you.
Can you go over kind of what genres, what products, what brands go with what genres?
Really, there's going to be a brand that fits any genre, right? So I think it's also looking at, let's say you are, your comedies are going to be embraced, your dramas are embraced, the biggest, blockbuster opportunities that are out there, those are going to be embraced. Horror, as I mentioned, is a little bit harder to do it. Documentaries, so hard. I can't tell you how hard it is to get brands to get on board for documentaries. They don't see it. They don't see the value. And if you're like, oh, we're on PBS, they're like, yeah, okay, right? So it really just comes down to depending on what you're looking at. But one thing to keep in mind is if you're looking at a brand category, you're looking at sodas, maybe you don't look at Coke. Maybe you don't look at Pepsi. Maybe you don't even look at Dr. Pepper. What about Fanta? Right? What about looking at opportunities, or Big Red? What about looking at brands who are not inundated on a daily basis, who actually are going to be more interested? The independent filmmakers that we work with that have a lot of success typically are not working with the top name brands. Usually they're working with, earlier stage brands, or brands that are very regionalized, and they're finding ways that they can actually come together in a bigger, beneficial way. Yes?
Does the brand come into the conversation with wanting a guarantee of impressions and viewership? And conversely, does the production company or the production in general, when they're going out to look for brands, like put that as part of their pitch deck, and like saying this show is going to guarantee you this audience?
So the answer is no, productions don't do it, and they need to. And the answer also is brands do every time. They're looking at what that CPM, that cost per thousand basis, is going to be so that they can justify it. Because they're used to buying advertising, they're used to buying media. They're also looking at your content not as advertising, not as media, because they don't control it. They don't get to say my 30 seconds are going to be just about me. They're diluted. So they're not valuing you necessarily at the same rate as what they'd buy a 30-second for.
How do you decide to get involved with a project, or do you have a sliding scale based on what's an independent versus the...
As far as our agency goes? Okay, yeah, so we have a brand division, we have a production division. We take very limited productions on because it's a lot of work and not a lot of success for fee-based deals. Product placement, all day long you can do it. You can find brands who are going to work and do trade-off, but if you're looking at getting funded, it's really hard to find people who are willing to represent you, who are legit, who are going to find true dollars for you. So it's just, you have to approach it a little bit differently. And I know I said earlier you need a brand strategist to come on board, so it's like both things. But it's hard. You have to really, when we work with a production, they are really standing out, and they're showing that they're doing the work and they're willing to do the work to come up with innovative ways to work with brands, and then we'll consider working with them. Yeah. Mm-hmm.
Do you work with any fashion brands, and if you do, what specifically are there specifically or things that would turn them on or off?
Sure. So we do work with Lacoste. We work with Ralph Lauren and some others. As an example, with Lacoste, we partnered them with the first season of Queer Eye on Netflix. Right? Really natural opportunity. We ended up going in store. We ended up having all of the Fab Five wearing Lacoste. So there are opportunities. You can also, wardrobe is something that is needed. It's how good is the logo? I mean, what happens to us a lot of times with Lacoste is, we'll be working with a producer and we're like, we're willing to pay. We'll give you money. And the producer's like, well, I like everything that doesn't have a logo on it. Yeah, that goes over really well, right? It's like, come on. Great, you like that shirt, that dress, and it has no little logo. So that's part of looking at it. So when you're working with wardrobe and you're working with clothing, is it something that's going to be visual and stand out on screen? And if it's not, it's harder to work on. So then you need to look at, can you have a shoebox? Is there a bag that you can put in? Is there a website you can look at? Is there an app? Look to see what the different opportunities are. We were talking this morning with a QSR, a quick serve restaurant. And, they used to do a lot with promotions, supporting films, and they've gotten away from doing that. But what they do now is they're really interested in getting their app to be featured. They want people to know they can go to Grubhub or Uber Eats and that they can order this food and get it to them. Because that's how people are really interacting with them now. It's on demand. So it's digging in and looking to see what might be a little less expected than what you would think versus just, you walk into a mall and then there's the brand. So packaging for them, that's something, but that app, they're willing to pay money for. So,
Oh,
hi.
My name is Cheryl.
Hi.
And there are companies out there that say they're LGBTQ friendly, but they're only friendly at Pride Week.
There are.
Yeah, and then they disappear. And so...
But Bud Light's campaign's really good right now.
Well,
For the moment.
I'm glad you said that.
The moment.
But literally have a platform with 2.5 billion views at our fingertips right now. It's the companies are out there and they're saying one thing, but then when you approach them, this is great. I'm just grateful to be here, and I'm gonna learn a lot more.
Good. I'm glad. Yes.
So what would you suggest? I have a catalog of film that there's one group that I want to create a genre basis, violent films. And so we're trying to find, advertisers towards that, and like the horror type of thing.
It's hard.
It's hard. So what do you suggest?
It's hard. So there's, we used to rep a lot of the Nick Cage's films, like one after another, and they all had that edge to them. And most of the brands that we would get involved with it would be men's clothing that were lined more towards leather, some automotive, alcohol on that. So the brands that actually have dollars that are really like they're thinking about this is watches, insert, right? Potentially soda companies, okay, beer. 100%, going for that male demo. Male demos are hard to get.
But so these are already done.
Mm.
So, it's going to be OTT, so we can put advertising. Actually, if we can do whatever we want, we can put some sponsorship in the front, presented by, or whatever.
What type of additional content could you cut together for them potentially? Think of it from that direction. So.
Well, I'd like to, because we have a team that we're going to go after this, just this one particular genre for this group of, we do children, we do film, comedies, action comedies, we do, a mixture of different genres, but this is particularly just one group of people, and it's a large.
So you probably need to come up with what's your social influencer strategy, targeting males, and how could you get these brands on board, cut content for them, include them in your social influencer strategy of getting them out there. Does that make sense?
Yeah.
Like, it's all content driven.
Yeah.
Yeah.
Stacey,
Yes.
Could you talk about animation and how, either if it's 12 minutes or short or half an hour, what's your strategy is as far as that?
So animation, obviously you need to go far out in planning stages so that you can actually bake in the brand into that. It depends if you're family, if it's very young targeted children, there's definitely opportunities for that. There's a brand for everything. So
Who would you partner? Like it will go towards the...
you're targeting...
The toy that might be...
Yeah, so you could be looking at a Hasbro, you could be looking at a Mattel, you could be looking at, there's different regulations now, like Kellogg's, when I used to rep them, we could only go after super family-friendly programming, and then everything hit the fan, and you couldn't target and market to children anymore, so then we could only go after adult programming. I mean, that was like a 180 shift, right? So you have to look at kind of where the brands are. You're targeting to moms. And you're targeting to moms who are going to be watching, and you're trying to get them to purchase. So what are the brands that are using in their everyday life that you could approach to become part of that content?
Okay.
Yeah.
Great. Thank you.
So what I'd like y'all to do, I know we're really out of time, we're coming up to it, is as a production, I want you to think about what do you have to actually offer brands? Okay? If you're a brand, the one that we have in here, what do you have to offer productions? Okay? And think about why a brand would actually care about what you have to offer. Okay? It's not just being on screen anymore. It has to be something a little bit more. Also think about, is it enough? What can you do to plus it up? How can you blow it up a little bit bigger? Because this is not how most producers are thinking. And this is how you are going to get more brand partnerships. Also, what are the deal breakers? Driving the car with a dead body while drinking, deal breaker. So make sure your content doesn't have that, right? And then what else could you provide? It's that ever question, what else? What more? What else? Keep on thinking. And when you actually do get into a conversation with a brand, ask them what's important to them. And they're not going to be production savvy. They're not going to think of all the things that you could do for them unless they are a top performer brand who's doing a ton of content and partnerships. But most of the brands that you should be going after are probably the little bit lower tier levels, and they are not well versed. They're not experts in the space. but they know that they don't have enough time to do stuff. They don't have enough money to do stuff. They need content. They need a way to engage. They're trying to get a demographic of millennials, because everyone's trying to get millennials, right? So what can you do? How can your content actually help them accomplish that goal? Yeah. Does anyone have a production that you started it off? I was originally going to have more time and have y'all divvy up into groups, but does anyone have a production that you kind of want to throw out and you get to tell us what you think you could do? Okay?
Hi. I have a film based on stalking, and I'm partnering up with, the National Stalking Association and organizations in the nonprofit spectrum to place them in the film.
Okay.
But yeah, that's kind of the first basis of me doing partnerships, and I'm also looking at product placement companies. From my understanding in marketing, the top 3 product placement companies are cars, alcohol, and cell phones.
Depends what you're looking for. I mean, is it product that you're trying to cost save on?
No, it's product we're trying to leverage the celebrities in the film or the directors in the film to get more funding for the film.
You're trying to get dollars.
Yeah.
Yeah. So watches, soda, beer, automotive, those are going to be the ones just because they're the big media buyers, right? They're already spending, so it would make sense if they could just cut a little bit off for you. You could do so much for them, right? But they're not always thinking that way.
Right.
Yeah.
They have their own rules. They kind of want me to change things around.
Yes.
To know what works. So,
Yes.
Yeah.
Yeah, they're always going to want you to change. And that's the more important thing you guys have to realize. You have to have a conversation. This is not a you give to me. It is something that's going back and forth. It is an equal opportunity here. I scratch your back, you scratch my back. I scratch your back some more, you scratch my back some more. We build a partnership together. That's what you're trying to do.
I apologize if I missed anyone's asking something similar, but how do you control for getting away from creating content when the brand kind of takes over?
Well, you don't want that to happen because, you're creating content, right? And you will always have brands. I mean, we have had clients who, they know what they want, they know what they want, they know what they want, and they know what they want. And you have to gently push back, right? And you have to, though, figure out where can you meet. So it's just like any relationship. Person A wants this, person B wants something totally different. How do you come together without ruining the content that you're creating? Because you all are very creative. You all are bringing an art form. And this is why, programmatic product placement, that's a big conversation and subject out there right now. It doesn't work so well because it messes up with the creativity process. You can't just plug a brand in because what if you have a high-end actor and he has celebrity endorsement deals with product A and now you're popping in product B? Yeah, it doesn't work. There needs to be a conversation. Or there's just so many different levels to it where it all goes south. Any other productions? Is it time? We have so much time. Yes.
Okay, so mine's hard, documentary. But I have a whole long list here of, I think, very good potential brands to be involved in it.
Okay.
Okay, my documentary is about bringing home the missing from World War II. There's 73,000 Americans still missing from World War II. This is an outstanding number. I've been researching this for about 10 years now. So I have some products, I have some productions, some content. And, okay, big one, Boeing.
Okay.
Boeing needs something right now, desperately.
Okay.
Okay, the B-17 is the most loved airplane of all times, built and designed by Boeing. Okay, most of my stories start with the missing from the Army Air Force, and with the missing who flew on B-17s because they were 10-man crews. If the plane went down, we lost 10, and it multiplied. So, okay, that's one idea I have, but I don't really know how to approach Boeing. I don't want to actually handle that myself.
Right.
So Boeing, there's also candy bars. The men were always given candy bars to eat. And I don't remember them, but they still exist.
So what I would suggest, you can do that, and you can do your research, and you can knock on the doors, and you can try to paint a picture, and you can try to find someone in the marketing department, okay? You're probably going to have the most luck. I mean, everyone here is going to want to say, I'm going to talk to the chief marketing officer. They don't have time for you. They just don't. It's not going to happen. Go after like your director level or your brand manager. Knock on the door. It's something sexy, something different for them. So try that. And then for looking for other sponsors, look at veteran associations. Who's actually sponsoring them, right? What are the brands who are supporting that, who might want to actually extend their efforts in that? You know, you have something that's nonprofit that might be tax deductible for them. So go along that route to look for your charity opportunity.
Right.
Yeah. Yeah. Sure.
Hi. I have a teen drama, very CW, freeform, kind of like that.
Mm-hmm. Millennials, it's friendly. Brands are lining up.
True. I was wondering if you would recommend partnering up with brands before we pitch to them,
Mhm.
or do you think we should wait until it's already been coming?
So let's say that you're going to go to Freeform. They have their own ad sales team, and that's it. It's done. Your brands are gone. Let's say that you decide you want to do a time buy. You need the financing. You want the brands on board. So it all comes down to what you're going to do. Your networks are not necessarily looking for you to bring in brands unless you're able to say, Walmart's behind this. They're giving me $10 million. You have to do this. You should be paying me. Right? Right? So you need to look at it from how you're planning on distributing. You have an independent film, start pitching it now. You have a property that you're going to have to do a time buy on, start looking for the brands. If you have something that you think is truly commercial and you're going to be working with one of the major networks, you know, honestly, they're looking at, if you go out and get Big Red, and they're going to say, well, we already have this whole partnership with Coca-Cola. All that works out the door. Mm-hmm.
So I'm working on a production right now where the lead actress has a lot of medical equipment in throughout the course of the film, as well as a hearing aid. I've always just dealt with the soda companies for brands, so now I'm going to tap into that. So how receptive are some of these medical equipment companies or agencies?
Yeah. I repped Philips Medical for years. Every time you saw a monitor in house, in ER, we actually had the first ever open MRI system, a dummy unit, flown in from Amsterdam with engineers to build it out on the set of Grey's Anatomy. It's still there today. So you absolutely, that's the category. They don't get, it just, you know, monitor, they don't care. Hearing aid company where you could actually do something and create content for them, that might be something, right? And you could position it where it's not even necessarily about the eyeballs you are going to get them on screen, because maybe you don't know if that many people are going to watch it. Maybe tons of people will watch it. But what kind of content could you work with them? You have a production house, you have editors. What could you do to give them something that's cool and different, that's going to target the demographic you're going after?
So I shot a spec pilot that I created. It's a half-hour TV show, comedy. It happens to take place, it's a workplace comedy, at a commercial casting office.
Okay.
And the hook for on the business side is every episode will button with the 30-second commercial that we've been casting throughout the episode.
So it's like Blackish.
Yes, yeah. So
Same theme.
I'm trying to tie in that with going out with it, but I'm so new to this arena that I'm sort of at a standstill.
And you're going out, are you trying to do an OTT, or are you trying to do network television? You don't know anyone who will take you?
I just want to make it.
Okay. So you're really in the same thing as the teen drama situation. You go with a network, If you go with an OTT, Netflix is not, Amazon's not worried about ad sales. They're not worried about brand conflicts. So it really comes down to what the platform is. If you go to Hulu, they are. You know, so it just depends on where you're trying to position. If you're trying to go on any of the cable networks, if you're trying to go on any of the broadcast networks, you need to probably leave that open a little bit, script it. You know, it's a soda, but you don't need to bring the soda with you when you're doing that. Yeah. Yes.
I have a show that is a digital comedy series with fashion bloggers. So it's like SNL meets Parks and Rec meets Rachel Zosia with real life fashion bloggers acting opposite.
We have team members here who's really excited. We were talking about a concept like that earlier.
And we
here.
back, but I don't know if we'll have to, yeah.
Yeah.
You guys are already doing it?
No, I was talking to some of our team about it. Not that, about the concept of that type of content.
Yeah, and so we're already, we've already shot, like, we're about like 60% shot for this season.
Okay.
And we're already working with brands. We have real life bloggers in the show who have like over
Great.
50
See, your built-in marketing platform right there.
Yeah, but we're hitting a wall, believe it or not, with like our fashion brands. And I think it's because of like what you were talking about, where they're like, well, we're not sure what you're doing. It's like you're bringing this comedy. So we have most of the cast is bloggers, and we have the actors like playing office episodes, bringing in like that comedic.
You're not Sex and the City. You're not something that is super high-end, elite, it's comedic, but it's not safe. Sex and the City was a little bit safer for fashion brands, right?
Yeah.
And you're leaning towards where you have very strong comedic humor that could go different directions.
But we're like toning it, like, you know, if we're bringing in like, we pair the right blogger with the right brand for the episodes, so because we're continually like bringing in new talent.
Sure.
So we have, you know, people that focus on like high-end brands, and then we have, you know, some of our bloggers are younger. So I mean, it's like the target age is sort of like 18 to 35, maybe a little older.
Right.
We have some, you know, bloggers who are a little bit.
And your bloggers are willing to post about the brand, talk about the brand?
We're still in startup, so like it's negotiable.
Yeah.
Like it depends, like if we're paying them or not, you know, because obviously the bigger ones have really high fees.
If you can figure that out, we get approached by a lot of content that they're like, we have social influencers. They're going to advertise this show. They have bloggers. They're on Instagram. And then the blogger, the Instagrammer, the YouTuber, they don't want to touch the brands that are part of the show. So it doesn't really help that your show has bloggers in it for the brand unless they can actually do something with it. And it's very hard. It's the catch-22 because your bloggers also priced on a CPM basis based on their following, and it's more expensive than the amount of money the brand would actually pay your production to do one single stupid post with them, right? So it's hard.
Yeah, I mean, we're still like working all that out. We don't like, so we're like trying to under-promise and over-deliver
Right.
at this point.
Sure.
Still, you know, we're just starting to launch a social media, and then we're going to launch, like, do a soft launch in the summer of the show, but yeah,
Maybe look at different levels of brands. I don't know what fashion brands you're talking to, but maybe it's more like looking at your Fashion Novas and your ASOS versus your Ralph Lauren's and your Chanel's. Right, so where can you get creative, where people are going to be more in tune? You know, you have your luxury lines who are all saying that they want to get involved with pop culture, that they want to get in with millennials, that it's very important for them to be this driving force. That's why LVMH just did a partnership with Rihanna for her Fenty line. That's what's going on with that. But they also are not risk takers. They only want to be with A-listers. They want to have a very safeguarded, they have prestigious brands, and they are very elite. And so it's hard if there's an unknown for them to actually partner with you. But there are brands out there in the fashion world that maybe they're not quite in that same elevation that should be willing to work with you and open to working with you. But look again at the content play. How can you get them something content-wise outside of your show for their socials? If you can't offer them the bloggers and influencers that are working with you. Yeah. I hope that helps. Any other questions right now? Any other ideas about your productions? Yes.
How do we contact you?
You can contact me at. I have a slide. Look at that. So, is it hard to see? Do we need lights? Do we need anything? Okay. So, our email at our office is info@hollywoodbranded.com. So you can always reach out, and I can direct you to the right department or to me. Okay. We also have a self-learning platform. So if you're actually really interested in learning how to leverage product placement more, we have it learn.hollywoodbranded, which is in the program. Thank you. Yes.
And Victory Fund Code.
Thank you. It's on page 22, I believe.
Right.
Yes. So we have a full ad in there that will give you a 30% off discount to this educational material. There are right now over 20, I think there's 22 20 to 30 minute training segments on product placement and integration. There's 3 different levels. We're still loading more content up. There will probably net out around 35 to 40 segments on it. We write a lot. Our agency produces a ton of content. When I say that we do content, we do blogs, 5 blogs a week. You have free access to them, blog.hollywoodbranded.com. Do a lot of how-tos, training exactly how you should be working with brands. I have a podcast called Marketing Mistakes and How to Avoid Them. It's on iTunes. It's also on our website at hollywoodbranded.com. It has the first 100 of them was all about me training people on how you can do brand partnerships better. I got tired of listening to myself speak. I now interview people twice a week who are specialists in influencers, in legal, productions, in segment producers who work with brands. And so you can listen to that as well. Yeah.
Great, thank you.
Yeah. Anything? Good? Perfect. Thank y'all. And so what the next segment is we have 5 awesome panelists who are going to come up and give y'all a chat about what their experiences are, how they've found success in actually securing brands for their productions. So you want to stick around or take a break? Bathroom break?
I just want to say hi.
Hi. Thank you very much.
So I was supposed to bring our brothers.
Okay.
Cool. Well, you gotta start somewhere, right? And you have to work out the kinks before you get to America, so that's smart.
Oh, that's awesome.
Yeah, awesome. Okay, nice to meet you too.
There's all these stuff now. Yeah. Wow, that's cool.
One of our editors we sent to edit one
Thank you.
Thank you. So we just kind of
Right. Sorry, right,
yeah.
I have an event.
Oh, that's cool.
Oh, you do?
That'd be really cool, yeah.
Interesting.
Yeah.
What film?
Mike always finds a...
Good, I haven't slept in like a week. Okay, guys, are y'all about ready for a fantastic panel session? Yes. Sounds good. Okay.
Close that door. Hugo, could you close that door, sweetie pie, please? Oh, thank you so much. Okay, so...
Yes, he does. He's great.
Next, I didn't even get to talk to you.
And, all righty. Perfect. Well, guys, thank you for coming in for round 2. And today we have a group of people who are all experts in having gotten brands to come on board to a wide variety of different projects. And so what I wanted to do is start off with everyone introducing themselves, giving a quick little background overview of where they come from, what they've done, what got them to where they are today. And do you want to start?
Oh, I have to go first?
You have to go first,
Okay.
or you can go last. It's up to you.
No, I can, do you want to go first?
Don't care.
Should we flip a coin for it?
I'll go first.
Okay.
I love being first. It's my favorite thing. Hi, my name is Mimi Slavin. And how I got here today was I was unable to fail up, so I had to work, which is not always the way it works in Hollywood. I've spent the majority of my career doing marketing partnerships in studios, doing things, starting with a brief stint at Fox, then Warner Brothers, CBS Films, Universal, and DreamWorks. And today I work as head of marketing and business development for a blockchain company that is actually revolutionizing the way we use IP digitally. It's changing the game in promotion, so that's actually very exciting. And I love now sort of taking all of that experience that I have with the sort of content side of things and being able to translate it into technology. So that's kind of my backstory, and I'm happy to talk about any of the projects I've worked on over the last only 10 years because I'm very young, but if you wanted to go back further, I am sure I could come up with
I
something.
kind of ruined that, Mimi. I said we've known each other for like 23 years.
Since birth.
You know,
Yeah.
we met in the hospital.
Since birth.
Nobody heard that.
Yeah. Alma?
Yes, hi, I'm Alma Bogdan-Turner, and I think Stacy and I have known each other for, 17 years, something like that. I'm a huge fan of Stacy's. We've worked on many things together. I fell into product placement or understanding relationships with brands because in my early 20s I started a clothing line and wound up it's so funny, everything has come back now 20 years later, but I wound up licensing the Adidas stripes, and we wanted to create a brand that would go from day to night. So Madonna discovered our brand in the nightclubs, and she decided to wear our clothes to the premiere of A League of Their Own. So all of a sudden I realized that we went from, I was looking for 10 cents in between the cushions, trying to buy a yogurt downstairs at the corner store to actually being on covers of magazines. And that was really a pivotal moment. So I went from there to the music industry. I worked for Warner Brothers Records and Reprise, then went on to work for Universal. And then I started working on independent film. I started my own company, PR and events company, and then I realized how important relationships are for independent films when you're still trying to make ends meet during production and after. So, many years later, I started producing my own films, which is where I am today. I still have my PR and events company, though. and work with Stacy a lot.
Yes.
So that's me.
I'm Daniela Polk, and I started out in public relations at Burson Marsteller when I was a baby, and ended up working at USA Broadcasting as Director of Corporate Communications, where I shifted into development and production, and came out to Los Angeles. The head of development at USA and I created a show together, and that's what brought me out here. When I shifted into production, I started producing and kind of merged my brand and production skills. And in 2003 or 4, wound up on season 2, 3 of Apprentice. And so that was really training ground, where we were doing a lot of branded integrations and at the forefront of that. And after that, I segued into producing integrations for television, for events, and have been doing it for a decade plus. So have worked on many shows with Stacy, all different networks, lots of different genres, mostly unscripted. And I'm currently working on Queer Eye Season 5 for Netflix, and which is, well-loved, fun show, and, constantly transitioning, going from project to project.
Courtney. Hi, everyone. I'm Courtney Jackson. Wow, I got too close. My voice is real high-pitched, so I sometimes make it squeak. So I work with Steve Harvey. I've been spearheading our integration department for the past 7 years. I was on his Chicago show, the Steve Harvey Show, and then he brought me out here to LA to spearhead the new Steve Show, which unfortunately is not coming back next year. I know, it's real sad, but it was a great run, and it was a big game changer for me. I got into entertainment. I actually started out in PR as well. Then I learned that you can't make any money in fashion PR, and I was like, F this, I'm going somewhere else. I've always been in sales. My dad is in computer software sales, and he was like, Courtney, there are 2 jobs in this world. You can either be a doctor or in sales. And I'm like, well, shit, I'm not going to school that long, so I'm going to be in sales. So from there, I actually moved to Chicago, had a kind of a 20-year-old crisis of what am I going to do in my life? What do I want to do? I went to Chicago, and I went with the mind frame of I'm willing to do whatever it takes to get to where I want to be. And even though I didn't know what that was at the moment, I knew that that was the mentality that was going to take me somewhere. So I had a friend who is a very influential executive producer who was moving to Chicago to work on The Rosie Show, which was a very short-lived season with Oprah. And she called me up and she's like, hey, let's get to dinner. Let's get some dinner. And I was like, okay, great. And she's like, what are you doing here in Chicago? And I'm like, I'm still looking for a job. And she's like, why don't you come work with us? And I'm like, what am I going to do in TV? And she was like, I don't know, PR, marketing, we'll figure it out. I was like, well, I've never been handed a job before. I didn't get handed it. I interviewed. So actually a week later, she called me and she was like, hey, Courtney, the other executive producer needs an assistant. I told her all about you. Can you get here in 30 minutes? I was like, absolutely, I'm on my way. And I went and met with her. Basically, long story short, I started off as the assistant to the executive producer. When you're an assistant, you get the opportunity to see every department. And there wasn't a lot about TV that I honestly really wanted to do until I saw the integration producer. And I saw that she had all these cool brands that she worked with. She got all this free product, and I'm like, I can get free shit. I get free shit all day long. Sorry, I'm kind of a cusser. My boss was Steve Harvey, so it was allowed. Okay, good, okay. And just, one night, when I was the assistant, I was getting her lunches, and I was the best lunch taker ever. I knew what she wanted before she wanted it. Because if you're not good at the small things, how can you be good at the big things, right? So I was about to go into her and ask her maybe if I could help out the integration producer just to learn the ropes. And the next morning, and talk about law of attraction, the next morning I walked, she called me in her office and she was like, Courtney, I know that you have a PR marketing background. The integration producer really needs some help. Would you be willing to help her? I was like, shut up! I was going to come in here and talk to you about this. Anyway, that started my career in integrations, and I started with Steve Harvey, and here I am today.
And she's brought in millions
Millions of dollars
to that show.
Thank you.
Hi, my name's Justin Purser. I'm a director, creative director. I started out similar to you. I was an assistant to an executive producer in the music video department at production companies like A Band Apart and Anonymous Content, with the goal of becoming a director and learning from the directors. I guess like you, I got to see all the different, you get to see from the beginning to the end, you get to see projects from the start to the finish. So I did that for a while, and I ended up eventually writing treatments for the directors, and I got to work with like David Fincher and Spike Jonze and Mark Romanek, and one of the directors, Jake Nava, I worked for. He did all Beyonce's videos, and so I would write his treatments for Beyonce ideas. And one of the things that came in was the video for Single Ladies, which actually came in with another song, and Single Ladies was a throw-in video that she just wanted to do. The brief was she just wanted to do like a dance routine. So at the time, YouTube had just sort of started, and there was someone had taken a hip-hop song, Walk It Out, and they had mashed it up with a Bob Fosse dance routine. It looked like it was choreographed to that song. So basically, I just sent Jake the clip of that video and said, here, you should just show this to Beyonce. So he did, and long story short, that video was basically, Single Ladies was basically a recreation of that video. And then from there, it just went, all the people I knew at the record labels knew that that was sort of my idea. So I finally made the leap as a director. And we also, like, at the time, budgets were going down. They're slower than they've gone down now, but a way to supplement that's when all the product placement money was coming in. That's why you'd see the video with like the Verizon phone, and then Interscope actually took that to a new level, Jimmy Iovine with Beats. Yeah. And then when I became a director, it was right around the time Jimmy Iovine had started Beats, and every time I directed a video for Beats, for Interscope, I'm sorry, at some point, you knew at some point the record label was coming in with the headphones, and you had to shoot the artist with the headphones. And then what was great is the public had no idea. So anytime you saw any Interscope music video, which was like Lady Gaga, LMFAO.
Sunglasses was a big one.
Yeah, Korea sunglasses, yeah. So like, but Interscope would make you, because Jimmy owned part of Beats. And then he would actually bribe you with it too as a director. I remember I did this video for Eva Simmons, and I needed to do some beauty cleanup on her, and the deal was if I put another beat shot in the video, he would give me the money to do the beauty cleanup. So of course I did it because I wanted to do it anyway. So from there, I met a group of people, about 5 people in Venice Beach, that were starting a company called Maker Studios, and they were these guys coming in, and they were just doing these vlogs on YouTube, and and I had a friend who was kind of involved with it, and she showed it to me, and I didn't understand it. I didn't understand how like these guys with like a flip camera and iMovie could get 500,000 views on a video of themselves. It was 15 minutes long with some talking, and I started asking her questions like, well, how do they do this? How does this guy do this? And like, how does this one guy who has like 4 kids and like he makes a video every day of his life, like how does he pay for his family? And she's like, oh, he's making like $350,000 a year off YouTube. And I was like, what? I'm like, at first I was kind of mad because I was a starving music video director when the budgets had gone down. I'm like trying to live off my unemployment and like try any money I could to make a music video for low budget stuff on record labels, even at the time. And but I was like, if you can't beat them, join them. So I started with that company, and then one of the things I did with them was start with brands. Like if brands will want to get in front of this audience, because at the time no one understood what was going on in this audience. And my whole thing was like, these guys are going to backdoor Hollywood. They're going to revolutionize this whole thing, because these guys can go out and they can get more views and more of an audience than just almost any celebrity at this point. It's insane. So I started kind of reaching out to brands and people I knew, and then I started directing and concepting the content that we would use, where we would get the brand money. I did one of the very first things we ever did with Planet Hollywood, and we got some money from them to create some video. And it was a time when flash mobs were big, and we created a flash mob video in their casino and made it look like they had nothing to do with it. And then Robert Earl actually went on to sell the hotel, and they actually ended up selling it for more money because that video created so much insanity for them. Yeah. So then I did that. You know, Maker went on to sell to Disney for $1 billion, and I didn't get much of that. But because I'd already left the company, and then now I still do consulting on that, and I just finished my first feature documentary film on a pair of identical twins, and we're doing festivals right now. Daniel Tosh of Tosh.0 narrates it, which is kind of fun. And we actually got...
Which is really hard. You got quite a bit of brand
Yeah,
partnership.
we ended up getting, I got brand money, in-kind money to finish the independent film, or actually without it I wouldn't have finished it, so.
And documentaries
Yeah.
are so hard to do that.
Yeah, so.
So everyone here, so we have Mimi, who has such a strong studio film background, right? We have Alma, who has such a strong independent film background. We have Daniela, who's such an unbelievable reality television. You might do crossovers from that, but I think that's what I know you mainly from, right? Courtney, talk. And Justin, who has music, right? It's all to do with music. So I wanted to bring together a really assorted collection of people so that you can see how brands can really partner with content of any type and learn from some of the people who are doing it the best. So can y'all talk about, well, real fast, in case I didn't do this, I'm Stacey Jones. I'm the CEO of Hollywood Branded, if you were not here a moment ago to listen to the first part of the panel. So do y'all want to share what some of the, biggest, and some of you touched on it a little bit, but some of the biggest brand partnerships that you have done, like that you've either done yourself or that you've seen others do within your space that you think are phenomenal? Mimi?
You want to start with me?
Sure, you started before, why not? It's been a while.
I mean, there's a lot of really good ones. But I think what's actually interesting is, and I was thinking about this earlier, there's a very big difference between live action and animation in terms of integration. When you have a live action property, it's easier to be organic. It doesn't mean everyone does it well. The stuff that I've seen that I think works really well is the stuff that I saw at Universal that we did with the Fast and Furious series, because there's going to be cars, there's going to be tires, there's going to be motor oil, there's going to be things that are really organic. And so I feel like that really works, and I also feel like in that case, when we worked with GM, the way they sort of took the content and used it felt really organic, even as they used it in their ad campaigns. So I feel like, the more organic you can be, the more powerful it is for the consumer and the less distracting it is from the actual content. And I think that's something that you have to be really careful about, because if it's super blatant, it almost can backfire. And that's something that we actually dealt with a lot when I was at DreamWorks, because, and this was when, so the Chinese market was blowing up, and in China, it's a really big deal. They feel like they absolutely have to have product placement. I mean, it's so important to them. And I don't actually, to be honest with you, personally always believe that product placement is necessary to do a great promotion. I think it can be, but there's a big difference between placement and integration, and I think a lot of times brands don't really understand that. And it's not always possible to have real integration in something, and a passive placement isn't going to make or break whether you're able to do a good promotion. So I think sometimes you end up in these sort of crazy loops with partners where they're like, well, just, we have to be on the set screen for 2 seconds, even if it's in the background, and it's like, this is not going to make any difference, and you can do a great commercial that basically makes it seem like you were directing the movie if you do it right. And sometimes that gets very hard because it becomes very important to them. So when I was at DreamWorks, when we were working on Kung Fu Panda 3, obviously the Chinese market for that film was extremely important. And there's a brand called Yili, which is a milk brand, which is a humongous brand in China. And the budgets that they spend on promotions they're obscene. I mean, you dream about getting a commission on that. And they really wanted placement. And the problem with doing placement in animation is it is so obvious, and it takes you out of the story. There's just really no way to do it in a branded way that doesn't kind of jar you, unless it's something that is designed specifically to have brands, and Kung Fu Panda set in ancient China. So The compromise actually that we came up with was there is a scene where the baby pandas are playing and they're drinking milk, and in Chinese characters, it says cow's milk in Chinese characters. It doesn't say Yili, but because nowadays there's so many different kinds of milk, and they were willing to do a big promotion in China that was sort of the compromise, and it took a while to get there. But what we had to make them understand was that it would actually backfire on them. It would look terrible, in ancient China, to have a milk bottle that said Yili. It was just going to be too weird. So, that's a lot about really pushing creativity and working closely with your partners to be creative and not just say, okay, it's not going to work, can't do it, let's walk away, right? But also really looking for, okay, how can we figure out a way to make them happy that doesn't compromise the creative? And at the end of the day, no matter what the brand is, no matter how big the promotion is, if you screw up the movie, you've lost. I mean, you've lost.
Because nobody's making money at that point.
Because that's the last thing you want is the reviews to come out and it say, this is just one giant product placement. It totally messes up the story. You couldn't even focus on the plot because you had so many labels flashing in front of you. So, like I said, the stuff that is really organic, like the Fast and Furious is kind of the best stuff. That sort of, that comes from what the story is. There's certainly been other movies where it's a little more challenging and you can still come up with great stuff. But, when you get those kind of movies, and by the way, those deals are not easy, even though they're organic, they are not easy. Because no matter what you do, the brand always wants more. You can say to them, you're on screen for 5 minutes, you're in this chase scene, the car flips over 16 times and keeps driving, and then they say, oh, but I don't want that actor driving the car, I want the other actor driving the car. And it's like, well, the other actor doesn't drive in the movie. So it's always a negotiation.
Yeah, it's always a push-pull with brands and productions, and it's just meeting in the middle to make it work for both of you. Courtney, what about you?
So how I really go about any deals that I make is all based off of the content. So what I do is we have 8 producing teams, and they'll come to me with a story that they found. And they're like, Courtney, what can we get for this? And just to be clear about what I do at my job, there are 2 sides of what I do. There's trade outs, and then there's also integrations. And it's a sticky world because when you're under an umbrella like NBC, there are big paying advertisers. And NBC is always going to want a piece of whatever branding that you give to a certain brand. So a lot of times brands don't have the money to buy a whole media package in addition to an integration fee. So it's really a, going back to like what you were talking about earlier about the Coca-Colas and Pepsis, why don't you find a Fanta? That's where I've been really successful, honestly, is finding those brands that are, maybe they're kind of cool or they're, kind of skating on the cool, but you can make them cool. Like, as a content producer, you have the say of how you can control that content and how you can position that brand, and if you can make a brand look cool. So if like you have a cleanse with this company called D'Herbs I work with, which is, it's a hard sell, but how can you make it cool? So I would say, to go back to what you said, my favorite integrations are those that are the most organic. So I'll give you an example. One of the producing teams came to me with a story of this girl who was in Sam's Club, and she was singing on the karaoke machine. Her friend dared her to sing a song, and this woman's voice was out of this world. And her story went viral on social media. And the producing team comes to me and they're like, we want to do the story. I'm like, well, Sam's Club's got to pay if they want to come in. And we had 1 week I had 1 week to close this, and that's actually pretty generous, to be honest, because a lot of times I'm calling the night before, as I'm sure you probably know. So we had 1 week to close this, and the most important thing when you're reaching out to a brand is you need to be able to speak their language. You need to do your research. Go online, figure out what their messaging is, who they're reaching, and really make sure that it's a fit, because you're going to waste your time and their time if you're calling and saying, I don't know, we could do anything, but you got to come to the table with an idea. So we had a segment called Put Me on Steve, and I came up with the idea of why don't we make this a segment called Put Me on Steve. We will make it as organic as possible. Sam's Club will come in as, as a partner, but how I made it organic was we were able to make it organic because she was singing at a Sam's Club, right? So it was like we had that natural, organic, seamless integration there where it was like, yes, like there was no way that they wouldn't want to do it, because why would you not want to get more press off of this amazing story? So I reach out to Sam's Club, I say, here's the idea. I'll have your logo in the monitor when we mention Sam's Club. At the end of it, I'll have a messaging point there. So in the script, I had Steve say, so what made you go, pick up the karaoke machine at Sam's Club, right? So it was that organic. So it wasn't like, so Sam's Club is the #1 box store. Why did you like, you know what I mean? It was organic and seamless. So then at the end of it, we gave her a check for $10,000 with Sam's Club logo on there, and the entire audience went home with karaoke machines. So everybody felt like a win, which always is the most exciting when the audience gets involved, because when they start screaming, you can't help but feel the energy. It's contagious, and brands want more of that. And from that one integration, I was then able to sign on Sam's Club for a much larger deal for the next season. So,
Daniela?
I'm going to echo a little bit of what Mimi and Courtney said, of course, because organic is key. And also understanding the brand you're working with and what their message is extremely important. I also, after all these years, really feel comfortable in, getting used to the power of no. Like, you have to be able to say no if something is the wrong fit, or if you're going to be shoehorning it in, because everyone is going to be unhappy. Production is going to be unhappy when you bring it in. They're not going to want to do it. They're going to fail on the terms. They're not going to deliver or execute properly. So you're going to have everyone upset with you on that side. The brand is going to be unhappy because it's not going to come off as authentic and real. So then they're going to feel like they were, got the short end of the stick. So I think it's important to really feel like what you're doing works for everybody involved in terms of production and also the brand, right? So you're a conduit. And then sometimes you also have to factor in the network, the studio, whoever else, make sure that you're in line with what their objectives are. The second part of it is, for me, where it's been the most successful is where we are helping people and changing people's lives. So, which happens all the time. Like, there's a lot, and I've done $1 million deals that, to me, $1 million fee plus whatever, product, integration, whatever it was we were doing, trade out, as we say, services. And, that can have its own higher reward. But on Queer Eye, we've done some really simple things. Like, there was a trans man who was getting first suit, and it was a whole situation with getting the right fit on suiting. We found a custom suit maker who was going to turn around that suit in time for us for 48 hours. And it was like one of the most emotional integrations and brand work that I've ever done. And again, it was seamless.
It really was. I saw that episode.
We weren't forcing it through. Right. So sometimes that's why even now brands are getting savvy, because they understand the audience is savvy too. Everybody knows when they feel like they're about to watch something and they're like, that feels sponsored. When it feels authentic, and it's natural, that's when it's the most successful. And then when there's a human element or component to it, where you're actually helping somebody, where the audience can really connect and where it resonates with the audience, then it's a home run.
Yeah. And that works great with reality and talk, harder sometimes with scripted.
True.
Yeah.
Alma, what about you?
Well, I've been fortunate to be on both sides of this, of the game. I started in PR and events, and having my public relations company started an independent film. And so I was working with, I launched the company for Howard and Karen Baldwin, who did the movie Ray with Jamie Foxx. And it was a privately funded, it cost $40 million. It was one of the largest independent films out there. But there are still, and because it was funded by Phil Anschutz, you would think you'd have no problem with budget, but there are always problems. So you know, and then also there are creative problems with the director's vision, the executive producer's vision, and then you still have to bring in the money to buffer, you know, your P&A, and we didn't know who was going to buy the actual film. So I was able to bring in Jeep, and we were able to make a $2 million deal, and everything was great until the director started wanting to put Jeep in very strange scenes where the Jeep would get stuck. And all of a sudden, you know, Jeep, who's paying $2 million, keeps saying, we're not going to have that because we're trying to sell this cool car. So then how do you go about finding the safe zone where everybody's happy? The director's vision is not compromised, and the money is still left in the bank, you know, so your production doesn't shut down. It turns out that people, when you go back and forth and you do have relationships, you are able to talk those things out. And what I find is important is to not just look at each situation. You know, you're creating relationships. So another example is I was able to launch Chobani yogurt. I don't know if everybody knows about it, but Chobani yogurt was, you know, just a no brand, you know, a Turkish guy with a vision. And so it turned out that when I was working on the film Precious, I was also launching a type 2 diabetes and obesity prevention program for girls and for kids in schools in New York City. This is where we were shooting Precious. It was also a privately funded film. It was $14 million. But at that point, again, you're still having issues with, you know, who's going to pay for the crew, and, you know, who's going to feed the crew and all of that. So I was able to bring in Chobani, and while I was integrating them into my type 2 diabetes and obesity program that Katie Couric was involved with, they were happy. They were starting to get, you know, their name out there via Katie Couric, who was still on the Today Show. They were able to pay for, you know, production costs and some P&A, and, you know, literally putting food in the hands of our crew while they were working. So you have to be creative, and to make sure that if you have a small production, you're not just saying, hey, I just want this brand to pay me this amount of money, so you know, I could show two seconds of it in my film. You have to sort of have a forward vision of how you're going to give them the recognition they deserve, whether it's during, you know, production or post-production or marketing after, you know, the film is made, whether you build in publicity for them and give them other value that they could, you know, take home and say, this is how this has affected our growth. So there are many more examples like this, but those work.
What's P&A?
It's at the advertising budget.
P&A.
Yeah.
Justin.
I would echo everything pretty much they said. As far as campaign and music videos, I would go back to the Beats campaigns, because I mean, now it's part of Apple, and it's just, it really worked, but it was organic because you had DJs and music artists putting on headphones, so it fit.
Which they already needed.
Exactly, yeah. So, and then everything with, you know, what you were saying about how brands always want more, and, you know, and then I can speak to it on like the influencer level when we started Maker and we started trying some of these, you know, brands for this YouTube star to talk about, like, we failed, but you learn a lot from your failures, because it would be like, Snickers would be in the video and he would hold the Snickers up and he would like smash it or something, and then Snickers would be like, why did we pay all this money for him to smash it? Or if we wouldn't, we always needed the middle person to sort of like what the brand wants to do and then what they want to do, and what the celebrity influencer wants to do is always two separate things, it feels like. So you need that person in the middle to massage it, because if they don't, if they read the copy that the brand does, then, this happened as well, where, all the comments it's almost worse in that space because it's all written out, and you can see like the kids saying like, F Snickers, I'll never eat a Snickers again, and like it's getting thumbs up and everyone's agreeing, and you're a brand, you paid all this money, and you're like, we paid money to have us tell people they're never going to eat it again, so you have to sort of find that middle ground of like, and I think it's case by case. It's not just, there isn't a cookie cutter like, here's what we'll do for everybody. It goes, everything from a feature film to all the way down to a YouTube video, like, who that person making that YouTube video is, and then what the story is in the feature film, like you have to, and the director and all these things you have to take into consideration. And so it's not, there's no formula that goes across all genres. And so you have to, massage everything, and the best ones are organic. And then secondary to organic, I would say the ones where like they're almost too obvious with it, and in being obvious, like that they're getting paid. Like we found that actually at Maker to work. Like sometimes we would have some of them just say like, hey, I got paid $50,000 for this. Isn't that cool? And then they always be like, that's so cool, that brand paid you. So
Wait, that's Talladega Nights.
yeah, Talladega Nights. Yeah, see, yeah, that. I was trying to think of a movie example. Yeah, and that's,
Then that's still transparent, so
It's
people
yeah.
don't feel like they're
It's
being.
authentic.
100%. Yeah, it's authentic, but it's more of like, it's not. It's organic in a different way, but it totally works. So those are the two sort of things that I think work the best.
And, you touched on, I mentioned earlier in the last session, programmatic. That is why programmatic product placement and brand integration deals will never work, because it breaks the creative process. And so you can't just buy your way into any piece of content and just be like, magic, I'm going to buy this, and I'm looking at the audience numbers, and perfect. You actually have to have a conversation with the creators. And the other thing, Justin, that I love that you talked about is you need that middleman, because it is a different language. Productions and brands, it's like, it's not even Spanish and English. It's not even a romance language. It's just not.
And if it was up to producers, they would have at the end of their segment, and I can only speak to a talk show, this segment was sponsored by, but let me tell you, that doesn't work anymore. Brands don't
They'll
want.
even ask for just like an end credit.
Literally,
They'll give you a
can't we
credit.
just give
Nobody-
them
the
an
credits
end
are rolling
credit?
by.
And nobody watches
Flying.
the credits. Let's be
No,
honest.
I mean, producers on films, they want the money,
They-
but then they're like, well,
They're not willing to
we're
do
not- I'm
anything.
not gonna do that, I'm gonna do something where the brand looks foolish, and you're like, that's
But if it's
not gonna
built
work.
in and they're already using it, then it's gonna happen, and it's all gonna fly regardless, so.
But you do need somebody who's Switzerland.
Yeah, who's
You need
managing it.
somebody who really understands both sides and can speak to both sides and be an advocate for both. Because for me, I am the biggest consumer. Like I love packaging more than I love the product itself. Like I mean, I've always been that way. You can ask my mom. My mom told me when I was 3, she took me into a lighting store because she's like, there's no way Courtney's gonna want something in here. Oh, hell yeah, I did. I found a light and I had to have that light. And then it was like, I've just always been that way. But I'm also a producer, and I also want to create great content, and I want it to feel organic, and I don't want to be so in your face. I just did an integration with this company, and I've found that the bigger companies you would think would be the most nitpicky. They're not. They're actually pretty easy. It's like I just did one with Bounty. It was a walk in the park. They were like, we don't really want our. I had wrote something when I was pitching them about the Quicker Picker Upper, and they're like, we don't want it too, in your face. I was like, no worries, because it won't be. But but then I have smaller companies, and this is what you're going to experience, especially if you're a smaller production, wanting dollars, and you don't have big names attached, or you don't have a big network attached. You're going to have to get creative there. Wow, I just lost my train of thought.
Okay,
Literally,
no worries. I'll say, brands will sometimes even
It will
ask
come
you,
back.
what's the ROI? They'll
Yeah.
even
Yeah.
say, like, what is going to be the return on my investment for doing this? Like, they want to see sales the next day. And I'm not going to, there's times where you actually can see that. You can, I'm not saying it's Home Shopping Network, but on Apprentice, they would showcase an ice cream and it would sell out in 2 days. Shark Tank, there's definitely things that are translating that you're seeing on Shark Tank, and everybody knows Oprah's Favorite Things, which was legendary, right?
Yeah.
Like, who didn't watch that and then you wanted to shop? And it's the same thing with scripted, too. You know, when there's a beautiful actress and she's wearing a certain outfit or using a certain beauty product. So that's why I think there's a power in placement as well, because it, you know, things can translate, but to say that you can deliver an exact formula and a return on someone's investment is completely
You can
impossible.
never promise
and
that.
you can't.
Only if you never want to see
So,
that partner again.
I would say also, as if you have content and you're working with the brand, also put some of it back on the brand. How are you going to promote your partnership with the relationship? Are you going to do something in store? Are you going to, if I give you a clip, or if we have even somebody on set taking pictures, because who can't take a high-res photo today on a set? Your associate producer can. If we're going to send you a picture,
is wonderful.
right, what are you going to do with those pictures? Because if they think that we're like magicians and are going to unlock a secret
Yeah.
door to sales the next day, then already you're getting people started on the wrong foot. It's all a partnership. That's why it's called an integration.
Partnership marketing.
I remember what I forgot. I'm sorry about my brain lapse.
Okay.
I had a brand, so they're an online site. I won't name what it is. And they wanted to put B-roll of I'm sure most of you know what B-roll is, but video of their website in our monitor, and they were like, because we want people to see how you could put in. They had a promo code at the end of the segment. They were like, we want to see how you type in the promo code, see how they check out. I'm like, no, like that to me is like brands think that people don't know, which that's a really good way to think of it, because we always think people at home are stupid. You want to talk in layman's terms, because if you can't understand it, how can they, right? But with certain things like that, you have to have a middleman who's like, that's not going to work, and here's why it's not going to work, because you're going to turn viewers off. They're not going to want to go to your site, because they're going to be like, do they think I'm stupid? Like, this was just clearly a commercial. Like, next. Like, people don't want to watch commercials anymore, which is why I buy ad-free on Hulu. I mean, I don't like to watch commercials. I like to see brands, though, and I like to see in an organic way. So to touch on your point, like when you're able to do something that is heart-wrenching and, you know, heartwarming and really impacts someone and changes their life. Like I, one season, gave away a home for the holidays. And let me tell you, there was not a dry eye in the audience. This woman and her 3 children were living in a shelter, a battered women's shelter, had completely lost everything. She had a job, but her job literally paid for what they had on their table, and that was it. But it was with this company called Pangea Real Estate, and you wouldn't have even known that there was a real estate company, yet you knew that this company did such an extraordinary thing that you wanted to support that business. And I feel like that's really where you can shine, is how do you create content, branded content, that makes people want to get involved.
So, you know, we've been talking about different things that are in screen, like on screen, in screen, and content. How do you take it beyond that? How do you create content besides the photo? You know, Danielle, you mentioned, great, you can take a photo. You know, Alma, you've done this. You've worked with brands. Mimi, you've certainly done this with promotions, and y'all all have. What are some good examples of how you've taken it from, okay, you're in the content, now let's get you beyond the content?
Well,
Go for it.
okay. I think that when you actually look at, I'll speak for film. I've done more film than television, and you take a look at the whole project. And since I come from a public relations background, I take a look at what can you use within the production that you could use even in post-production or in your marketing campaign, whether it's your content, whether it's your photos, whether it's your sometimes celebrity endorsement, they just happen to love a product, you know, when it's available to them and they don't have any conflict. And sometimes often I've built in my own press around it. And I've been lucky when I was doing the film Precious to go from the very beginning through the Oscar campaign to the Oscars. And so I built in private dinners, I built in a partnership with a magazine. And so all of a sudden, you create continuity, and that creates familiarity when it comes to your consumer. So you're not just going to see it. Maybe you won't ever catch a brand for the 2 seconds on screen, but then you're starting to associate the brand with certain. And if you're lucky, you know, and if the film does well or your show does well, you're starting to associate that brand with the actual celebrities involved or the story, and that creates a lot of. I think that sometimes creates even more of a brand identity and. Than just the two seconds on screen.
And actually, that was something that I was saying earlier.
And recognition, yeah.
And I think that's actually very important. Like I said, I think a lot of times brands get very caught up in, am I getting my 2 seconds or 5 seconds or whatever it is? And the reality is, if they do a good enough job taking the content, taking that IP, whatever it is. So if you're General Mills and you're working on How to Train Your Dragon and you're creating toys and you're doing a TV campaign and you're doing in-store and all of that, you don't need necessarily to be in the movie. You're going to get associated with that movie through all of that. And then yes, on the studio side, you know, we can be doing some posts and hey, you know, if you're a fan, you don't want to miss getting all these toys and make sure you collect them all. And you sort of collaborate on that, but I think to your point, it becomes very important, and I think you made this point as well, that, you know, as a brand, what are you doing to magnify that relationship and to fully take advantage of that partnership, whether you're in the movie, not in the movie for 2 seconds, in the movie for 10 minutes. If you don't do anything with it, it's not going to make much of a difference at all. I mean, probably short of Reese's Pieces with E.T., which was just kind of a fluke. You know, and I'm sure Eminem's still pissed that they didn't take them up on it. But, you know, there's very few things that are going to sort of jump out if you don't do the other things that come along with that.
You have to maximize the opportunity. So if you have a publicist, make sure that publicist it knows everything that's going on with, if you're choosing to do a TV activation, that they know the whole content and they can write a press release and shoot that off and get it out there so that everybody can be aware of it. And so there's continuity on every level. You have to buy paid social, boost post, retweet. If you've worked out a deal where you can give social, make sure you tag that brand as a partner so that they can, brands have millions of followers. They are just as much a help as you are to them. So I think that's the most important thing, is really making sure you're maximizing the opportunity. Because
but also for digital and for short form content, or for independent films, the advantage there is that you have a little bit more leeway with the content. So, you may have more leeway with the content than necessarily a network production. So you
or
can,
Netflix.
Right. Netflix, very little. Very little leeway. But, if it's your independent film, or if it's like your project that you're getting off the ground, or a music video, like I get called about music videos all the time. There's two things that you have going for you, which is, number one, you can go niche, which is great, because sometimes when you speak to a niche audience, like everyone in the world is calling Coca-Cola, like what you said before, don't call Coca-Cola, but when you're even have narrow it down to a specific demographic, we know this is going to appeal to. It could be so specific, like when I did RuPaul, but for music videos, sometimes it's a very specific audience to Latin, where we're doing something that's going to target LGBTQ. That, brands that will just want to do that, and that may appeal to them. That can be a huge advantage. And then you can service them with more content to use. So then they can use it on their digital and social. They can be more involved, and everybody wants stuff to
Win.
push out today, right? Everybody wins. That's your advantage there.
I did an integration with iHome, and in this segment, Steve is hilarious, right? But he's funnier off screen, and we have editors for a reason. You guys saw Miss Universe, I'm sure. My boss doesn't know how to say names all the time, and then he goes off on a tangent. But in this case, he was hilarious, and we were showcasing their new Aquio water bottle, which is a speaker and water bottle in one, which is cool. So we had this model, fitness model, on a treadmill, and she was like tiny and little, and he's like, and she was just kind of like doing a slow walk because obviously we weren't gonna have a run on there. And he was like, only if you look that good are you going that slow. Otherwise, your ass needs it. He's like, let me show you. So he gets on there and he starts running and he's like, see, this is how you fucking do it. And he's cussing in there and we're like, obviously this is not gonna make it. I'm telling the iHome client, I'm like, don't worry. They're like, no, we love it. I'm like, well, I can't keep it on because NBC won't keep it. But here's what I will do. I'll cut that clip and I'll give it to you guys to use for social media. It was just a great way to give a client who, paid a good amount of money for their integration and add an added bonus, right? And yeah, they started posting that and people just were dying over it. So those behind the scenes clips are really, can be really helpful as well.
So another question for you all, because I know this is something that's top of mind for everyone who's sitting here, is, Justin, we're going to start with you, since you managed to do this with a documentary. How do you find the brands? How do you find the money? How do you find the trade-outs? How do you figure out who to reach out to, and where do you dial for dollars?
Google. It's going back to organic and like what, looking at your content, whatever it is, whether it's a feature film, a documentary, whatever, and seeing like where, what would even make sense, like if, you don't want to, you don't want to obviously waste your time or the brand's time reaching out to someone that makes no sense because, and you have to have an idea. So from my documentary, it's on a pair of identical twins that are also two of the most iconic professional surfers in the sport. It's on their lives as being twins in the same sport, but they're from Florida and they're from a place called just east of Orlando, and there's the Space Coast is what it's called, because that's where they launched. Elon Musk launched the rockets and stuff. So there was a Space Coast Board of Tourism that one of the twins was already sort of in touch with. So it just made sense to, we got in touch with them, and we said, hey, look, if we'll say Space Coast this many times in our movie, and it is organic to the film because that's where they're from. So when Daniel Tosh is like, they're from the Space Coast of Florida, is not saying anything that doesn't make sense because that's really where they're from. But people don't actually refer to that area that much as the Space Coast of Florida. So, we did that and we got money for that, and it worked too because we've done some, some focus group screenings and some screenings here in LA, and I actually had a couple film producers I showed it to. One of them during the movie told me he Googled what Space Coast was, and he's like, that place looks really cool. I might take my family there this summer. So I told the Space Coast people, I'm like, here we go. We already have proof of concept. Like someone didn't know what it was. They heard it. He's looking at maybe a family vacation there. So, that's where I would say like whatever you're making and, that's where you want to start. And then from there, whatever contacts you have, people you might know, or sometimes you can just reach out cold. You never know nowadays, so.
Alma, you are really good at going in a different direction than I think a lot of people do for looking for funding sometimes, because you don't necessarily go brand direct, you go kind of executive.
Yeah, I think, and you have to start with your relationships. And so fostering, if there's one thing I have to say is fostering relationships is very important, because even if, and asking questions of the people that are professional in this field, because even if they don't represent someone or a brand or a company that could help you now, they could tell you where to go, and you go directly to the top person rather to the who can give you a very quick yes or no, or can refer you to another to another source. So I think, first of all, though, you have to know what your brand is, what you've got to sell, how you're going to make it worthwhile to anybody. So you have to know your product. And you walk in the door and you want to know why you are different than anybody else who's knocking on that person's door or that brand's door. And have a plan A, B, or C, because like as we talked, if you're looking for a certain amount of money, that's your ideal, and the company can't afford it, or they don't think it's a worthwhile investment. But then you sit back and you have a plan B where you go, how can I mitigate my cost? And that's a very real cost. So you may not be getting $1 million or $10,000, but you may be getting that in trade, and that's your craft service, you know. And then you start working from that level onto what are you going to deliver to the brand in the long run. You know, if you're starting from ground zero and you're wanting to finish a film or a TV show or a pilot, what are you going to deliver to that brand? And then also make sure that when you're having this conversation, know what you're going to be getting from that brand sort of during the lifespan of your project. So and build it into your contract as well, because people change their minds along the way as well. So you don't want to wind up in the middle of a production and the brand says, "Oh, I'm pulling out because I'm tired of it, or I got a better deal somewhere else."
They get distracted with bright, shiny objects all the time. You want a
all
contract.
the time. So I think being creative and starting with your relationships and making sure that whether you Google or you go to, I usually go to the people that I know, and I don't take no for an answer. I just say, well, if you can't help me, who can?
Right.
And that's your direct line to getting funded for whether it's your film, your television, your pilot, short form. I think that's my take no for an answer. Don't take no for an answer, I mean.
Mimi, what about you?
I mean, for me, it comes down to having a strategy, sort of, okay, we have this, whatever the property is, okay, who's our audience, what's our strategy, what makes sense, what's the pitch for each of these. So we will typically create a pitch list and have some idea of what the pitch is, right? So it depends on the property, obviously. But I never call someone and just say, "Oh my God, we have this great movie. You're gonna love it." There's always sort of a why. This is why I'm calling you. This is why I think it's a fit for you. So, and then it's, either I know someone at that company or I figure out how to get to someone at that company. But I never call someone without the why.
Daniela?
I would agree with being relentless, but not delusional. So, right, because sometimes people in Hollywood, they mistake those two things. And they keep it going. It's like, no.
You're like, okay,
They
just don't understand.
Boundaries. Right, because then you're never going to go anywhere. But also, I'm going to say, I think we covered all of, when you're coming in the door with a big project. But if you're not coming in with a door with a big project, I had some friends come to me recently with a great show that they'd put together in Nashville. No, Memphis. And they had the cast put together, they had everything, they wanted to package this show, and they were thinking about how to sell it and how to reach out to brands. And my advice for them, and for a lot of people who aren't necessarily connected, is don't forget to think locally too. Look around you and think at local businesses that may have a budget and want to get involved. It doesn't always have to be Fortune 500 companies and big brands and Google. It can be who is everybody, especially if it's a specific project, right? And it's going to appeal to a certain audience. If it's stoner skater kids, then exactly where they're going in, eating or hanging out. Go to those brands and see if they want to be in the movie or help you out or participate, and reach that segment of the population. Because the great thing is right now with digital, you can get a huge audience, like a bigger audience than you would even get on network TV. And you can argue that too, you know? So, and I think it's great to work locally. That was my...
But you're going to need, if you're going to go digital, you're going to need to be able to actually tell the brand what your plan is. It's not just like, we're going to blow up and be viral. Right. You need to actually tell them, okay, you know, we are doing this. We're going to supplement, as Courtney mentioned, we're going to boost posts. We are going to have an actual strategy for what we're doing with our digital campaign. Super important to
But
do.
even if you're aligned with an influencer today, it's like a friend of mine said, like brands will give you a hard time about spending an integration fee on a network show, but then they're writing checks left and right to be associated with influencers. So all of a sudden you have somebody in your project that has like a great footprint on social media, and now you have an argument for why you're bringing in a sponsor.
Courtney, what about you?
I mean, they touched on everything that I would want to say as well. Find a decision maker and be relentless in that pursuit. So for me, press releases are some of my best friends because I find contacts on there because I know if there is a publicist on there or an agency, chances are I'm going to get to the right person. So if a publicist is not the right person, I'm like, who is? Go on LinkedIn, find a contact, reach out to them. The worst somebody can say is no. That's it. Say, okay, cool. All right, nice to talk to you. Can I hit you up later? You know, keep a relationship because, you know, relationships are everything. It's your bread, it's your butter, it's your livelihood. And, you know, I can't tell you how many no's I've been given and I didn't give up. And they would say to me, Courtney, thank you. They would say to me, Courtney, you know, just, you know, keep us posted, like keep us in mind next opportunity. I was like, okay. For example, Google, I had wanted them for years and I was going after them. They kept telling me, no. And this was just trade. This wasn't even money. The first season on Steve, I mean, I would call them and say, hi, I'm Courtney Jackson. I'm calling from Steve Harvey. They're like, is that guy with the mustache? And I was like, and he's like, the bald-headed guy. I'm like, yeah, him. To now, I call him, people are like, oh my God, I love Steve Harvey. But it was a struggle at first. So have a relationship, build that relationship. Once I kept on going after this Google contact, I would send flowers, just thinking of you, just buttering them up. And then one day I was like, okay, I want to do a Google gift guide. It will be all Google. I call her on the phone. I'm like, I have this great idea. It's going to be Google branded. We're going to do a Google Chrome. We're going to do a Google Chromebook. We're going to do everything. And here's the messaging. And we're going to get this kid coder in there because he's so Anyways, I finally closed the deal, and it took 2 years. So be relentless. Keep that relationship and find a contact, find somebody who can, give you an answer. Don't waste your time though. If you're just spinning in circles and they're just spinning, if they're just like, oh, well, let me get back to you later and later, go on to something else because there are many fish in the sea. There are many brands who are dying to do more work and get more content. So find those brands and for me, what I do is I will put a list together of a ton of different brands I want to go after, and I just call them. Here, I would have to say, the one thing that, as a producer, that I can't stand more than anything is when somebody wants to pitch me and they send me a novel, right? Hi, Courtney, blah, 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 and I'm like, you lost me. Tell them what you're actually wanting. Say, hey, can you jump on a call? Can we talk about this? Here's a short thing I want to talk about. Don't waste their time because really you're going to be wasting your time too if they're not interested. You know what I mean? So be efficient and be precise with what you want. That's what I would say.
And we're getting close, if not there, to the end of this, but I wanted to see, does anyone have any questions? Of course, yes.
So I have worked with marketing companies to work on a TV show, and I've gotten offers, but they're really crappy offers. But in order to get them, I was like sending them cakes. Like I had bakeries delivering cakes with like Audi and different brands with their names on the cake. So I'm curious, like, What do you mean by,
And this is you pitching brands
Because
or
I have celebrities already like attached. I have like, you know, a few celebrities and they're big names. So I try to bring in brands to pay for the actual content. So Audi gave me a crappy deal.
But they gave you a deal.
They gave
Yeah.
me a deal. And that's
Start
why
there.
I can just start with that. You know, they wanted to integrate the car
That's
into
good.
the scene.
Perfect. Prove yourself, and then give them something that's so valuable, and then how can you one up it the next time?
Right.
Yeah, grow the relationship, I would
Yeah.
say. You know, as long as if you got in, then you need to grow that relationship and realize that, like I said, you have plan A, B, or C, you know, but as long as you're in there and you know the minimum of what you want, you know, and if that's helpful to you, then like Stacy said, prove yourself, and then the next deal, now you've created a relationship where you're also showing integrity in what you're doing, and that's really important. Don't do a bait and switch on them either, you know, and then that grows a relationship, I think.
I would say set some limits, because if
Oh, yeah.
if you give them the gold package,
No.
You're
they don't,
never
they don't
gonna
respect. Then they're
expect
gonna
100%.
expect the gold package
Yeah.
for nothing next time. So you say, hey, I'm really thrilled that you came to the table. I can't give you what that because I need to fill my coffers with this, but I can give you this, and it will be great content, and I'll deliver it on time, and it'll be great, and we can start our relationship. So you kind of want to balance. You want to make sure, and
You
want
want
to
to have
clear.
room to scale.
Yeah.
You need to value your content, right? Because a lot of times there will be agencies that will pitch me and they want to come on for free. And I say, well, would you go into a store? If you go to Nordstrom, would they give you a free top? No. So I'm not going to give you a free space here. If you want to be a part of it, you obviously know that we are valuable. So be able to give exposure that matches the dollar amount, because that way you can upsell them later. That way when you're going back and you're like, because you did such a great job on that small one, you know, if they loved it, then say, hey, I know that you love this. Why don't we try this now? It's going to be a little bit more expensive, but it will be worth it. I guarantee they'll do it, because remember, if you did a great job on that small job, they're going to trust you to do a great job on a big job.
Oh,
Yeah.
one more quick thing. When you speak to other brands, say you've worked with Audi.
Exactly.
Totally.
I wanted to take the
Yeah.
crappy deal, just so they
Yeah.
can be the first, and
Yeah.
everyone else can,
As long as it doesn't cost you money, you know.
Yeah.
I need insurance to drive the car.
Because then you have a proven
Yeah.
record
Yeah.
that you've already been working with brands, which will make other brands feel comfortable working with you.
Right.
Case studies, I've never been sorry for doing a case study where I've pretty much worked for free, because if you can package it and you can turn it into a cool piece of content later on, and I'm not saying work for free, but I'm saying I have never been sorry when I've gone down that path, because it's leveraged me into six-figure deals.
And Audi's a good brand name.
Such a big one.
Yeah.
Yes.
The deal was so crappy, though.
You have to always think longevity.
Yeah.
It can't just be this one-off, because if you're expecting a one-off, that's what they're expecting, and you're never going to work with each other again. You have to look at partners. Think about this as a partnership, because that way, no matter where you go, they'll follow you.
Yeah, you can even say, oh, like, I really appreciate you coming to the table. I'm disappointed that you weren't able to do more, but I really want to work with you. So let's look at this as the start of something.
Yeah.
Okay.
Yes, go for it.
Thank you. You guys mentioned an integration fee earlier. I wanted to know, is that a percentage, or is that, do you have any kind of ballpark figure?
It's hard dollars. So it all ranges from big blockbuster movies to talk shows. If you are on a major network, for us at Steve, our starting rate is $100,000 for a 4 to 6 minute segment. So, and how we justify that is based off of the media rate. So if an advertiser's coming in and they want to buy or purchase a 30-second ad, they're going to be spending $35,000 for that 30 seconds. So if we're giving you that 6 minutes exposure, that's how we value it.
And on the film side, we just make it up.
For real.
Right, yeah.
For real.
We do.
Every
Depends on what
figure.
you think you can get, and then you
Yeah.
scale it from
Yeah.
there.
You start high, know that you might have to go lower.
Yeah.
And you're like,
Always start higher and then go, yeah.
And that's how you can scale back your exposure too, because if you go to a brand and, so if there's a fee, right, let's say, just to go back to your question too, I would always come to the table if you have a client and say, here's what I have to spend. I have $50,000. This is ideally what I would like. And then that way, somebody on the other side can be like, okay, for $50,000, here's what I can do. And then you got room to be like, but can I get this too? Because it's a done deal, but can I get this too? And the chances are they're going to want to work with you. They're going to want those dollars. They're going to say yes, for the most part.
So should we look at the integration fee as another type of sponsorship? It's just called an integration fee?
It's advertising in a much more organic way. It's a way that you can get involved with a big celebrity without that big dollar amount attached to it. Because if you, let's say, were coming to me to work with Steve Harvey, that's a 7-figure deal, right? But you're coming to the Steve show, that's $100,000, right? So in comparison, you're getting a great deal. I'll give you an example. My friend Emily Kaufman is over here. She is the travel mom. She does a ton of television. Emily and I work with Sandals Corporation, Unique Travel, and Sandals, I only did trade outs with them for years. And I'm sure any one of these ladies can tell you, it's hard to turn a trade out into a paying client. So Emily and I, we've been working together now for, 7 years, Emily? She was a correspondent on our show in Chicago, and we would always do these great travel segments together. Well, Sandals wanted to work with Steve, right? But Steve requires a lot of money. And Steve also wants ownership because Oprah told him one day that, Steve, whatever you put your name on, you need to own some of it. So he had it in his mind, I gotta own this. So now he wants a piece of everything. It's not gonna happen everywhere, right? No matter how big you are, some companies are just not gonna give up real estate. So Emily came to me and said, okay, I have this budget. Sandals really wants to work with Steve. What could we do? I was like, I think we were just talking about like why it wasn't working. And I was like, why don't we do something on the show? Why don't we just blow it up big for them? Because usually with a trip giveaway, it's standard exposure. You get a verbal mention, you get a few photos on there, you get an end credit, and you get a logo on our website. But I was like, Emily, we'll blow this up. We will create a whole Sandals Cabana area. We'll bring in sand. I'll have palm trees. Emily, you'll be there. You'll be able to talk a little bit more organically about like the functionality of the properties and what they have involved. Anyways, we went to Sandals, Emily and I, and we closed them. And it was a big deal because they've never been a paying client before.
Your points to expand. I'm on the other side. I'm an independent. I think I do what everybody else does here. I don't work for Steve Harvey. I work for the travel mom who is me. And I look like I'm a big company because I go to the Steve Harveys and say, hey, I got this. And we took that and blew it up. Sandals used it internally. They promoted to their company. Look at what we did with Steve Harvey. They promoted to the industry. They did a big, huge press release. Look at what we did with Steve Harvey. So it was like Courtney said, the win, 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 win.
We did Instagram posts. We did Insta stories. You can even offer Facebook Live. It's such a great way to, have something behind the scenes where it feels hot and cool. Back to Stacey's point of like, you want that. A brand wants to feel cool. They want to feel important. So like, how can you make them feel cool? You got to just think outside of the box. And that was a big win.
But to further address your question, an integration fee could be, it sort of can be used interchangeably with the word product placement fee. A lot of times it's the same thing.
Sorry about that.
So it was like a segment feature, but it was beyond a product placement.
Right.
In that case, right, and that's
delineation.
That's the difference.
The integration typically refers to when the product's being integrated or used, and a product placement fee is we're just holding the product and we're charging you a fee.
Or it's in the background.
It's in the background, right. So
It's
there's passive placement and active.
Yeah.
heightened. If something is heightened, right? You're going extra above and beyond. It's not just that the product is there. I mean, this could, from the right content, get dollars. But, you know, this and being like, oh, it's so cool.
Yeah.
You know, that's going to be more likely to get dollars.
You're creating a story.
And there's so many different levels depending on where you go, but if you're working with Mimi at DreamWorks, it's gonna be a lot more money than a talk show, that's for sure.
We have a level what?
Not even gonna happen.
Unless Jeffrey decides it's gonna happen, and then it's
Because you have guests on the show.
Absolutely. So there, and I'm just going to be transparent here. If you're a big brand, you're not going to be coming on the show without paying. But if you're a small brand, let's say you're a woman entrepreneur, you started up your own business.
You have charcoal toothpaste
Yes.
called My Magic Mud.
Right.
Because we just did this.
Seriously, we did it. This is a great example. So we had a story that came on. A man was wrongly convicted for. Now I'm forgetting.
Doesn't matter.
It was like 29 years. He was wrongly convicted of rape and murder. And the Innocence Project was working with this man for 12 years. And all they needed was to test DNA. Literally for 12 years, they were just begging the courts to test for DNA. And they finally said yes, 12 years later. The DNA matched with a serial rapist that was already in jail and automatically set this guy free. So this guy has nothing, right? I mean, he literally is coming out of jail with nothing. He's in his late 60s now. He's lost a majority of his life. And we needed a giveaway, and I needed like $5,000, right? So I called Stacy and Chelsea, and I was like, do you guys have a brand that could be a good fit for this? I'm like, here's the story, and it's really difficult to find brands when you have anything with incarceration, because they automatically think, oh shit, I don't want to tie my brand to that. It could be bad PR for me. But in this case, it was like, come on, let's rally behind it. So Stacy and Chelsea were like, we have this brand called My Magic Mud. They are all about helping people and uplifting them. I'm going to ask them. It's a stretch, but I'm going to ask them.
We thought they'd say no, honestly.
Literally. And then all of a sudden, they said, we would love to help. And we did it, and we did a nice logo on a big check. And it was great, and the brand benefited from it. So there are opportunities other than paying big fees if you're a smaller company.
Yeah.
So in that case, did they have to pay anything because they were giving?
They paid $5,000 to the guest. So that was a trade.
So we have hit the max of time for some of our panelists, and I'm sure some of our audience members. Thank you guys so much. And guys, I cannot thank you enough for giving your time. Thank you.